LC exiting continues to remain, and that's the reason why you're seeing that stock under pressure. Gland, you've already mentioned. Godrej Industries, Premier Energies, GE Shipping, few of the other ones which are in the positive. You know what else is not looking good is the SJV, and that stock is down nearly over 7%. KEC International also reacting to numbers. Cochin Shipyard is another one, as well as NCC. These are a few of the names, along with the Alembic Pharma. We did speak to the management, is down nearly 4% in trade. Kush, with the way markets have opened up, anything that you still like on the charts?
So just a quick word on the indices. I mean, this is actually in line with what should have been and not what the GIFT Nifty was indicating. So like we said, 23 200 and 23 400. Those are the, that's the gap zone that you have to watch for on the downside to be get filled. For Bank Nifty, that level is 50 to 700. We've come very close to that, so maybe it could get filled this time around. Hence, there is a possibility of a short covering rally, but like I said, right now that is more of a hope rather than an actual technical indication. One space of stocks that is actually doing well is the shipping names. GE Shipping, we saw on Friday, did fabulously well, right, and just gave way towards the end. Today it's starting off, on a strong footing. So is SCI. So maybe the long trades could be in this pack, with the day lows being your stop losses.
Okay, so that's with regards to where shipping companies are concerned. Milan, let me come to you as well. Few of the names, the way markets have opened up, what are charts indicating specifically with counters like Gland Pharma, GE Shipping, Godrej Industries? Anything that you like?
Gland Pharma, I think it is bit now overextended, and it has tested its year-old resistance that was around 2130. So in Gland Pharma, I think it's time that we take some money off the table now.
Okay, a few more reactions, right? And Milan, the financials stand out because you have HDFC Bank that is losing ground at the start today. You have ICICI Bank, but it's really the whole pack, the entire banking pack. And so therefore, how do you play this? Do you wait for lower levels, or are there opportunities that present themselves even at these levels?
No, I think I would wait for lower levels because, see, despite some kind of up move that we may see in form of technical rebound, it is ultimately the relative performance or the relative strength in those stocks also matter when it comes to including them in the portfolio. So even if we are gaining a bit, but if they are not performing in line with the other pockets, one should not be including them into portfolio. So I think that I would wait for lower levels because I feel that the entire financial services space, private banking space, they may likely to relatively underperform the markets for some more time.
Premier Energies though, 3.5%, so really good going for that one. And I use the term really simply because the market is looking slow or dull, that some of the good performers also haven't been rewarded, but Premier is kind of holding out. 1013 currently and counting. Kush Bora on the charts, Premier Energies, and of course anything else that you may have spotted.
So out of the calls that we gave this morning, Marksans Pharma's opened strong and holding strong. Genus Power isn't, by the way. It's just given that opening gains rather quickly. So I would focus on Marksans Pharma, the stock that is doing well, and on the short side, Arida that we discussed. Now, as far as Premier goes, see, the medium-term structure and the recovery on this one is fantastic. The only thing is, for the last 1 year, it's found difficulty to cross this 1000 to 1050 threshold. Even for the last 5 weeks, if you see, that's the resistance band that it's hit every now and then and retraced. So I think there will be some supply pressure because for the last year, like I said, that's been the threshold. Anyone who's got a position around those levels will come in to sell and exit, at cost right now. Once this selling pressure is taken out, I'll not be surprised to see this head towards, 1200, even 1325 kind of level. So this has still got good momentum. The selling is not on the back of very high volumes. So I remain very constructive. If you do have a position, continue to hold on. 950, 965 support zone, that should act as your positional stop loss.
Parag bhai, I do want to ask you about delivery because it stood out to me. Numbers weren't that bad, right? You had improvement in EBITDA margins and their PAT number is flat on account of the higher depreciation charge.
Yeah, depreciation was very high.
So it's just that it's expensive.
Yes.
Right? So would you, from that lens, say you don't want to get into it right now, but it's a good business?
At some point, definitely. I saw the numbers as a structural improvement because of their technology scale and network impact. I saw the numbers were looking good. So I would say that there's a stock which I will keep on radar because Here I'm seeing that actually companies generating cash based on technology, and a lot of this technology plays actually right now don't generate even profit at the EBITDA level. This company is doing a good, I think 220-230 crore EBITDA this quarter for a 34,000 crore market cap. So I think, and it was a good jump as you rightly pointed on YOY. So I would say that this is a company will be on my radar if it, and it has rallied significantly. So let it cool off, then definitely it is worth a...
But quick question here, since its PAT numbers are not really, and maybe that's something that it will have to contend with. What is the metric that you will use to judge valuations?
I'll use cash profit. So as you rightly said, depreciation number is I think 180 crores for this quarter. I not 180 crores and 73 crore PAT if I remember.
72.3.
Yeah. So around 220 crore of cash profit is generated, right? So if they can generate 1,000 crore cash profit, and still continue to grow at this rate, then it will be worth.
Okay. Well, as we speak, I think the one stock that is really charging up today is and trading at the high point of the day is Premier Energies. So bear that in mind. Is IT giving a chance to initiate a trade on the short side at all? I heard Milan Vaishnav say earlier in the day that IT is maybe out of favor. Milan, did I hear you say that? And if so, are you taking a trade on the short side on any of the IT names?
No, Neeraj, in fact, I never mentioned IT on the short side.
I may have missed. I misheard it. So maybe Kushpura did. Okay, but Milan, since I've come to you, do you trade any of the IT names?
IT names, you'll be, I may not be one of the many people who are saying it, but IT is now in a major process of bottoming out, although it is still in the lagging quadrant of the relative rotation graph, but I am seeing a very strong improvement in the relative momentum in this space. So it may not be a buy absolutely now or at this point in time, but it's certainly in the bottoming out process. Maybe over the next 2 to 3 weeks, we may find IT completely bottoming out, and then it may, in more likely a manner, start its phase of relative outperformance. So no short trade on IT now.
Okay. Got it. All right. On that note, gentlemen, thanks so much for taking the time this morning. Pleasure speaking with all three of you. Now let's talk about... Our pleasure entirely. Let's talk about KRBL. It's reported a subdued fourth quarter performance with weakness in exports impacting the overall business, and revenue growth remained modest as lower shipments to Middle East weighed on the company's international operations. We're going to be speaking to the management about the outlook going forward in FY27. But before we do, let's set the context with Mahima. Mahima has looked at the numbers very closely. Mahima, what stood out to you?
Right, so Alex, as you rightly mentioned, Q4 exports, of course, were impacted because of the Middle East crisis, plus gross margins also did see pressure on the back of that because of cost of goods, being higher, and overall lower other income has also impacted, that number. But in terms of segments, India business, on the contrary, has done very well, saw growth of 22%, of which they've seen a good volume growth also coming in, along with realization growth. International business, however, did see a degrowth of 33%, again on the back of Middle East crisis. They are launching India-grade classic masala meal mixes. It's kind of interesting to understand as to how this will pan out. What's the overall TAM for this one, and what is the aim that the company has for this one right now? Middle East, interesting because 71% of volumes in FY26 has come in from Middle East. So I think the next important topic to discuss would be about this as to how FY27 looks like when it comes to the Middle East exposure. So this is the overall view of how Q4 has panned out, and what do we want to know from the management?
Thank you so much for that, Mahima. In terms of the stock as well, let's just pull up what the stock counter is doing in trade as we speak. Down a little over 3.5% in today's session. Ashish Jain, CFO at KRBL, joins in. Ashish, good morning and welcome to the show. This is Hiral on this side. My question to you is, overall, if you have to look at the quarter and what's happening, yes, there are concerns when it comes to the Middle East, and exports become an issue because your international revenues are down 33%. 71% of your volumes come in from the Middle East. What is the impact that you've seen in this quarter, and what are you taking forward in FY27?
Morning, happy to be here. Sure. So if you look at the quarter, our domestic business, like you mentioned, continues to do well. That quarter saw 22% year-on-year revenue growth in that side of the business. On exports, of course, Middle East continues to be the major market for basmati export from India and also for KRBL. So to that extent, the set of events in that part of the world have had an impact. From our point of view, we, when we entered the quarter, we had significant orders which could not be shipped. So therefore, that has impacted on the export side of the business. However, we do see this situation as a temporary situation. And the rationale for that is that basmati continues to be the mainstay as far as rice is concerned for the Middle East. When we speak to our customers, we do understand that they are at low stock levels as compared to the normal levels that they like to maintain. So we are very hopeful that as soon as the whole shipping situation normalizes, we should see a revert back to normal levels of export.
Okay. Ashish, a quick follow-up to that in terms of, exports. Now, the question is there any inventory loss that you're sitting on, number one? Because initially when everything started off, there were containers which were stuck. And number two, whatever surplus that you have which has not been exported, what happens to that? Are you redirecting it to the domestic market? And is there a price differential coming in there?
No, so first, we've not faced any loss because of the situation in the Middle East. The goods that we had in transit were either recalled back to India or were delivered, through alternate means. So we've not faced any inventory losses. As far as a larger inventory is concerned, we maintain an optimal level of inventory and we don't see any stress on the inventory side from the Middle East situation.
Got it. Okay. So, Ashish, hi, morning, Alex here. You've had a decline in the gross margins on account of the cost of goods. Do you expect that input costs pressures will sustain going forward? And how much of this is on account of the conflict and supply chain issues?
Yeah, so, so from our top line perspective, we are two segments, exports as well as domestic. Exports is a segment that gives us higher realization. So in a quarter where export is impacted, it's fairly natural for the margins to be impacted. And that's how I would explain Q4. From a, cost of goods sold perspective, we don't expect any significant increase during the current year. And as soon as the revenue normalizes, we should see margins restoring to the normal levels.
And what is that range guidance? Is it dangerous to put a number out there? I understand that these are all moving scenarios, but what is ideal in your opinion, Ashish?
Yeah, so, we are very hopeful of FY26 levels or levels slightly higher than that in the current year. But I think it's important that the revenue gets restored because the sales have to happen for the margins to come back to normal.
So Ashish, good morning. This is Neeraj here. A good barometer for us to understand this better is that for you to be able to maintain FY26, by when does the disruption need to definitively end, beyond which there could be issues?
See, the way we look at it right now, I think if the situation normalizes maybe in the next month or two, we should be okay in terms of margins. But if it drags longer, then to that extent, it'll be a bit of a challenge to get back to the FY26 margins level. But like I said, I think that's really a timing question. I mean, we are very positive in terms of sustaining margins on a long-term basis.
Certainly. So, Ashish, by the way, sorry, just to reflect this, I know usually we like to talk long-term, but currently the times are such that it's important to distill what could happen in the very short term as well. So just that question followed up with on the revenue front as well. If I missed it, excuse me for that. But do you match FY26 revenues as well despite the conflict? Or even for that, the conflict needs to end in a month or two?
No, so right now we are fairly hopeful that I think if the situation normalizes in the month or two, we should do, FY26 levels or better. That's what we are hoping for right now.
Got it. So, okay, now just one more question from my end, and that is a slightly medium-term question. Let's assume that it does happen, that gets over in a month or two or thereabouts. What happens over the course of the next, let's say, 18 odd months? We talk to many industries trying to now put structural drivers in place which might be beyond their core operations of business or ancillary revenue streams in order to diversify and have a parallel income revenue margin stream as well. Is that a possibility that exists in the business that you are in? Are you guys trying to think around that?
Yes, but not in response to the immediate situation on hand. Diversification, in my view, is a long-term strategic play. But just to talk about that, so if you've tracked us, you've seen that we've been constantly launching new products. So FY26 saw the launch of edible oil. In the last quarter, we've also gone further in terms of masala. So we already had biryani masalas in the play. We've launched more products in the so diversification is it's a continuous objective, not necessarily in response to what's happened over the last 3 months or so.
Okay. So not in response to this, but you're certainly looking out for that. Last question,
Sure.
Would you need any capital for any of the things that you're wanting to do in FY27? Whether it's expansion, whether it's to deal with this issue at hand right now, so on and so forth, or a combination of things. Would you need to raise any equity capital?
No, so I think we have adequate internal accruals to manage foreseeable expansions.
Okay.
Just one quick question I have is in terms of, you did mention to Neeraj and Alex as to what you're looking at in terms of FY27 when you talk about top line, bottom line margins. However, in terms of the way freight rates have been panning out right now, there has been an escalation on that front. Are you also pricing in for these escalations right now, at least in the short term? Let's just talk about the first quarter of FY27 or maybe just the first half of the second quarter of FY27. How are you looking at freight rates, number one? And two, if you have to look at the inventory valuation, how is it actually carrying the paddy inventory lineup against the prevailing market prices?
Yeah, so in case of freight rates, see, the customers are well aware of what's happening in the shipping market. So to that extent, the current freight rates get built into our pricing and in agreement with the customers. As far as the inventory is concerned, like I mentioned, so we don't see an impact of the current rates on our inventory. I think we are very comfortable there in terms of both valuation as well as the volume levels of our inventory.
Got it. All right. Ashish, on that note, here's wishing you all the best in FY27 and hope things are resolved soon. Thanks so much for taking the time. I know. Policy meets demand in the cooling market, and the government has capped compressor imports targeting the mass sub-2-ton segment that drives over 85% of demand. And at the same time, Blue Star is seeing strong traction and healthy order book. Before we get the management in to talk about the implications of that, we've got Mahima joining him with all of the details. Mahima.
Right, so Alex, what has happened is, the Department of Promotion and Industry and Internal Trade has kind of passed an order that curbs imports of compressor. Now, the order particularly says that under the new policy, refrigerator compressor imports are capped at 40% of FY25 volumes. AC compressor imports are capped at 30% of FY25 volumes, and these restrictions mainly apply to units below 2 tons, which account for over 85% of the market. Now, in terms of so this is the first, of course, the recent development that has come in, and this could impact both EMS companies as well as AC companies. But Blue Star overall Q4 was, a stable quarter overall. In terms of where the segments go, electromechanical projects saw strong inquiry momentum from building, data centers, etc. Commercial air conditioning order inflow also gained momentum during the quarter, which was supported by government, industrial as well as retail segments. And lastly, room air conditioner business saw reasonable growth. I think summers being stronger and harsher this time is definitely going to impact the company. So these are, some of the things that we would want to know from the management as to how, of course, firstly, this order passed by DPIIT impacts them, and secondly, in terms of how summer trends are looking like.
Yeah, well, thanks, Mahima, for that. The summer trends remain the biggest, variable, if you will. And Mr. B. Thiagarajan, who calls a spade, MD of Blue Star, joins in right now to talk about that. Mr. Thiagarajan, good morning, Neeraj here. If anybody that I speak to right now says, कि AC के बगैर तो बाहर रहना थोड़ा tough है. So my question is, sir, if it's such a harsh summer, but in an El Nino year wherein the vagaries of monsoon might come in sooner rather than later as well, how predictable is production, dealer inventory, and business after what has been a mixed Q4 for the industry at large? Are you on mute, sir?
Good morning, Neeraj. It is a pleasure interacting with you. Yes, the summer has been active from April 13th. It was a delayed onset of summer season. By and large, it is active. Some places, indeed, intermittent rains are there. But having said that, the secondary, tertiary movement are very good in West. It was very good in South till last week. We had to wait and watch what is going to happen the rest of the May, and the North is picking up. The primary sales is somewhat slower than what was anticipated because the dealers had inventory. I had told you that they bought it in anticipation of energy label change. Subsequently, fearing huge price increase, they stocked themselves up. With the secondary movement very good, the primary sales have begun. I would say not to the expectation of the industry or Blue Star for that matter, and I would still think that it is not very bad, but it is not easy walk at all. The important factor being our ability to pass on the next level of price increase. As you're aware, 13% price hike is supposed to be affected. In fact, some 5 to 8% has happened. The balance 5 will have to happen. And furthermore, cost increase is happening due to exchange rate as well as components which are based on petroleum derivatives like plastics, etc. Therefore, it is not an easy summer. The volumes will happen, the margins will be under pressure, and it will be definitely better than last year, but I don't think we are yet celebrating anything at all.
I'm guessing we shouldn't. The other small question is this hiccup because of compressors and the import curbs, I believe, that are in place. Does it hamper production enough to meet demand, or that is not a current problem?
It is not the issue. See, this is about going forward. But my comment about that is the new policy framework, which is linking imports to the previous year imports. So we all do understand it is very important for India to become self-reliant. It is important for us to reduce imports. It is important for us to enhance or grow our exports or international footprint. Now, compressors is one last part which is left out to be indigenized. I'm certain that by 2028, every compressor that is used in India would have been, at least for room air conditioner segment, will be manufactured in India. There is no doubt about it. Today, it is in the order of around 50% of the requirement is made in India. The key question is between now and 2028, linking it to previous year's import, I am not happy about, because you are incentivizing the people who imported more. That's not the intention of the industry at all. This would have crept in inadvertently, not through intention. I do understand we have to restrict the imports. There is a very clear roadmap with the industry how this indigenization will take place, including Blue Star. Therefore, I am not happy with the policy, but I'm sure the government always consults and takes corrective measures. So that's not an issue. There are enough material that is available. The key issue is how to protect the margins in a very inflationary trend, number one. Number two is with the petroleum price hike already announced, there will be consumer sentiments which will dramatically change. And in the process, the demand will come down. So summer is not the excuse. There is summer happening, but unfortunately, the war, overall macroeconomic environment is not good.
Tyagarajan, good morning. This is Alex here. And you mentioned the need to possibly take further price increases. You've mentioned the increases that have already taken place. I'm trying to understand specifically with inputs like copper, which are so important for your industry, and the fact that the prices are continuing to go higher. If you look forward in FY27, what are the kind of increases that must take place from this point on? If you can quantify that as things stand right now.
Alex, good morning. 5% more minimum is required in order to protect the margins at last year level till now. For the summer season, enough raw material had been bought and at old exchange rates or the old commodity prices. So that 5% increase will take care of it, but that itself is looking difficult. But every month or every week, you have got additional challenges that are coming up in terms of input raw material as well as the exchange rate. Therefore, if I am to fast forward from today's level, additional 3% minimum will be required for a festival season. So what I'm trying to tell you is 5% has to be passed on in May last week and June, plus 3% has to be passed on by the festival season. And then you have got consumers who are going to tighten their spends, and they are not going to be affording this kind of increase once again. That's where I am.
That's a good point. And so therefore, the follow-up to that, Mr. Tyagarajan, is that if sales at the primary level have not been as good as anticipated, and if there could be further price increases and demand destruction there, then despite the high temperatures, you must be worried about top-line growth.
I am worried, but worry will not help. You have to act actually.
Yes.
Some are in your hands, some are not. So Blue Star is clear. That's we will be disappointed if the plan is not working out, and the industry will be disappointed, I suppose, equally. But you have to make use of this opportunity to invest time and energy in improving your operational efficiency, in improving specifically the product design, how you can become more and more competitive. You have to look at alternate materials, for example. I have been talking about this. The copper heat exchanger is not the solution. We have to migrate to aluminium. And we have to keep the options open. And we have to participate in the movement to indigenize as much as possible, because you've seen how the Indian rupee has depreciated. And therefore, helping those who are indigenizing, we have to work with them to ensure their quality standards are improved. And this is the period to do that. So worry is true, but it has to convert into action so that we are growing in a sustainable manner going forward.
Mr. Tyagarajan, good morning. This is Hiral on this side. Absolutely point taken in terms of, that's one part of the business. Now, the other part of your business as well, when you're talking about the data center side of it, industrial again is stagnant, but if you have to look at data centers, do you think a scale up over there is something where you could, probably look at diverting energies there and arrest the kind of downtick that you could see from the majority of the business?
Kiran, good morning. Indeed, we are fortunate that we have businesses that are complementary to room air conditioners business, and it can help us to protect us in situations like this. So data center indeed is one of the segments. The other segment is also the manufacturing. Those orders which are under finalization or we have just received, commercial air conditioning space, electromechanical project space. The other one is the commercial refrigeration part of it, which is not connected with consumer behavior, like ice cream or QSR. These segments can impact that business too. But there are cold chain related businesses that are available. The only thing is this entire thing will not compensate for a 35,000 crore room air conditioner market. The rest of it all addressable, if you look at it, it will amount to some 12,000 crores market, and where we are leaders, but it will not. So you are right. It will protect us to some extent. We are accelerating our efforts to become larger there. Say, for example, data center. I have told you by 2030, I think close to 15% of our revenue will come from data center segment alone. And we are investing there.
Okay, so data centers, 15% revenues by 2030. Thank you, Mr. Tyagarajan, so much for joining in. Always a pleasure to speak to you. I mean, it's always a candid conversation that we have. But very quickly, as Alex was just pointing out, the kind of downtick that you're seeing in terms of markets as well, that's interesting. If you pull up Nifty 50, almost 300 points is the kind of cuts that you're seeing. But the broader markets are bleeding further right now. Let's pull up the mid-cap and the small-cap index, because both of them, mid-cap 150 down nearly 1.6% in trade, and you have the small-cap 250, which is down over 2%. Let's just pull up NSE 500 components to see in terms of individual counters, because there are a couple of companies, even in spite of a decent set of numbers, have been seeing a downtick. But Gland Pharma, Raymond, GE Shipping are the ones on the positive side. Amber Enterprises are 11% downtick that's coming in there. A couple of reasons that we've been looking at in terms of what's happening. The key over here is where the expectation is that the margins are expected to be weak in FY27. Let's listen into the conference call which is ongoing with Amber Enterprises management.
Amber is not producing or manufacturing compressors. We buy compressors from outside. We have a long-term agreement with GMCC, who is supporting us on the compressor, and we also buy from other manufacturers like LG and other compressor manufacturers. So we don't see any shortages on the compressor front, but to just give a brief on quality control order, which was in the news. So there were quality control orders imposed on the compressor industry, and we have seen, because of the production-linked incentive scheme, 5 investments have kicked in India in last 3 years, which is basically LG has put up a plant, Daikin has put up a plant, Mitsubishi has put up a plant, GMCC has increased its capacity, and Haili is also thinking of increasing its capacity. So these are 5 manufacturers who are catering to room AC industry at the moment. Whereas coming to commercial air conditioner division, there are companies like Copeland or Danfoss who are manufacturing compressors for those category of compressors, and you don't need only 2 ton, but you need 3 ton, 4 ton, 7.5 ton, 5 ton, 8 ton, 11 ton, 12 ton capacities of compressors. So right now the manufacturing capacities which have been built in country are below 2 ton. And that's why the quality control order says that, but there is still a shortage in terms of the capacity built up versus the growth in the country for the room AC. And that's the reason why government has allowed to import 30% of last year imported volumes to cater to the shortage. Coming on the 2 ton in front, that they have extended it for 1 year. So the complete compressors can be imported from outside India, because right now we don't see any big capacity coming up for the commercial air conditioner sector. Then come to refrigerator compressor model. I mean, there are some very specific compressors which are not getting manufactured here, just like dispensers and other categories of refrigeration compressors. But on an overall basis, there looks to be adequate capacity. But still, some industry players feel that some particular compressors are of shortage. And hence the QCO order was released to clarify and extend the imports. I believe that the way things are moving, we will see that further capacity increases will also come from new players also, and existing players will also expand. So we don't see any big problem coming out of this place because of compressors.
So just one follow-up here. So can we say at least for this calendar year, or rather FY27, there will still be a shortage of about 40% given industry will grow at 12% in terms of volume?
No, we don't think so, because if you map each and every manufacturer's capacity versus the requirement in the industry, looking at a CAGR of about 13 to 15% growth, I believe it is adequately placed. The capacities are adequate enough. I mean, of course, there is the shortage part has been addressed by the 30% allowance of import of compressors below 2 tons. So that bridges the gap.
Understood. Thank you so much, sir, and all the best.
Thank you.
The next question comes from the line of Samit Sinha with Macquarie. Please go ahead.
Yes, thank you very much. So, two questions. First one on the inventory side. So, from my understanding, you're talking about inventory that's built up, that's basically the components and the parts, not the finished products, because you said the demand was strong. So, on that front, by front-loading this, what sort of benefit do you think you got in terms of, if you could quantify how much savings would that be in current component prices, that would be appreciated. And my second question is just, in terms of, whenever we've spoken, you always mentioned how, and we've seen the progression about going towards higher margin businesses. Does that still stand, or do you think at this point you'd be open to going towards high volume, low margin, but high ROC business? If you can talk about that. Thank you.
So coming on the first question on the inventory built up, yes, we proactively increased our inventory level looking into the supply chain constraints. And we are not getting a very big advantage on the pricing side, but we are getting advantage on the supply side, that we are able to fulfill our contracts on timely basis to each and every customer. As far as our endeavor on going towards the higher business model goes, I'll just give you a brief of what we have done in electronics. We had acquired Ilgin in 2018, when this was a 300 crore company with about 3% of EBITDA. Now this last year we have crossed close to about 8.8% of EBITDA in the electronics division, and we have crossed 3,200 crore of top line. We expect a 40% growth, while getting closer towards a double-digit EBITDA numbers. So our endeavor on going towards the value side of the businesses, because in B2B business, what we are trying to attempt is we are trying to balance the left and right. So left side is the volume side business, which are equally important to bring scale and to have a leverage on the purchase side. On the value side, they are more sticky businesses. There are entry barriers in those businesses, like industrial electronics, industry automation electronics, power electronics, or aerospace and defense going forward, medical electronics. These are more sticky businesses, more entry barriers, and high margin businesses. So we will continue to balance both volume and value play, while attempting to build a very strong, diversified B2B company. On the railway side also, we are doing the same things. We started with small company, 157 crore with about 13% EBITDA. Now EBITDAs are more about 17-18% type, and we are growing in that on more value oriented products. We've gone into metro side, we've gone into doors and gangways, we've deep dived more into the BOM of railways, and now we are developing data center cooling solutions. We've cracked almost 4 customers there, and we've already executed 3 projects, very marquee projects in India on the data center, in-rack and in-row cooling side. So those are all value propositions which we are doing. But as a B2B company, there are 2 pulses which we feel. The 2 pulse is basically scale, and second is efficiency. And the scale team is responsible to balance volume and value play. While the efficiency teams are the operational teams which have to bring in efficiency on the plant side, on the purchasing side, on the R&D side, and so on and so forth.
Got it. Thank you.
Thank you. Our next question comes from Dhruv Jain with Ambit Capital. Please go ahead.
Hi, thanks for the opportunity. My first question is on CapEx.
So, I think last quarter you had said that your capex would be about 800 crores, but, this number has been much higher. So just wanted to get a sense that is it some front-ending of capex that you've done, and how should we look at FY27 capex also?
Yeah, hi Dhruv. This is Sudhir. So, rightly said that there is some front-ending of a capex. If you see our overall capex, out of the overall capex, capitalized capex is only 550 crores. The balance is under CWIP, which is under process and which will get operational in the current financial year. So, the overall capex is around 1,070 crores.
Okay, so and how should we think about FY27 capex then?
So FY27, we are expecting that one is Ascent and one is the other than Ascent. So Ascent will be around 1,200 odd crores, including the capitalized portion out of this 547. And apart from that, there will be around 700 to 800 capex in all the other entities put together.
All right, so several factors that are playing through for Amber Enterprises. The circuit breaking actually at this point, and the stock at the low point of the day down 13.8%, and perhaps one of the biggest laggards in trade today. A few reasons that actually Hiral pointed out, and Hiral, if you want to comment on any of them, please do so. FY27 guidance weaker than anticipated. The management is seeing margin weakness in FY27, and the stock actually went up in the run-up to the earnings, and those valuations might just be a little challenging compared with the peers. And we were talking, Neeraj, also about the space as a whole, and the fact that maybe Syrma is the one exception, along with Dixon, to what has happened and the reactions that we've seen. So
at least this quarter, yeah.
At least this quarter.
And I think maybe for these two companies, with the way the stock has run up since April 2026, the markets were not anticipating these kind of numbers, and I think that's the reason why you're seeing this kind of a reaction come in for both of names. You have Keynes Technologies, which saw a similar move last week, and today you have an Amber Enterprises.
But it's not a pretty picture for the markets as a whole. You have cuts of 1.3% for the benchmark Nifty 50, and the broader market's losing even more ground at this point. Pull those up and you have the mid-cap index is losing quite a bit of ground. We have to slip into a very quick break, but we've got a conversation lined up with Sandeep Tandon of Quant Mutual Fund. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Back with India Market Open right here on NDTV Profit. Sandeep Tandon, our big market voice for the day and for the week. Sandeep Tandon, founder and CIO of Quant Mutual Fund, with us on the show. Sandeep, great having you. Thank you so much for taking the time out and being with us. And it's an important juncture, Sandeep, simply because while April and some part of May have seen a bit of a recovery in the market sentiment-wise, it does seem that the conflict is not going away in a hurry. At least that's what it seems right now, despite the fact that the yields are higher, and that should have been a natural precursor for the conflict to end. How are you piecing together the macros and the sound bites that come in and deciding your investment strategy?
So Neeraj, let's understand the larger picture first.
Sure.
See, I have been saying for a long period of time, we are in structured bull run as far as yields is concerned, inflation and yields. Okay. And this structured bull run can last till end of this decade, So which means maybe you can get cyclical corrections here and there, but broad trend is up globally. Okay. And developed market yields will spike more than the emerging market in the years to come. So that's the background which we are mentally prepared. And second thing, we have said that geopolitical volatility will remain elevated maybe till 2032-33. So you are living in a high volatile geopolitical environment, and you have to live with that. You can't say that, okay, now things will settle down, then I will participate. If it's the period, this is a period of like 10 to 15 years. If you're looking at this period, which started from the end of 2019 and still going on, then you can't say that I'll stop investment, I'll come after that, let the settle down. So I think you have to find opportunity within this sort of chaos. Like we are living with the Ukraine-Russia battle. We are still living with the Israel side for a long period of time. I think even this Iran battle, if you ask me, it has peaked out. Small noise here and there will continue for a longer term perspective, and it helps a lot of Gulf country also to maintain the oil price on the higher side. So they are also party to it, irrespective of whatever claim the narrative can be very different, but reality is that they also want this noise to continue so they can take the benefit of the elevated crude prices. So I think it's the environment which we are living in. You have to take it in your stride and then design your strategy rather than getting too much worked out at what is happening.
Sandeep, could we therefore have a scenario wherein, structurally higher yields is not necessarily great news because interest rates may be higher, but could we therefore have a scenario wherein, let's say in a market like India, we might have the benchmark index, which is the Nifty or the Sensex, stay very, very range bound, maybe a downward bias, maybe a slight upward bias, but essentially range bound, and people have to configure their portfolios to what works. So the portfolios may work independent of what the benchmark index might do, which might remain flat. Could that happen for a longer period of time?
Very high likelihood it can happen. And in fact, what I said in our April 1st week letter, that worst is behind us, but best is yet to come. Okay. So which means the worst is over. And when I say worst, is largely we are referring for small cap, nano cap, mid cap, where you have seen some of the stocks and some of the sectors are completely butchered. So those are the areas which you can look into it. But what is very important, Neeraj, to understand that it's not the US for the first time is hitting the 5% mark, If you go back in the history, 4-5% yield was very common. For whatever reason, it went into negative territory of such a low vol, or such a low yields structure for a long period of time. And hence we have started making them as a benchmark, which was not the case. So if you look at 100 years average, we are not far away from that number. So, and hence I'm not too much disturbed about it because we are very clear that this is the phase we have to live with, and you look for opportunity, milk for opportunity, and we talk about dynamic style of money management because you can't take a call. This is my 5 years call. This is my 10 years call. This I will hold on. That easy phase of bull run is over globally, including US also.
Sandeep, very interesting. And good morning. This is Alex here. If I look at asset management strategies, and broadly, you can classify fund managers who do one of two things. They protect the downside and they allocate portfolio accordingly, and so they can't capture the most of the upside. On the other end, you have the possibility of a more aggressive strategy, and you generate a significant amount of alpha. Do you think that, based on what you're seeing right now, the downside is protected, and so the second type of fund manager can really amp it up in the months to come, or do you think that it's still time for caution?
Alex, it's an interesting question, because if you really look at world is now in last maybe a decade or so is moved toward passive style. But if you ask me, this decade belongs to active money manager, and all passive or most of the people who manage in a quasi passive style, they will have 70-80% of the benchmark, and 10-20% or 25% they will try to see overweight or underweight and try to generate outperformance from average 20%, and hence you are not far away from the indices, but you will never able to generate massive alpha. Okay. Now I don't call it we also practice a similar style, but we don't call ourselves aggressive. We always say we are in the business of risk management, returns are byproduct. So if you have to manage risk and you have to generate superior risk adjusted return, our mandate is not to beat the just benchmark, which is the mindset of a lot of people. We have to just beat the benchmark. If I'm able to beat the benchmark, then I deserve the fees or appreciation. Okay, that's not the way I define it. If market is falling 10% and we are also falling 8%, then we should not be celebrating about it. My only point which I'm trying to make, obviously, beating benchmark is also not going to be easy, and it's not the case in the past also, unless you are in a decisive bull run, what I call it EC phase of bull run. That's very easy to do that. But given the context which we are talking about, you have to align your portfolio based on the environment which is prevailing. Let's say example, today we are in a challenging phase from the manufacturing sector point of view. We don't know which raw material will be impacted. We don't know where you are stuck. You are unable to distribute, the logistic challenges. Okay. So their uncertainty, March number was still decent because the impact was only felt much later. But the current quarter can be horribly bad for some of these companies. Now, we all understand this is a challenge. Now, there is no compulsion for me to hold some of these names. I can't cut down completely. So if you look at our portfolio, we are skewed towards energy big time. We are skewed towards telecom in a big way. We are skewed towards asset management or wealth management company in a big way. We are skewed toward NBFC in a big way. So what is important, we have diluted the manufacturing sector. Okay. We are playing a data centers themes through multiple routes. So it's up to us how you look at that opportunity, and once, let's say, things settle down and you have to shift from these so-called defensive name in the current environment. A lot of people link with IT pharma as a defensive name. No, they were not. So what is in the current context, these names are more defensive, and then maybe appropriate time when things settle down and you see earnings can come back in a big way, or they have ability to bounce back, maybe you can switch. So I think the way we look at market is all about actively managing. Okay. Now, actively money management is all about you will generate extraordinary alpha. Sometimes you have to go through some amount of pain because you are early in a call, or you have taken a call which may or may not materialize on immediate basis. But that's our job, to identify some of these opportunity and live with that.
And that was showcased, I think, Sandeep, in the month of April, when at the benchmark level you had significant gains, but some of your funds actually did particularly well. But I do want to ask, in the sectors that you mentioned, the fact is that while Q4 numbers for some of these sectors and companies looks okay, a lot of them are going to go through significant pain in Q1, possibly in Q2. How much of that is in the price, Sandeep? Do you have to brace for impact in terms of the market realizing that things are worse than perhaps it's seeing right now?
See, only thing I can say, nobody can gauge, even promoter can't figure out what is happening because things are relatively fluid. Okay. So instead of trying to see what is priced in, what is not priced in, I don't want to get into that debate. I said then things will settle down. We will do a switching strategy rather than getting a debate. Let me average it out. Let me rebuild my position. Now, this thought process, we have seen how much damage happened on the IT side. People talk about certain level of dividend yields happening. This is the minimum P which we have seen historically. All those theses has not worked when something got changed in industry and the stocks got butchered. Okay. So what is very important to understand, when we know these sort of headwinds are there, why to speculate and say this could be the bottom or this could be opportunity when we know there is uncertainty? You see, market never rewards uncertainty. Market always rewards clarity. So if there is a uncertainty, or if I have to say the picture is slightly hazy, then we will like to play safe rather than try to become aggressive at this point in time and taking a contra call, which may not help us actually.
So, yeah, Sandeep, so that's an interesting point that you make. However, one aspect I want to consider, I mean, good morning, Hiral here, is you have majority of your global brokerages who've gone ahead and cut their, either downgraded their outlook, cut their target prices as well in terms of Nifty 50 for 2026, if you have to talk about calendar year. I mean, HSBC, you've seen a double downgrade. Goldman Sachs, they've slashed the GDP outlook. JP Morgan, Citi, Nomura, you name any of them. With that stance, there comes a point where there is fear amongst retail investors that if, brokerage houses are going and slashing their target prices, if there is a downgrade coming in there, what happens? Does that mean that probably you should read between the lines and say, okay, the bottom probably has been made, and from here on, you're going to see some hopes of, green?
So let me just clarify, when you talk about a negative sentiment among retail, it is not. There's no negative sentiment from a retail investor. As far as SIP data is also endorsing the same, there's no negativity from the retail side. That's the first myth, let me clarify. Actual negativity is there in the most of the smartest people, okay? Because when you read too much about global market, when you read too much or you're too connected with the global market, we are all human beings, okay? And we typically give up at the bottom of the cycle. That's the way as a behavior house, we try to identify this inflection point. I distinctly remember when we downgraded India in July 2024, there were till December 2024, we have seen massive upgrades coming, multiple organizations, global firms have upgraded. Now, we are not trying to make fun of them. I'm just trying to only highlight that ultimately, who are the people who are writing? They don't have a God status. They ultimately all are human beings, and they also do get capitulated. Okay. And that's the reason I'm saying when you are more connected with the global market, and for them, it's a relative opportunity call. That's very important to understand when any foreign firm looks at the market. They have option to invest in Korea, Taiwan, China, or any other market. So their call is not about absolute return. They're also about relative opportunity. So when they are finding it better relative opportunity because of our own challenges of the macro front, the rupee front, crude front, they will look at. So we have to keep that aspect also in mind. But when it comes to bottoming cycle, this sort of phenomenon of downgrade typically happen either exactly at the bottom or when a bottom is about to make or form. That's a time when people actually give up. So we are in that capitulative phase where not only positions have been sold up, even the bullish thought process which people were holding on for a long period of time has been capitulated now. So these are signs of bottom. That's the way we define it. And that's the reason I said worst is behind us, best is yet to come. So I will go with that thesis and I will look for opportunity in the market rather than cribbing about what is happening globally. When the time was there, people were overconfident about it. When time has come to rebuild your exposure towards India, and if yields are indicating discomfort in the global equity, I think it's a great news for India. If US market correct or Korea, Taiwan correct sharply, I think we will be the biggest beneficiary because on relative basis, money shifted out of India to these countries. And if whatever reason they correct, we also have similar view of deep correction in the US market semiconductor space. I think that's a great opportunity. So you have to look at not only an absolute, it's also about a relative thing. When somebody is going to have affected who was enjoying the party till date, then you will get the flow. See, ultimately is all when we look at our money flow analytics, how money shift from one asset class to other, one region to other, or one stock to other. That's the way our money flow indicators are indicating. So I'm very happy to see global markets correct sharply.
Okay, so global market should correct sharply. If that happens, you're happy. But Sandeep, my point being over here is, I mean, yes, probably the bottom has been made over here. But what happens from the commentary that we've been listening from the corporates where there is uncertainty in the first half of FY27 because of supply chain concerns? Let's not talk about a sentimental, impact that we could see from global markets. We're talking about actual impact on ground for a lot of companies which are dependent on imports. If that has to be taken into consideration, which are the segments of businesses or sectors that you would say you would avoid for a short period of time right now to ascertain what the kind of pain that could come in, and which are the segments where you would find opportunities?
This I said in the beginning of the call, when we talk about that we are underweight on the manufacturing sector in general, okay? Whether it's auto, whether it's chemicals, or whether it's any other industry, because clearly from this uncertainty, okay? Now, for us also it's very difficult to visualize how exactly it will play out, but it is very clear these headwinds are there, and hence I will like to avoid these names, and hence service industries should do well, telecom sector should do well, power or energy stocks should do well, renewable within that part should do extremely well. So I think this is the data center is a new theme which is building up. Defense should be opportunity, okay? They also can be impacted because of raw material challenges. And we have seen some amount of euphoria getting built in some of the metals name for last 1.5 years. So there I like to be slightly cautious. Okay, so it's a call which we have to take on. See, you cannot avoid manufacturing completely and say, I don't have any manufacturing stock in my portfolio, which is impossible to have. You can't have 100% portfolio towards services sector. But if we have challenging on this thing, then I will say, let's say pharma manufacturing side, I will go for export centric, I will go for generic companies. So we have to keep on identifying every crisis brings opportunity. That's the advantage, you know. Either you look at as a opportunity or you get capitulated along with that. So the call which we have taken, we think there's enough opportunity in the market. Yes, it's a challenging environment, and more from a psychological perspective also, there's a tremendous pressure on every money manager and investor right now. But if you believe India thesis, which we believe is a few decades opportunity in India, and obviously we have done extremely well in the past. So we went for 2 years of correction and consolidation. I think we are just coming out of that. So I think I will look as a opportunity to buy rather than getting capitulated now.
Sandeep, just one on that energy transition, because that seems to be the real awakening out of this conflict. Now, some of the stocks were maybe overvalued as well, but the capex plans are real, capacities coming on stream are real, and there seems to be estimates of fairly strong cash flows over the course of the next 24 to 36 months. Are you constructive this cohort from a fresh investment perspective, or would you want the valuations to settle down a little bit?
See, I always talks about on a relative basis, they still looks attractive. May not be on absolute basis. So let's say when it comes to our portfolio, we were very early to identify power sector. We are holding it for last many quarters. And we have only increased our exposure, not cut down that. So we are constructive. Now, somebody comes and participate very aggressively, then obviously you run a risk, okay, that you are participating. I'm not saying the peak of the cycle, but you are participating at higher levels, and hence your return of May could be lower. But if I look at what is happening in the world, I think this is the area where I will like to park my money. My safety is fairly good, okay. Dependency on outside the world is limited. Yes, you might have some challenges here and there also on the coal related issues or some logistic related costs moving up, but we have to live with that because they are in the position to do it because growth is in their favor. And this is very constructive from the sentiments point of view, and valuations are not at all expensive. Okay, on relative basis, they have moved up, but as compared to whatever is happening in new age company or so-called growth names, they are putting at absurd valuation. So where the valuation has moved up in the power sector, I think it's a good beginning to have a sizable allocation in your portfolio towards power sector. But we all always say is look at for next 3 to 5 year perspective. Don't add for 3 months perspective and say, oh, you are talking positive, but I bought and I'm stuck now, you know.
That is a fair point, actually. It's good news, though, Sandeep, that some of our viewers remind us to talk about the long term and not just the winners over the 1 month or 3 month time frame. So I'm looking at that as a very positive development. Thanks so much for taking the time today. Pleasure having you.
Thanks for calling us.
All right, now let's focus on a stock that is doing particularly well, and that's Gland Pharma. A robust performance on both domestic and global front has aided the company to deliver a pretty healthy Q4. Varsha joining in to talk about what's working for the company. Varsha?
Well, strong US traction, which was led by new launches and GPO contract wing. There was a higher contribution from CDMO projects as well. Favorable product mix supported margin expansion for the company, and the operating leverage, of course, worked in favor of the company. Now, onto the geography-wise performance, US was up 24% year-on-year. Revenue, Europe-based business was up 15%, and India was up almost 28%. Talking about the Sensex business, that's the turnaround or the key highlight when it comes to Gland Pharma. Just do note that Sensex was acquired by Gland Pharma in 2024, which was up 4% year-on-year in Q4, showing gradual recovery. Improvement was driven by better utilization, new product ramp-up, and of course FY27 revenue growth overall is expected at around 12 to 13%, which has been guided by the management, which will be driven by launches and of course the CDMO ramp-up. Growth is expected to accelerate to 15% in FY28 and 20% in FY29. And margins are expected to sustain at around 25 to 26% at consolidated level, and the base business margin was guided at 33 to 35%. So US business, Sensex, and good outlook are some of the key reasons why we are seeing that buzz in the stock.
Hey, all right. Thanks so much, Varsha, for that. The stock is at the high point of the day, but well, it might just be that stock. The rest of the market losing ground, unfortunately, and we're down about 270 points or thereabouts for the benchmark Nifty 50, 260 points. Well, from Neeraj, from Hiral, and from myself and the team that put the show together, thanks so much for tuning in. And stay tuned. If you've got questions on individual stocks, then keep them ready. Up next is Ask Profit. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get.
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani and with me is Soumit Sarkar. And before we start taking all your stock-related questions, which by the way you can go ahead and ask us on the numbers that are flashing on your screen up there. You can either WhatsApp us or call us. But before we start doing that, let's take a quick look as to how the markets are doing. The sentiment, of course, is weak right now. The Nifty 50 right now is down by about 1%. Below the 23,400 levels is what we're seeing with regards to where the Nifty 50 goes. Let's try to pull up the heat map as well to see as to what counters are putting that kind of pressure. You have Power Grid losing the most ground, down 4%, followed by Tata Steel, down 3.7%. Eternal Trend, Shriram Finance, SBI, Titan are some of the other names which are down in that range of 2% each. On the flip side, Coal India is doing fairly well. Just one counter which is holding above that 1% mark is Coal India, up 1%. Infosys doing slightly better today, up by about 0.8 odd percent, and ITC and Tech Mahindra up by about 0.5 and 0.6 odd percent. Let's quickly pull up the Bank Nifty. The Bank Nifty is hovering around the 52,800 levels, down by about 1.6%. The pressure here is more as compared to where the benchmark Nifty 50 goes. Let's try to pull up the sectoral heat map as well to see as to what sectors are doing at this hour. Only the Nifty IT slightly in the green is what we're seeing, but media losing the most ground, almost down 3%, followed by defense, which is seen a couple of profit booking sessions down 2.8%. PSU Bank, Realty also down in that range of 2.5 odd percent, and Nifty Auto as well as Metals also seeing a downtick of around 2% each. So that's with regards to where the sectors go. The broader end of spectrum, the mid cap 150 is down by about 1.8%. The small cap 250 is almost down 2.6% as we speak. So more pressure in the broader markets as compared to where the benchmarks go. The BSE 500 quickly, if we can try to pull that up, because most of that action is either news specific or earnings specific there. There you go. You have Amber Enterprises now down almost 16% on the back of weak FY27 guidance and commentary coming in the management with regards to where margins go. KC International also down 8.5%. Symphony again on the back of numbers. Alembic Pharma also on the back of numbers. VIP yet again a bad quarter for them. But on the flip side, you have counters like Gland Pharma, GE Shipping, Raymond, etc. doing fairly well. So that's with regards to where the markets go. But let's quickly start taking all your stock-related questions, and to answer them, we're joined by Saurabh Jain, who's the Equity Head Research, SNC Global Securities, and Gaurav Sharma, Associate VP Head of Research at Globe Capital, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. The first question that we have is on Canara Bank. Lalita from Bengaluru is holding around 2,000 shares at the levels of 139. Wants to know if she can book loss, hold or average at the current levels. Gaurav, I'll come to you on this one. Your view on Canara Bank?
Some more, first of all, yes, very, very good morning to you, Mahima, and to all the viewers of NDTV Profit. Some more profit taking is pretty much likely in Canara Bank alongside with other PSUs. I'll advise our viewer to hold on to their position, and they can consider averaging it slightly closer to 115 odd levels.
Query is coming in from Lokesh from Bangalore. He has bought few shares of Indraprastha Medical Care at a price of 408. He has around 600 shares. Should he continue to hold this or book loss and move out? Saurabh, any view on Indraprastha Medical?
Hi, good morning. See, we like the hospital space, but Indraprastha Medical is a smaller player in the domain. We like Apollo Hospital, so my recommendation would be better to switch money from the Indraprastha to Apollo.
That's view coming in on the hospital space. The next one that we have is on Gland Pharma. Now this is from Yogesh. Says that he's currently holding this counter at the levels of 890 and wants to know if he can continue to hold this from a short-term perspective or not. Currently the stock is trading at 690. Gland Pharma is what we're talking about here, Gaurav. Any view on the charts right now? Down 7% today and trading at this day's low point.
More pain is expected here. 625 is the level that I'm eyeing at in the near term. So I think if that suits the investor, then he can hold on to the position. Otherwise, it is better to get rid of it. More decline likely here.
Okay. The next query is coming in from Vimala Nanda from Mysore. 30 shares of Tata Power. She wants to know whether should she continue to hold this counter or exit. Saurabh, any view?
We like the utility space and we expect that the demand for power this year would be higher. And also the lower rainfall expectation will actually boost the consumption of the energy. And with now more EVs coming to the picture and people migrating to the electric stoves and all would actually boost demand for energy. We like this space. We like the Tata Power. And apart from this, if you want to invest in this space, we also do like NTPC and JSW Energy.
Okay, so that's the view coming in on Tata Power as well as the entire power space. By the way, just a gentle reminder for viewers who are watching us, you can also call us on the number that's flashing on your screen up there. Call us live and ask your queries live as well to our guests. The next question that we have is from Chanchal, who is writing us from Mumbai, asking about Kalyan Jewellers. She wants an outlook for this particular counter from a 6 months perspective. Gaurav, your view on the charts for Kalyan Jewellers?
Jewelry stocks were adversely impacted after the recent news piece by the government. We see more pain coming in. Kalyan Jeweller has not been able to perform well in the past. I suggest from a long-term perspective, Titan from the large cap space and Thangamalai from the mid cap space can be considered.
The next query is coming in from CM Naidu from Hyderabad. He's holding 50 shares of Zensar Tech, bought at a price of 505. Should he continue to hold this counter, average or exit? He's a long-term investor. Saurabh, your view on Zensar Tech?
Our view remains negative on the IT stocks, specifically on the mid-cap and small-cap themes, because the outlook is quite blurred today. We expect the lower revenue growth and compression in the margins going forward. And what we are seeing is that, the valuations are also getting compressed. If you see in the last 1 year or 2 years, especially after the recent quarterly earnings, there has been a quite amount of selling in all the IT stocks. We recommend to get out of this space and maybe look for the shelter in the capital goods or in the power space.
Okay, all right. So that's the view on Zensar Tech. But the next one that we have is from Vinod, who's writing us from Surat. He wants to know whether to buy, sell, or continue to hold SBI. He's not mentioned the quantity as well as the price, but he says that he's looking at this from a short-term perspective. So Gaurav, I'll stick with you for this one. SBI, what is the outlook like on the charts?
From a shorter term perspective, I see the stock heading towards 900, 880 odd levels. But we do have a longer term view on SBI as we have a buy rating on the stock.
So if anything, the holding period is beyond 6 months, I think a buy on dips is suggested here.
Okay, all right. The next one that we have is from Ms. Javeri, who's writing us from Bengaluru, asking about CAMS. Her buying price is 734, 50 is the quantity. Wants to know if she can go ahead and book profits in this one or continue to hold. I believe she's a long-term investor. So Saurabh, your view on CAMS?
See, even after the correction in the last few quarters, the valuations are still expensive in contrast to the earning growth that company is witnessing. It is trading around 15 times to its book value and around 40-45 times to trailing earnings. I expect further moderation in the multiples and in the earnings going forward. So my take is better to take money from the table.
Okay. The next is a caller query coming in from Mumbai. Tarun, you can go ahead and ask your query.
Yeah, I have Anand shares in stockbrokers at the rate of 550, 500 shares.
And you can hold this for long term?
Yeah.
Saurabh, your view on Anand Rathi shares in stockbroker?
The continuous moderation activity in the what happening in the capital market space in the last 1.5 years, people haven't made money, and in the F&O space the regulator has put up quite a lot of restrictions, which has given drop in the volumes. So we expect the earnings would the growth that was there will taper off, and maybe in some cases we may see nil growth or negative growth. So take is a bit negative on the broker side. My take is better to get out.
Okay, all right. Saurabh, the next question that we have is on BSE as well as NSDL. Our viewer bought BSE 1 year ago. Says that now he's sitting on some profits and wants to know if this is the time to maybe sell or continue to hold from a long-term perspective. And the second one is NSDL, which he's been holding since IPO. Should he wait, being a patient investor? What's your view on both of these counters?
I think in both of the cases, I find valuations quite expensive. You will find nowhere stock exchanges trade at such high valuations, especially when there is a moderation in the capital market activity. My take is better to take money off the table because valuations are scorchingly high.
The next query is coming in on Amber Enterprises. The stock is down nearly 16%. Chandrasekhar from Chennai has around 45 shares, bought at an average price of 7,550. Should he average at today's fall, or should he wait for further correction or exit? Saurabh, any view on Amber Enterprises?
See, these companies are working on a very thin margins, and last year we saw demand-related issues also. And with the rise in the material costs, these companies may expect further erosion in their margins, leading to lower profitability, and that is what the market is showing concern of. I am expecting that the valuations are still high, and which may correct further going forward. So my take is better to book small loss and exit from here.
Okay. Gaurav, any view on the charts for Amber Enterprises? Because just very recently it did hit its 52-week high, and today trading around 16% lower.
From a chartist perspective, some more decline is possible. Charts are overall fine, not too great, because again the stock has entered the consolidation zone that lasted for nearly 2 years now, and the breakout has failed. So I completely agree with Saurabh. Maintaining a cautious view and taking your money out is a prudent approach here.
That's the view coming on Amber Enterprises. The next one is on JBM Auto. Praneeth says that he wants to go ahead and enter into this counter at the current price, and his view is for the next 6 months. What are the charts indicating here, Gaurav?
JBM Auto, relatively a good stock. We are bullish on overall automotive and ancillary pack. One should hold on to your position, utilize dips to add more. 550 is a very good, attractive level.
Okay, the next query is from Manvi from Bangalore. It's on Anthem Bioscience. He has 200 shares, bought at a price of 721. Wants to know whether should he continue to hold this counter for the next 1 year. Saurabh, any view on Anthem Bioscience?
I guess it is a new listing. Would not be able to give you.
Okay, all right. All right, the next one that we have is on Godrej Industries. Srikanth from Bengaluru wants to know if this is the right time to enter the counter or not. Saurabh, I understand that this is a holding company and results were good because, Godrej Properties did well. There was Godrej Consumer, which also did, give out a decent performance. Plus, the commentary that has recently come in from Piroj Shah has been a very positive one. Do you think that it makes sense from a long-term perspective to make an entry into this counter right now, considering that it's run up quite a bit now?
My view is little different. I am expecting real estate activity to moderate further going forward. If you look, there was a high ticket value sales growth which was happening in the past few quarters, but now that is also tapering off. In the consumption business, I think some kind of a volume growth can come to hit these consumer companies because of the lower rain forecast and the increase in the material cost. So since it is a holding company and has already seen some kind of a bounce from the lows, my take is better take money off the table.
Right. The next is a caller query coming in from Hyderabad. Anjali, you can go ahead and ask your query.
Hi, sir. Very good morning to all of you, and thanks for taking my query. I wanted to buy Tata Steel, sir. So after Q4 results, is a right decision to buy? What is the price to enter? What is the short-term and long-term view? I want to know that, sir.
I'll get you the short-term view on Tata Steel at this moment. Gaurav, on charts.
Tata Steel is looking good. Any further decline closer to 200 is a very attractive level to buy. 200 period exponential moving average is placed around that level. One can take a stop closer to 185, hold your position, and I think in a 2 to 3 months kind of a perspective, we can expect the stock testing 235 to 40 odd levels.
Okay, all right. So that's the view coming on Tata Steel, but it's time to take a look at the F&O space, and we have Sharad joining by to give us some perspective as to what the cues are indicating. But Sharad, it's not a very positive one today.
Exactly, but that's right, Mahima. Very weak technical setup coming in for the indices. We had earlier mentioned in the morning itself that after the gap down opening, there won't be much to sustain, and that's what's happening right now. Power Grid, Tata Steel, SBI, Maruti, all of them falling in trade more than 2%. Only Tech Mahindra, Bharti Airtel, Infosys, and a little bit of ITC in the green. But overall, the sentiment in the market is towards the negative side. And of course, we are seeing some good build-up also happening on the indices, especially on the shorts front. The VIX also going up. And stock specific, let's see what's happening here. Long build up, I see it's not that convincing. Uno Minda and Coforge, both of them up 1%. Not major trade to be made here. Short build up, of course, Amber Enterprises, that's down 16%. Of course, weak set of earnings coming in. And ICICI Pru, we had mentioned earlier that stock had fallen almost 7.5%. Slight increase coming in. A long unwinding for delivery, another weak set of numbers from this segment as well. A lot of adjustments were there. If you look at the numbers in fine print, and Keynes Tech, that's also down 3%. Short covering happening for Oracle Financial Services and Infosys. A little bit of respite coming because already there was a massive sell-off in the IT space as well. But interestingly, whenever this happens, Oracle sees a good buying. So that's a trend we have picked up. And these are the stocks which should be on radar in the F&O space.
Thank you so much for getting us those details. I think we've got our next caller waiting back. Karthik is calling us from Bengaluru. Karthik, a very good morning to you. Go ahead, ask your question.
Yeah, very good morning. So actually, I have a query on one stock. I bought an Avanti feed stock at the price of 1,500. So I'm holding it 300 shares. So currently I'm in loss. Should I hold it or should I further? My perspective, I planning to hold 6 months to 1 year.
6 months to 1 year. Okay, Karthik.
Yeah.
Got your question. In fact, we have one more question on Avanti Feeds, which is from our reviewer Kondea, who's writing us, and his buying price is also around that 1479 mark. And he also wants to know whether he can continue to hold this or what is the future perspective of the stock. Gaurav, I'll come to you on this one with regards to where charts go for Avanti Feeds, because this is one of that counter that gets impacted with global news, right? Tariff, Middle East crisis, etc. So your overall view on Avanti Feeds right now with regards to where charts go?
Certainly, it is an export-oriented player. Gulf and United States, both are their clients. directly impacted with all the disturbance that has played out. But the charts and the price is reflecting a complete different story. The price has not corrected at all. It is into a sideways mode, a signaling strength. Therefore, I'll advise the viewer to hold on to their position. I think even in an eventuality, I'm not expecting more than a 10% cut on this stock. So hold with the stop at 1020.
The next query is coming in from Charan from Bangalore. He wants to know the long-term view on Morpin Labs. He can and what price should he buy at the current price, because he can hold this counter for the next 5 years. Saurabh, any view on Morpin Labs?
It is a smaller pharmaceutical company. The stock has done nothing in the last 1.5 years, I guess. If you correctly remember the numbers were not that great, but at the same times they were not equally bad also. So I think I'm not aware if the March quarter numbers are out, but on the valuation front, it is on the lower end of the trajectory. So my sense is better to wait for the quarterly earnings and management guidance and then take a call.
Okay, all right. So that's the view coming on Morpin Labs. I think we've got a caller waiting by Datta is calling us from Bengaluru. Datta, very good morning to you. What's your query about?
Hi, very good morning. Thank you for having me. I have query regarding BEL and Canara Bank. So I have purchased BEL for 430 and Canara Bank for 25,000 each. I'm looking for a long-term perspective. Is it good to hold, or can I start looking for SIP on these two stocks?
Okay, so Datta, generally we take only one query per viewer, but this time I'll allow you to ask two questions. Saurabh, BEL and Canara Bank are the two counters that Datta wants to know about from a long-term perspective. Your view?
See, both counters are from the different domains. If you talk about the Bharat Electronics, the quarterly numbers were good enough, and if compared to their peers, there was no margin compression compared to the other stocks in the defense domain. So the stock is much more stable, and from the long-term perspective, looking good. If you talk about the Canara Bank, it is also one of the good bank in the PSU space. Yes, there has been a pressure on the PSU banking space, especially because what is happening in the global arena, and especially the 30-year yield rising to 5%, putting more pressure on the PSUs because FPI generally hold more banking stocks. So because he is asking for the long term, I think both stocks looks good.
The next query is coming in from Satish Sharma, and he wants to know whether should he continue to hold Sheela Foam. He has bought around 100 shares at a price of 630, currently sitting on a loss of around 10% odd. Gaurav, any view on Sheela Foam?
Just give me a second. Not someone on our radar as such, but little sideways, good amount of resistance around 650 odd levels. So I think a further slip towards 540 would get into a trouble time. So hold with a stop at 540. I'm not expecting too much from the stock till it is trading below 650 odd levels. That's a breakout point. If that level is taken out, then only this stock has potential to rise up towards 700, 720 odd zone.
Okay, all right. So that's the view coming in on Sheela Foam. The next one that we have is on Vedanta. Sonali from Delhi wants to know if this is a good time to buy from long-term perspective. Saurabh, your view on Vedanta?
I think we are quite positive on the metal stocks and positive on the Vedanta after the demerger also. So from the long-term perspective, we expect that the metal space would continue to shine, and so Vedanta should shine. My take is positive.
Okay, the next query is coming in from Sagar, and it's on Gland Pharma. He's holding 2,100 shares at a price of 992 to 993. He's saying that the results were quite strong. Should he continue to hold Gland Pharma for long term, Saurabh?
Yes, the results were fantastic. The stock did nothing in the last few quarters, but after this good results showing good growth in the US, Europe, and in fact in India also, we expect the company to do well. Our take on the pharmaceutical and the ancillary space is positive. My take is better to hold Gland.
Okay, all right. The next one that we have is on Marksans Pharma. A lot of pharma-related queries we're getting. Shankar from Tamil Nadu wants to know if he can buy Marks and Pharma at the current level and what should be the target price that he should be watching out for on the charts. Gaurav, your view on Marks and Pharma?
One of the better placed, better positions, pharma players. It has rallied from 160 to close to 210 now. Still looking good. I'll advise the viewer to hold on to the position, keeping a stop at 190. Levels close to 240 are expected in the immediate near term.
All right, so that's the view coming on Marks and Pharma as well as the entire space. But Gaurav and Saurabh, it's time for our rapid fire round. Try to keep your answers as short as possible. The first one is on KSA International. Can I purchase KSA International at the current rate of 500 rupees is what Ishwar wants to know. Gaurav, on the charts?
Better to avoid.
Next query is for you, Gaurav. It's on IIFL Finance. Vedant wants to know whether should he continue to hold IIFL Finance. He has bought few shares at a price of 506.
Hold with a stop at 440.
Okay, Apollo Hospitals 150 shares bought at the levels of 8,000. Can I continue to hold from a long-term perspective, Saurabh?
Keep on holding.
The next query is for you, Gaurav. It's on SBI. Jashimuddin from Assam has around 185 shares bought at a price of 979. Should he sell or hold?
From a short-term perspective, sell. Otherwise, one can hold with a stop at 880.
Okay, Sharda Cropchem, our viewer has bought 15 shares at the levels of 950. Can I accumulate more of this? Sort of from a long-term perspective, any view?
Hold, but do not add more.
Saurabh, the next query is for you. It's on Aether Industries. Jay from Prayagraj has around 5 shares of Aether Industries bought at a price of 5,982. He wants to know whether should he continue to hold this counter. I don't think the price is right at what he has mentioned, but should he hold Aether Industries?
My take is a hold.
Okay, Yes Bank bought at the levels of 21.5 thousand shares is what our viewer is holding. Wants to know if he can continue to hold this for the next 5 years. Saurabh?
Better switch to Maharashtra Bank.
The next query is for you, Saurabh. It's on Repsol Energy. Chris from Bangalore has around 70 shares bought at a price of 120. He wants to know the long-term view on this counter. Should he hold?
Hold.
Okay, Akums Drugs bought 100 shares and wants a 6 months view. Balaji from Chennai wants to know on the chart what's the 6 months view indicating. Gaurav?
Hold. Take a stop at 450. Hold your position. Breakout likely above 560.
The next query is for you, Gaurav. It's on Emphasis. Harsha from Vijayawada has around 45 shares of Emphasis bought at a price of 2,700. Should he hold or sell from short-term perspective?
Sell.
All Cargo Logistics, our viewer wants to know whether to hold or sell at the current levels. Gaurav, any view?
Reduce your position.
The next query is for you, Saurabh. It's on Bata India. Venkat from Chennai is holding around 100 shares of Bata India bought at a price of 800. Should he sell, hold or accumulate?
Hold till Diwali.
Okay, Venkat Ramani wants to know about Geo Financial. She's bought 600 shares at the levels of 296 from a 6 months perspective. Gaurav, what are the charts indicating?
Stock is looking big. A breakdown below 220 will take it towards 200.
The next query is for you, Gaurav. It's on Muthoot Finance. Nagesh is holding few shares. He wants to know the short-term view. Should he hold or exit?
Hold.
Okay, Praj Industries, from a long-term view, does it make sense to enter right now? Manoj from Bengaluru wants to know. Saurabh?
Yes, you can.
Next query is for you, Gaurav. It's on Garden Reach. Mahesh from Maharashtra has 292 shares bought at a price of 3,074. Is there an upside here?
Hold. Shipping stocks are doing good. Hold your position.
ITC Hotels bought at an average price of 182. 600 shares is what Suman from Kolkata is holding. Long-term view on this. Saurabh?
Hold.
Next query is for you, Saurabh. It's on L&T Tech. Krishna from Hyderabad has 48 shares bought at a price of 3,854, currently sitting on a loss. Should he continue to hold this counter?
Exit with marginal loss.
Okay, Transtrade Lighting, 480 shares bought at an average price of 653. Hold average. Hemant wants to know. Gaurav? Okay, I think we've lost Gaurav's connection. Saurabh, any quick view on Transtrade Lighting?
Exit.
All right, okay. Okay, so that brings us to the end of this rapid fire round. But viewers, it's time to slip into a very, very short break, but we'll be right back answering more queries on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the number that's flashing on your screen up there with all your stock-related queries. On this side of the show, we're also, by the way, joined by Ajit Mishra, SVP Research at Redigate Broking, who's joining us now. Ajit, a very good morning to you. The next question that we have is on National Aluminium Company, and this is from Harish, who's writing us from Karnataka. He wants to know whether he can continue to hold this or sell. He's got around 3,000 shares bought at the levels of 186. So he's sitting on a huge profit of over 6 lakh rupees. Ajit, what would you recommend? Further steam left, or should he exit and book profits?
Yeah, good morning, Mahima. So, Mahima, we have seen a tremendous run across the metal pack, and National Aluminium is also among the top performing names. But off late, we have started seeing a bit of a cool off in the stock prices, while the metal prices are still holding strong. So what we feel that at least partial profit booking, because he has already witnessed considerable profits in this position. So at least partial profit can be booked at current levels. And for the remaining position, also 365 is the base where we have the 100 EMA placed. Below that, the bias would change from positive to sideways, in the near future. So partial profit booking with the trailing stop loss at 365, we can continue to hold his remaining position.
Okay. The next query is coming in from Bhavani from Chennai. He wants to know the long-term view on KPIT Tech. Saurabh, your view on KPIT Tech?
View remains negative on the IT stocks and also on the mid-cap IT stocks. Better to take money off the table.
All right. The next one that we have is on... I think we already did answer on NSDL. The next one that we have is from Dr. Lavanya, who's asking about Welspun Corp, if I'm not wrong. She's holding 350 odd shares at the levels of 1373. Wants to know whether she can continue to hold or sell. Ajit, what should she do? She's sitting on a loss of around 28,000 rupees.
So Wellcorp, after this sharp surge, we are now seeing a bit of a profit taking. So possibly close to around 1230 is where we have the immediate support. So with that as a stop loss, you can continue to stay put. In case of rebound, 13 and 1350 will be the first area of resistance. So around that area, she may consider reducing her position.
Okay. The next query is coming in from Prashant and it's on KFin Tech. He's holding 152 shares, bought at a price of 930, currently sitting on a loss of 15%. Should he average or hold on to this counter? Saurabh, your view?
My take is even after the correction, stocks looks expensive to me. It is better to get out.
Okay, the next one that we have is coming in, and this is from Piyusha Kanodia, who's writing us from Jaipur, asking about Godfrey Phillips. She's got 50 shares at the levels of 2360. Wants to know whether to exit at the current juncture, and she's been holding this from a long-term perspective. Saurabh, your view on Godfrey Phillips?
View remains negative because of hike in excise duty. Better to get out.
The next query is on is from Piyush Kanodia from Jaipur. Okay, that query has been taken. The next one is on from Venkat Reddy from Hyderabad on NBCC. He has 5,000 shares, purchased at a price of 995. He wants to know the outlook for the next 3 months on this counter. Ajit, any view on NBCC?
NBCC, Somit, looks sideways to us, means there was an attempt of recovery or rebound above the long-term averages, but it couldn't sustain. So now we are again seeing pressure emerging at higher end on every attempt of rebound. So short term, maybe around 85, 88 is where we have the immediate support, but long term support is at around 80. So it looks sideways to me. So if the view is short term, you may consider reducing his position at current levels. For re-entry, let the stock break and decisively hold above 100 mark.
Okay, all right. So that's the view on NBCC. The next one that we have is on Vishal Megamart. B. Somya from Chennai wants to know whether from a short-term perspective, is it the right time to enter into this counter or not? Ajit, on the charts?
So Vishal Megamart, we are seeing volatile swings of late. Means the stock made an attempt of rebound of late. But again, we are seeing that sellers are aggressive around 125, 130 zone. So let it sustain above this mark for fresh long positions above 130 mark. And for the existing position, 110 is where we have the immediate support. So that should be the stop.
Next query is on Shivalik Biometal. Lokesh from Hyderabad is holding 100 shares. He wants to know the short-term view on this. Ajit, any coverage or any type of view on Shivalik Biometal?
Samit, it's reeling under tremendous pressure, means on every rebound. In fact, the stock has been trading in a decisive downtrend for almost nearly 1.5 years now, and still there is no sign of recovery or rebound. So the prudent approach is to accept the reality and exit from the current levels in case if you have any, and avoid any fresh position or adding to your loss-making position.
Okay, all right. The next one that we have is on HDFC Bank. Shankar from Dubai says that he has position in HDFC Bank of around 130 shares, bought at the levels of 883. Wants to invest another 50k in the private bank space. By the way, he also has holding in ICICI. Wants to know from 3 to 6 months perspective, what could be a better bet to go ahead and invest another 50k? Ajit?
Within the private banking space, if the view is short to medium term, Axis looks comparatively better because in this entire decline, it's holding strong, closer to the record highs. The dent is minimal. In fact, during the recovery also, we are seeing that Axis is outperforming. So Axis looks comparatively better within the large cap IT space if the view is short to medium term.
Next is a caller query coming in from Bangalore. Yogesh, you can go ahead and ask your query.
Yeah, hi sir. Good morning. So actually, I'm having share from Gland Pharma for 890 rupees. I'm having quantity of 800 shares I'm having now, and currently it's going in a loss. Actually, it's 694 per share value currently. Can I hold it or for some time or
Can you hold for long term or short term?
Long term is next 6 months maybe.
Okay. Ajit, for the next 6 months, do you expect a recovery in the share price of Gland Pharma?
Samit, the way we are seeing stock witnessing correction, volumes are comparatively low, but still means it indicates that the kind of momentum that we were seeing in the stock earlier means from 500 to 900, it was almost a vertical rise, and we have almost retraced the 50% of that move. So this area close to around 660, 665 is where we have the immediate support, the 100 EMA mark. In case if the stock manages to hold this area, then probably we may see an attempt of rebound. So since his view is short term, I would recommend him to utilize any recovery towards 800, 820 levels to reduce his position.
Okay, the next one is on Dixon Technologies. Sanjyot Pavaskar from Mumbai wants to know if this is a good counter to kind of invest in for the next 5 years. Saurabh, your view on Dixon Tech?
See, what happens, these companies are working on a very thin margin. Today, what we have seen in the Amber Enterprises can also happen to the Dixon because of the rise in the material cost, and the valuations are fairly high. So my sense is better to avoid it.
The next query is coming in from Sahil from Haryana. He is holding 20,000 shares of Bank of Maharashtra, bought at a price of 82 rupees. Current price is 77.5, so sitting on a loss. Any view on this? Saurabh, from long term, should he continue to hold this?
From the long-term perspective, yes, it is a good hold. The bank's balance sheet is quite clean and pristine. They are able to maintain their margins, and the NPAs are also within control. Provision coverage ratio is quite excellent, and the bank is above all growing above industry average growth. So it's a good hold.
Okay, so that's view coming in on Bank of Maharashtra. The next one that we have is on Bandhan Bank. Ram from Maharashtra is holding around 100 shares at the levels of 194. Wants to know whether to hold or sell from a long-term perspective. Saurabh?
I think the last quarterly earnings, the bank surprised with the earnings. The street was surprised, and in my sense, I think better to wait for one more quarterly earnings. And if bank continues to surprise the street in a positive manner, then continue to hold. Otherwise, exit.
Next is a caller query coming in from Hyderabad. Aruna, you can go ahead and ask your query.
Yeah, hi sir. Good afternoon to all of you. Thanks for taking my query. I wanted to buy Quality Power, sir. So what is the view on after Q4 results? What is the price to enter? What is the long-term and short-term targets for this?
Okay. Saurabh, any long-term view on Quality Power? Should Aruna buy at this level?
I think it is a recent earning, the recent quarterly earning, the company showed good growth, but at the same time, the valuations are quite expensive. Since this is the most sought after space, and all the stocks in this category are running like anything. So I expect valuation may sustain going forward also. So I think you should review your holding every quarterly earnings. So as of now, it is a hold.
Okay, all right. The next one that we have is on Bank of Baroda. Jashimuddin from Assam wants to know whether to hold or sell. He's holding around 550 shares, bought at the levels of 256. Ajit, your view on the charts for Bank of Baroda?
So Mahima, off late we have started seeing profit taking in the PSU space also, and post the SBI numbers we are seeing that the pressure has increased. So Bank of Baroda is also gradually drifting lower. Now this area close to around 250 from where last time we had this breakout which helped the stock to inch toward 320, the record high zone. So maybe around that area we might see consolidation again, but the recovery is going to be gradual, means around 265, 268 is something where we have the next support. So in case if you have any existing position, you may continue to stay put with 250 as a stop and use recovery to reduce if the view is short term.
Okay. The next one is a caller query again from Hyderabad. Anjali, you can go ahead and ask your query.
Yeah, I'm holding MRPL at 190 rupees, 300 shares.
Okay.
So the stock corrected around 23%. So what I should do, I should add more or exit. What would be the price?
And you can hold for long term?
Yeah, maybe 6 months, 1 year.
1 year. Okay. Saurabh, should Anjali buy more shares of MRPL at current levels or exit this counter completely?
would not recommend to add more share, but yes, the valuations are on the lower side. And since she has a view of 1 year, I think the current upheaval which is happening should subside in the next 3 months. And again, if we are talking about 1 year, then things should improve from here on. So my sense, it is a hold.
Okay, the next one that we have is on United Spirits. 100 shares bought at the levels of 1283. Bablu Sharma from Chandigarh wants to know from a short-term perspective if he can go ahead and continue to hold or sell maybe. The stock is currently trading under pressure, Ajit, but overall, Q4 it did well. It's one of these counters that benefit from the new Karnataka policy as well. But overall, your view on the charts?
So Mahima is stuck in a range. Means we are seeing a corrective trend almost 1.5 years, and the good part is that at least downside is capped. Means it's more of time-wise correction in this range of 1200 to 1450. So we are currently in the middle of the band. Possibly we may see further consolidation in the coming weeks. So in case if the view is, let's say, at least 3 to 6 months, you may continue to stay put with 1200 as a stop. And in case of recovery, once we surpass this 1400 mark, then probably next leg of up move would trigger, which could help the stock to inch towards 1550, 1600, the record high zones.
The next query is from Madanlal Shroff, and he wants to know whether is it a right time to buy Voltas from short-term perspective. Ajit, any view on Voltas?
So again, Samit, we are stuck in a range in Voltas too. It's been almost same 1.5 year of consolidation, 1200, 1550. That's the broader range. The good part is that we are retesting the lower band, and there are sign that there could be a rebound attempt, at least if not a decisive recovery. So with strict stop at 1190, one can look for a rebound trend with the 1300, 1320 being the immediate target.
Okay, all right. So that's the view coming in on Voltas. We've got our next caller, Kumar, I think is calling us from Andhra Pradesh. Kumar, a very good morning to you. What's your query about?
Good morning, madam. This is the right time to buy Punjab National Bank at current level.
What is the time horizon that you're looking at, Kumar?
Long term.
Long term. Okay. Saurabh, your view on PNB?
I think the view is positive on the PSU stocks and PNB too. From the long-term perspective, it is good to add, but you should add in a staggered manner. Or any other alternative, if you are wishing to add in your portfolio, could be Indian Bank.
Okay. The next query is from Padma, and it's from Warangal. She has around 3,000 shares of Ashok Leyland, bought at a price of 170, currently sitting on a loss. Can she hold this counter for the next 3 months or exit? Ajit, your view, Ashok Leyland.
So after this corrective phase, Amit, we are seeing that the stock is struggling to witness any decisive rebound, while the other auto counters have done well. Means comparatively they are still holding above the long-term averages. So probably we may see the underperformance at least in the near future until we break this 175 barrier. So if the view is short term, my recommendation is to exit from Ashok Leyland or switch to TVS or iShares.
The next one that we have is on City Union Bank. Ashwini from Karnal is holding 500 shares at the levels of 285. Currently, the stock is trading at 249 and wants to know whether to hold, book loss. Please suggest is what he's asking. Ajit, I'll stick with you for this one. Your view on City Union Bank?
So Mahima, after this recent consolidation, still, it looks like that the consolidation might continue in the near future. So 263, 65 will be the area where it has multiple resistances, both in terms of price data and the long-term averages. So, but the good part is that downside also seems capped, because close to around 240, 235, we have multiple supports from the area where last time we saw the stock witnessing a rebound. So it's a hold, but for any fresh buying or any momentum, we need a close above 265 levels. So as of now, with stop at 235, they can continue to hold the position. For fresh buying, wait for a breakout above 265.
Okay, the next query is coming in from Shamlal, and he's holding 70 shares of Hindustan Aeronautics, bought at a price of 4,200. He wants to know, should he continue to hold this counter for the next 3 years? Saurabh? Okay, Saurabh, any view on this?
See, the company has continued to disappoint on the operation side. Albeit the order book is quite good, but conversion to the bill is where the company is lacking, and also there is continues to be pressure on the margin side. And now with the rise in the cost of material, I expect that the margin pressure would continue to be there. See, you if you have a 3-year horizon, then you can surely keep on holding the stock, but otherwise I am expecting pressure in the near term.
Okay, the next one is on MCX. Whether our viewer, Dipen, can go ahead and buy MCX today from a long-term perspective is his question. Saurabh, your view on MCX?
My sense is better to miss it.
The next one that we have is on CET. 15 units bought at the levels of 3575. Our viewer Ramdar is looking from a long-term perspective at this one. Whether to go ahead and invest or continue to remain invested rather. Saurabh, your view on CET?
Do not add more. If you want to add more stocks in the similar space, then you may add a company like JK Tyre.
Okay, the next one that we have is on Premier Energies. Our viewer wants to know if you can go ahead and buy Premier Energies at the current levels and what should be the target price. Ajit, this is one of those mid-cap stocks that has done very well despite of markets seeing the downtick, right? And plus the numbers were good, plus the company is around fundraise. Your overall view where charts are concerned right now?
Rightly, Maimak, means in terms of the recovery, means from 660 to 1040, it was almost a vertical rise. And now also we are seeing that the stock is trying to stabilize above the long-term averages, which is a good sign after this strong up move. For fresh momentum, we have this hurdle close around 1050, 1100. But once, let's say, we surpass this, then probably we are set for the new record highs. So in case if somebody is okay having like a time horizon of 3 to 6 months, they can continue to accumulate the stock during this consolidation phase with the stop at 900 and the positional target of around 1250 to 1300 in next 2 to 3 months.
Query is on Vari Energies. Uma from Bangalore is holding 16 shares, bought at a price of 3,197. Her holding period, she can hold this counter for the next 2 years. Saurabh, should she continue to hold?
I think expensive of valuation, exit with the margins.
So that's the view on Vari Energies. The next one that we have is coming in on Garden Reach Shipbuilders. Our viewer Mayur wants to know whether to continue to hold or not. He's holding 75 shares at an average price of 2,800. Ajit, your view on the charts?
So very volatile, Mahima, means from 1900 to 3400, and then again now we are again at 2600 mark. So the supportive thing is that we are closer to the long-term averages, so it might give the cushion on the downside in this range of around 2400, 2500. So with that as a stop loss, you can continue to stay put. But in case of rebound, if the view is short term, 2780, 2800 will be the first area of resistance. So until we break that, the sideways tone might continue. So if the time horizon is less than, let's say, a month or two, then utilize recovery to reduce your position.
The next query is from Arun from Kerala. He is holding 200 shares of Jupiter Wagon, bought at a price of 410. Should he hold or sell, or should he average? Any target on this, Ajit?
Sumit, we have had these kinds of rebound attempts across the railway stocks, but majority are still struggling to cross the major barriers of the long-term averages. So same holds true for Jupiter Wagon also. After this rebound attempt, again, the stock is witnessing pressure. So sideways to negative trend might continue. So if the view is short term, it's prudent to exit.
Okay, all right. The next one that we have is on Inox Wind. Our viewer Rohit from Mumbai has bought it at the levels of 97, wants to know whether to hold or add more. He's already holding 5,000 shares, by the way. Saurabh, your view on Inox Wind from a long-term perspective?
See, the stock has done nothing in the last few quarters and the valuations have subsided. But in contrast to the earnings, it looks still expensive. My take is better to exit.
Rapid fire round. Saurabh as well as Ajit, you both know the drill. The first one is on HFCL. Our viewer Subodh is holding 500 shares at the levels of 111. Hold or exit, Ajit?
Book profit.
The next query is on Welspun Corp and it's for you, Ajit. Dr. Lavanya from Iluru is holding few shares, 350 shares at a price of 1,373. Should she continue to hold?
Use recovery to reduce.
Okay, the next one that we have is on BPCL. Is this a good time to enter from a long-term perspective, Saurabh?
Miss it. Avoid.
The next query is for you, Ajit. Sangeet is holding few shares of Oberoi Realty bought at a price of 1,687. Should he continue to hold?
Yeah, hold with stop at 1,500.
Okay, Eternal 488 stocks bought at the level of 179. Hold or sell, Ajit?
Reduce.
The next query is for you, Saurabh. It's on HPCL. Varun from Hyderabad has 400 shares bought at a price of 377. Should he hold this counter for the next 2 to 3 years?
Hold.
TCS bought at the levels of 2730. 5-year plus view on this one, Saurabh?
Exit.
The next query is for you, Ajit. It's on Marksans Pharma. Sabita from Hyderabad wants to know the short-term target on Marksans Pharma.
So Marksans look positive. In fact, today also we are seeing that up move continuing. Close around 230 is something that she can consider as a major target with stop at 205.
Okay, TVS Supply Chain Solutions. Is this a good time to enter? Shankar from Bengaluru wants to know if he can do that. He's trying to add 1,000 shares. Ajit?
TVS Supply, hold.
The next query is for you, Ajit. It's on Fortis Healthcare. Surya Prakash from Chennai wants to know whether should he buy or sell Fortis Healthcare.
Buy above 980.
Okay, RR Cable from a 1-year perspective, what should be the target that one can expect and stop loss on this one? Shivakumar from Bengaluru is asking. Ajit?
Stop should be at 1680. Upside potential 2300.
The next query is for you, Saurabh. It's on Reliance Industries. The viewer, his name is Darshan. He is holding 500 shares bought at a price of 1,440. Should he hold or sell?
Hold.
ICTC, can I continue to hold from a long-term perspective? Shrikant from Bengaluru wants to know. Saurabh?
Sell.
The next query is for you, Ajit. It's on Texmaco Rail. Prakish Kosh wants to know whether should he hold or sell Texmaco Rail at current market price.
Exit.
Samvardhana Motherson bought at an average price of 110. 2,000 shares is what Harijit from Mohali has been holding. Continue to hold or sell, Saurabh?
Hold.
Next query is for you, Saurabh. It's on Tejas Network. Venu from Hyderabad is holding 135 shares of Tejas Network bought at a price of 479. Should he continue to hold this counter?
Hold.
Canterville is the next one. Anil Bhalla from Jalandhar wants to know if he can continue to hold this for the next 15 days. He's bought 1,000 shares at the levels of 254. Ajit?
Canterville looks weak to me. Exit.
Next query is for you, Ajit. It's on Coforge. The viewer is holding 50 shares bought at a price of 1,500. He can hold the counter for the next 3 months. Should he do that or should he exit?
Better to exit. IT still looks weak to me.
Moschip bought last week at the levels of 228. Satyan is already sitting on a loss of 14% from a 6 months perspective. Can he continue to hold or shift to something like a Shilpa Medicare? Ajit, your view on the charts?
Rebound possible, but upside seems capped. So close to 194. Maintain a stop and use recovery towards 210 to reduce position.
Next query is for you, Saurabh. It's on Apollo Microsystems. Viru is holding 1,000 shares bought at a price of 190. Should he continue to hold or exit?
Hold.
Okay, Hindustan Zinc bought at the levels of 700 rupees. Continue to hold from a long-term perspective, Saurabh?
Hold.
Alright, okay, that brings us to the end of this rapid fire round. Saurabh as well as Ajit, thank you so much for helping us answer almost over 90 queries today on this edition itself. So thank you so much, of course, for that. But viewers, like I said, completely out of time on this edition of Ask Profit, but do stay tuned because KYC is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit, Business Leadership Awards. Honoring Excellence, coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies, interesting small caps, some interesting mid caps, and also some hidden gems. And today also I've got you a good, interesting company after a strong quarterly numbers. But wait, try to guess the company. The first one is it's a Bengaluru-based company. I would like to give you some more hint. Try to guess it. The company deals with AC generators and electric motors. It's been buzzing of late a lot. Of course, last week there was a big jump in the numbers also, as well as the stock prices. And it's a very big multi-bagger. The stock is up 27 times. I'm not joking. The stock is up 27 times in the last 5 years. Try to guess the company. It's been buzzing all across. And of course, it's a quite powerful company, and that's also a pun. The company in focus is TD Power Systems. That's what we like to talk about. And interestingly, the important thing is the Q4 numbers. That's where we'll start our talking points. Also, a little bit of margin pressure is there in the industry or in the company. We'll try to understand that from the management. And why are we calling this company? We'll try to understand that as well. The order momentum, we need to look about that. Is that changing now from Q1? Will it be on the higher side? A lot of orders coming in, but when a lot of orders comes in, try to understand there's an execution risk also at play. So we'll try to understand this for the industry perspective also. Apart from this, the key question to be asked would be the demand trends, especially on the gas turbine segment, because this demand is showing a really strong revenue visibility. We have seen it across the industry. The margins and the top line guidance, are they giving this time any? We'll try to understand because they had given in FY26. So we'll try to get those numbers out and the investment plans for the large generators. Of course, will that happen in the next 3 months or because of geopolitical tensions, will the company step back, and the capacity utilization and capex plans? This is an important question to be asked, and we'll try to get those numbers for you. Apart from this, the geopolitical stress, what kind of impact is happening? We are already seeing a little bit of it in the margins. Will it impact the supply chain also? That's a big question to be asked. and the outlook, of course, for the advanced automation and robotics, and which are the new areas which their orders are coming in. That's what we'll try to understand, and we'll be joined in by Nikhil Kumar. He's the MD at TD Power Systems, where he'll try to answer most of the queries sent by you and by me as well. But let's try to understand, what does the company actually do? Is it a very simple product for you to understand? I'll try to make it more simpler for you. Of course, it's a Bengaluru based company, but let's get into the details about it. Ye company karti kya hai? They makes AC generators and electronic motors. Of course, this is a type of we could say a current, alternate current. That is what we talk about. The company makes generators for turbines, जिससे energy generate होती है, and this is where the engines also come in, and there are special applications now because of new industries is there. That's what we'll focus on. They make motor induction and synchronous, and traction segments also. These are basically your motor segment which to talk about. Totally, they have around 8,055 generators across 113 countries. So definitely it is a global company. Company delivered a very strong Q4, and also there's an interesting corporate development, and the company announced a 1:2 share split as well. The stock already near its lifetime high levels to increase the retail participation. They have done that. 80% of orders comes just from exports, and that's what we have been talking about. These are the key details about the company. But what does a generator do? It's a very simple question, but I'll try to make it more simpler. It's an electromechanical devices. What does this mean? This means that it takes energy from one segment and then it creates the energy which can be used as electricity. This is what it is. It's a bit technical, but I promise you I'll make it very easy for you. This is their core product, and based on that, other industries, there are applications also. If you would like to show the other applications, what happens in the industries, there can be steam, gas, water, and internal combustion as well. But enough of science. Let's now talk about the order picture. The order inflow growth, that is what the market wants to look at. Look at that. It's up 51% on a year-on-year basis. And this is, of course, we are looking at the FY26 kind of numbers. The Q4 numbers, even if you look at that, that's also up 61% on a year-on-year basis. And the overall order to look at, that stands at roughly 1973 crore rupees. So that's a pretty interesting take, right? But how does the order book breakup looks like? And of course, we have broken it into domestics and exports. Largely exports and deemed exports, माने कि SEZ से अगर जो जाता है उसे deemed exports भी कहते हैं. This is 64%. 21% is largely your domestic, and the smaller ones includes rail exports, domestic rail, spares, and also the Turkey segment. They have kept it separately. That's pretty interesting. So this is the entire order book coming in. But what's working for the company? It chal क्यों रहा है stock? The reason is strong operational and financial parameters. The second positive reason is FIs are increasing stake in the company. Of course, apart from this, there is an improvement in the order win rate. पहले 600 करोड़ था और अब management बता रही है 650 करोड़ होगा. That means there is an increase in the order flows. This application is happening across the new age applications, be it nuclear, data center, railway, and also hydro segment, and that is where the bullishness is coming in. And also it's a beneficiary for industry-wide high demand for generators. That is what we are seeing, the entire sector getting re-rated. But what may not work for this company, higher valuations, pretty high, and this is for the entire industry I'm talking about. And remember, when you get a lot of orders, the execution risk keeps piling up as well. And a couple of times this happens on the quarterly earnings, and the delay in the investment for larger generator, the large size generators, that's what the management has spoken about. They've given 3 months in their outlook, but that delay might be a concern. So this is the entire picture for TD Power Systems, but the entire picture for KYC in our show is via 8 parameters, and generally we of course take the usual ones, the income statement, balance sheet, cash flow. These are the holy grail of financial accounting. Apart from that, we also have the ROC to understand how that has panned out over the last 3 to 4 years. We have shareholding, street cred, about how much money has been made, and of course this has been a multi-bagger, so I'll try to get you all the other details as well. Valuations, we'll try to compare it with its peer like ABB and CG Power, and the outlook, what the company is talking about. What are the numbers to look at? This is what we look at. So the first one, let's start with income statement. Let's see what's happened here. Last 3 years CAGR has been decent. You should be looking at the bottom line numbers as well. That has done well at 21% CAGR. Seems decent, a good growth trajectory coming in. And let's look at the Q4 numbers also. Largely the numbers have been strong. The only concern for me, apart from a very strong top line growth and a PAT growth, are the margins. Margins seems to have taken a pressure hit. Let's just show you how the margins have panned out to see the entire setup. Largely it has been stable, it has been going up. It peaked at 20% in FY25, but it has come down, not a lot, but still nevertheless it has moderated to 18%. So that's one question to be asked. Will this pressure continue going ahead into the first or the second quarter of FY27? So as of now, let's give this a neutral rating when it comes to the income statement. Let's talk about the balance sheet, and largely it is well capitalized. There isn't much to actually look about. A minor increase in the borrowings. The company is having decent cash levels of roughly around 199 odd crore rupees. So net, there isn't any fault in the balance sheet. So I'll be giving this a neutral rating as well. So we spoke about income statement, we spoke about balance sheet. Let's talk about the third one, that is cash flow. And remember, execution happens. They have a lot of foreign clients, so the cash flow cycle might be much better than compared to a government company related orders, and that is why the numbers are looking very strong. Cash flow from operations has significantly gone up. The net cash flows are also decent. It's in the positive, and the conversion is also strong. So for a company like this at the current juncture, the cash flows are strong, so I'm going to give this a thumbs up. Let's talk about return ratios, and I have taken ROC numbers here, and look at that, the progression which has happened in FY22. It was just 16%, and then the increase started coming in, and it has held its ground also, and now it's a 33 plus ROC business, and that is where it lies, that the company is generating a good capital employment and the returns to the investors as well, and this is a very good side, to be honest, and that's why I have given this a strong thumbs up. Let's talk about shareholding and try to understand. And yes, FIs, you look at this number, that was just 13% in March 24. In the next 2 years, this has gone up to 27%. FIs ने अपनी stake double से ज़्यादा बढ़ा दी. Promoters, on the other hand, have been selling. But remember, promoter stake is not as high as other companies here. And remember, there are some MNC competitors with them as well. And that's why maybe the FI interest is coming in. DIs have reduced their stake. So it kind of balances it, and promoters sell their stake. So net, there are mixed trends when it comes to the shareholding. But as of now, I'm going to give this a neutral rating as well. Let's talk about the street cred, about how much money has the stock made for the investors. And the data seems like the story is very good. From March lows, the stock is up 63%. एक साल में 150% stock ऊपर गया. And then look at it year to date. This year itself, the stock is up 82%. And if you are holding this company for a really long time, maybe 5 years, you have made 27x of this total returns. Imagine. That is a very big multi-bagger sign coming in from TD Power Systems. But net, it's a strong thumbs up when it comes to the street cred. Always remember that if the stock has run up, the valuations will be under the question. Let's see what the valuations are. And to the entire sector, they have seen a run up. And largely TD Power, still cheaper than its peers. But just look at it. It is 78 times its 12-month trailing P. Same story goes for ABB and CG Power. Look at the valuations. ABB India is 79 times. CG Power is 104 times. So you see the valuations, they are on the higher side, and to enter right now might not be the good time unless some dips come in. That's what the analysts say me. So right now, for the peer comparison of valuations, doesn't make sense. So it's a strong thumbs down when it comes to TD Power. But outlook, that is where my interest comes for the stock. A strong demand coming across all verticals. That's what the management had stated, especially on the generator segment. And of course, The company is focusing much more on that. The order inflow is approaching 650 crore per quarter. Earlier it was 600. So yes, there is an increase happening. There's a push happening in the larger generator segment, and this capacity addition is something which the management has spoken about, and largely they are expecting this to happen in the next 3 months. That's a date to look at. We will also be trying to understand much more about this from the management as well. And the outlook for FY27 and 28 remains strong. But number kya hai? We need to understand that as well. So that's the outlook looking like. So overall, the outlook remains pretty strong as well. But let's revise the entire KYC ratings for you to give you the entire picture of what we have done over the last 12 to 15 minutes. Income statement and balance sheet have been largely neutral. Cash flow, the money is coming in. Return ratio, the ROC numbers are going up each year. Shareholding, there are mixed trends, but street cred, it has been a multi-bagger, and over this year itself, or from March lows, the stock has given good returns as well. Valuations, because of the stock run-up, is not attractive at all for the entire sector, but the outlook, that is where the bullishness lies for the analysts and the street as well. But final rating kya hai? Final rating is 5.5 out of 8. That's what's largely in line with the numbers which we gave in to the companies in our KYC. And to decode more about this company, we'll be joined in by Nikhil Kumar. He's the MD at TD Power Systems. An interesting snippet about him. He has 3 decades of experience in manufacturing electrical rotating machines. That's the most simple way to put things. And he's also the ex-general manager at Kirloskar Electric from 1990 to 2000. So imagine the experience he's having. So we'll be joined in by Nikhil Kumar, but just after a short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back to KYC, and now we are joined in by Nikhil Kumar, the Managing Director of TD Power Systems. Good afternoon, Nikhil. It's always a pleasure to have you. A very strong quarterly numbers also coming in, and bullishness on the order inflow front as well. Just want to understand a little bit more about it. Does this continue in Q1, Q2 as well? You spoke about that 650 crore mark of the order inflow. Your views on that?
I see a very strong pipeline. I mean, we have a very strong pipeline. And the basic drivers that are creating this demand or creating this order inflow are very much intact. In fact, we are seeing no loss of momentum in the factors that are driving the demand. That means basically it's coming out of the data center, AI data center business. It's coming out of grid stabilization. It's coming out of basic power generation, shift towards renewables, hydro, geothermal. And so we are seeing in all these sectors very, very high demand. And so the pipeline is very strong. And as I mentioned in the earnings call last week, that we are very confident about revising upward our guidance to 2,400 crores plus. And I've said that there's going to be a very strong possibility to further upgrade that guidance. So at the moment, it's very buoyant.
Nikhil, just numbers, just we need to revise it again. What was the number for the guidance which you have currently given? And of course, there will be, of course, in the future, you will try to upgrade that as well. But what's the exact number?
Yeah, so the initial guidance given last year was 2,200 crores for this financial year. And last week, I gave an upgrade to 2,400 crores. And I'm looking at a very strong chance that we'll be further upgrading this beyond 2,400.
Right. So beyond 2,400 odd crore rupees, that's the guidance might come in the future. Well, pretty interesting on that. Just wanted to understand a little bit more details about it, because a lot of peers also of yours, especially in the gas turbine segment, a lot of undersupply, is there in the industry. The demand has been very strong. The revenue visibility looks in years. How are you seeing that?
Yeah, a generator is driven by a turbine, right? So in the end, we have to do what our prime mover customer, and I say prime mover, I mean either a gas turbine, steam turbine, or engine. We do what our customers ask us to do. And they are all adding a lot of capacity. On an average, I can say people are in the turbine business and engine business are doubling capacity. Some of them are going to go for 3 times the capacity. And so they are going to be adding this capacity gradually over the next 2 or 3 years. And so the demand forecast, what they have given to us based on their capacity addition and what they see from the market, is showing towards a very high growth for us too. And that's why I think that this cycle is going to run for many years.
Okay, this cycle will run for many years. Of course, there is always a positive talk about it, but there are some concerns also. We keep on getting orders. There's an execution risk also for your industry. So what is this execution risk? And maybe, what are the things which you are mitigating to make sure that that doesn't happen?
Execution risk is a real risk. I mean, we are operating today in a very, very uncertain geopolitical situation. So there are always problems with shipping or problems with undersupply of certain key commodities, or, so managing this execution risk is critical. So far, we're doing okay. But, what's around the corner, we don't know. So we try to protect ourselves by inventory, by holding large inventory of critical raw materials and things like that to the extent possible. But, if right now everything is manageable, but who knows what's around the corner. And still we take an active role in thinking, okay, what can come next, and try to do whatever we can. And that's worked for us so far. But yeah, you're right. There is an execution risk overall.
That's pretty much there. One side order inflows, there is other side execution risk. But the margins is also something I'm looking at, because everything else ticks the boxes in my analysis. But the margin, little bit pressure is there. Compare it in a sequential basis or even year-on-year basis. Do you think any kind of margin guidance you can give me, or in case there is an uncertainty, do you think that uncertainty or that pressure on margins can flow through in Q1 or Q2 or even H1 FY27?
I'm pretty confident that we'll be able to maintain our EBITDA margins for this year, despite all the pressure that we have. So something like 17.75 to 18.5% EBITDA margins is realistic, and we will maintain that. So while there are headwinds on the raw material side, we do have inventory, but we also have tailwinds on the currency side. So there is a compensating factor to some extent. In general, I stick to the numbers that I've given to you just a few minutes ago.
Right, that number is there, and of course 80% of all the businesses come in exports, so there are offsetting elements as well, as what Nikhil has pointed out. But Nikhil, there's an interesting take for the large generators. Just could you explain us how different it is in terms of the business model, margins and the investment plans for it? I presume you have given 3 months of time when you will start announcing your investments in this larger segment also. So just make us understand what are the demand trends, how's the margin profile, and when is the investment coming up?
So the larger generator space is less competitive space, but it's a more difficult space to enter into. We have been gradually seeding this market for the past few years, so it's not that we're planning to enter it right now. We have been seeding the market, and I think we're reaching the point when now we see the demand expansion taking place for our products, acceptance is improving, and now we find that we don't have the capacity to make what the market is expecting from us over the next few years. Of course, we have some time. We're looking at demand increasing dramatically from 28 onwards, and we need to now take some certain decisions to be able to meet those requirements. So of course, there is always a risk factor, but we, after discounting the risk, we still need to put some capacity. So we are debating that very intensely in-house, internally with our board and with the management teams, and we'll be taking a decision very soon. But we need to put a significant amount of capacity. But this is also good from a point of view of de-risking our existing business. Once you have the larger sizes too, then you have a wide range of products. You're catering to different segments of the market, and if one goes down, then the other one goes up, and you have a balanced portfolio.
Right. Hedging, de-risking, we already discussed that, but just a little bit on the numbers from the current capacity utilization levels and any capex which has been earmarked.
For this year, we have planned 50 crores. And next year, again, we'll plan 50 crores for the existing range of machines, not including what we are planning for the large machines. I have mentioned in the earnings call that with this 50 plus 50 investment, we will have a production capacity somewhere around 3,000 to 3,200 crore, which should be enough for us to go up to FY28. And then we have to, if the demand situation continues like this, then we have to see what's next. But probably we will again look at incremental capacity additions and not look at any big bang approach. I'm generally going to be very conservative on adding capacity. That's my general approach. I'm not going to be gung-ho about just putting in a new plant and things like that. I need to really plan this in a way that makes sense. Let me put it that way.
Nikhil, that's a very interesting point you have taken, and there is a lot of chatter and you could say exuberance in your industry, but a promoter talking in a conservative manner is something which is actually very helpful, and that's what we get in our KYC segment also. But let's look at the future segment. Two interesting words were very interesting to be looked at from your investor presentation. I like the advanced automation and robotics. Is this space a bit different, or is it just your upgradation of your existing facilities, or some more R&D is happening here? We need to understand a little bit more on that.
In general, we took a decision about 5 years ago to automate whatever we can, to install robots in the process wherever we can. And we are doing this year on year. Every year, we're adding something like 3-4 robots or automation into different parts of the processes. Now we have more than 20 different parts of the plant, and every year we're going to keep doing this incrementally, so that you say now 5 years from now, then we'll have another 20-30 robots in the factory. This is looking at costs are going up. Bangalore is no longer cheap to manufacture. You need to look at the future. You need to also, for the volume and scale that we're talking about, we need to have consistent quality. And we also need to keep our manufacturing plants at state-of-the-art level, since we're competing and selling our machines to the best in the world. So it's very, very important for TDPS to be at top of the game. And that's another reason why we are investing heavily in robotics and automation.
Right. So that's a view coming in. It's a very interesting conversation, Nikhil, with you. And you have given us a very interesting blueprint and also conservative despite the industry tailwinds happening. It's always a pleasure to talk with you, Nikhil, and best of luck for the future.
Thank you so much for your time.
Yeah. So that's the management of TD Power Systems. A very bullish commentary, but remember he has a cautious tone as well. Quite a rare, kind of a promoter persona, to be honest. But for these interesting companies and interesting takeaways from these companies, stay tuned to NDTV Profit and keep watching KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what.
Benchmarks take cues from weak Wall Street handover, high oil prices and uncertain geopolitical backdrop. Nifty hovers near 23,400 level. Sensex declines over 400 points. PSU banks and defense remain the biggest pain points, while IT remains resilient. Rupee hits a fresh record low of close to 96 rupees 32 paise against the dollar. Pressure building fast for the Indian currency, with oil above $110 and rising West Asia tensions hitting the sentiment. Oil is on the boil again. Brent above $111, WTI nearing $108 as tensions with Iran escalate. This after US President Donald Trump sharpens the warning, saying the clock is ticking on a deal to reopen the Strait of Hormuz. Elevated crude prices on rising supply drag Indian oil marketing stocks lower. Vodafone Idea under pressure despite Aditya Birla Group's plans to invest $500 million in Vodafone Idea. Now, the telco said that the board approved the issuance of fully convertible warrants of 4,730 crore rupees on preferential basis to the promoter. Hello and welcome to Markets at 12. I'm Nisha Podar, and yes, it's a weekday of trade today because of the simmering tensions between US and Iran over the weekend, and that's really showing on the markets, with also global cues not being supportive, especially the oil prices rising is bad news coming in for the Indian markets. So not really trending. It's got a resistance at 23,500 levels, and therefore Nifty 50.7% down at the moment. And the bigger drag is really coming in from the banking space, where Nifty Bank is down by 1.3 odd %, and that is really taking the lead when it comes to the overall market momentum. But if you really take a look at the sectoral plays, there is pressure built all across. Well, it's the broader markets like mid caps which are underperforming the key markets, and on the other hand, IT is the only sector which is in the green and showing some bit of momentum, also because it got dragged down quite a bit. But apart from that, PSU banks, defense, metal, all these sectors are really dragging heavily, and overall momentum is looking weak. When we look at the particular heavyweights which are really impacting the Indian market, of course, the IT sectors, Infi is really adding momentum, Tech Mahindra is there. From the big boys, Bharti Airtel and Reliance Industries are only showing some bit of green, and Bharti Airtel, of course, the biggest contributor. So that's the overall picture of the market, and there is clear sentiment of the global trend and global cues, and rupee also remember is touching its lowest point. So all across, weakness when it comes to the cues coming in. Let's take it straight to a management. Muthoot FinCorp is seeing strong momentum. Gold loans really continue to lead, while MSME lending really expands steadily. When we talk about this company, profit has more than tripled, backed by 56% AUM growth and also improving asset quality with digital onboarding now at scale. Management outlook remains firmly positive. Shaji Varghese, who's the CEO of Muthoot FinCorp, joins us for more on this particular show. Shaji, always a pleasure welcoming you on NDTV Profit. My first question to you is, given the current scenario, the kind of restrictions now on gold that has been put in with escalating prices on one hand and higher customs duty, also there's restriction on imports. How is this going to really impact your business and volume?
Yeah, thank you, Nisha, for having me over. Now, this current import increase is nowhere impacting the gold loan business per se, because we are not into import finance at all. Now, we know it's estimated to have around 30,000 tons of jewelry savings in the households in India. So we finance against the household jewelry. So it's nowhere has any connection on the consumer gold loan financing at all. Now, on the other side, it is estimated that only around 35 to 40% of the gold loan financing is still part of the formal sector with the regulated entities by RBI. So the opportunity stays there. It continues. There is nowhere impacted in this business.
Right. When we talk about Muthoot FinCorp, you've also announced 4,000 crore rupees of IPO. Can you give us more details on how much of that is going to be OFS and how much will come into the company? What is the timeline that we're looking at?
Yeah, okay. See, look, it is expected to be fully primary. We don't expect any OFS here. Now, we don't have any private equity investor or somebody is looking for a sale as of now. This is fully owned by the Muthoot family. So the proceeds will be used towards the business expansion. As you are also aware, now RBI also has removed the licensing, restrictions which we had in the past. Gold loan companies having more than 1,000 branches in the past needed to have explicit license. That is also removed now. So it is purely for the business growth, and this will also help us to expand our footprint faster than before. So we don't expect any OFS here.
Right. So when you're talking about 4,000 crore rupees, that's a substantial amount of money. What are the proceeds that you are looking at and the growth potential that lies ahead? Why will the investors really invest in this IPO?
Okay, so the gold loan sector actually is, our take is going through a structural, shift. In the past, gold loan used to be looked at as a last resort for the lower income families. Now with more and more, banks and institutions participating, this has now become a very dependable, source of credit, and is also helping the market to expand. Now, recently, regulator also has, enabled a far better environment for gold loan companies to operate, including bringing in harmonization between NBFCs and the banks on the other side. Now also enabled for the liability side as well, including co-lending and DA as well. So the overall environment is far more conducive for growth ever than before. All of us know there is a bit of supply constraint on the unsecured space as well. And on the other side, the formalization is happening rapidly. So we often hear, of the 60 million, almost 6 crore of Indian retail, shops, only around 20% they still have access to credit. So gold loan is a good route to, reach credit for them. So we expect the growth momentum to continue for a longer while.
All right, growth momentum to continue. When we talk about the MSME, with the current geopolitical tension, the inflation that is seen on the ground with raw material and transportation prices, how are you seeing the collection efficiency and the momentum in the MSME space?
See, we are yet to see the impact of that on the ground, maybe because it is not fully passed on. In our leading business, which is gold loan, we are yet to see any impact in that direction. So even when we look at our loan to value, which is sub 60%, so we don't expect, even if there is a bit of stress on the way it will impact our portfolio or portfolio performance, we expect the gold loan portfolio to continue to perform. That's our take on this business, because it's all secured with very high LTV cushion.
Right. Your return on asset has substantially increased on a YOY basis. Your consolidated AUM has also risen substantially, as has been the case with the gold loan related sector currently. Right. But also wanted to know, Shaji Varghese, what are the challenges that you foresee on the ground in this particular part of business, and also the competitive intensity? How are you going to surmount that?
Okay, on the competition front, what's really happening is now more and more banks and the large NBFCs are also participating in this business. This is actually helping the sector to grow substantially, and more importantly for formalization. There was a bit of social taboo in this business that only when there is no other source of credit, many in the past used to avail, gold loan. Now, with more banks and financial institutions participating, this is now become a well-accepted, source of, credit, which means the sector is growing with competition. And the real competition in the space is not the banks and the NBFCs, but, the unorganized sector. So more participation, more competition is actually helping the sector to grow. So we are in a different situation that a lot of other lending businesses. So the competition is good in this space, and on the other side there are a lot of regulatory tailwinds as well as available. So overall, more participation from other institutions, especially banks, are going to help the sector.
Right. So my final question on the IPO, what's the timeline set and how are you going to progress on this one?
See, on Saturday, board has approved the journey for IPO. As you know, it has its own procedural requirements and subject to a lot of approvals. Now we will formally engage bankers and lawyers. So while I am not in a position to precisely confirm on a timeline, but we would like to, having the approval in place, and we would like to move as soon as possible. So I'm not in a position to precisely tell the timeline because some of the approvals are beyond me to commit. But we would like to move fast.
All right, you would like to move fast and capture the momentum that the sector is really giving you. Thank you so much, Shaji Varghese, for joining us on NDTV Profit, and all the best for the IPO as well. Thank you.
Yeah, thank you, Nisha. Thank you.
All right, moving on to the pharma space, and here we are talking about Gland Pharma, robust performance on both domestic as well as global fronts, and Gland Pharma delivered a healthy Q4, and there you go, the stock is up 14.5%. Varsha is here to break it down for us. Varsha, what's really working for the company from the results perspective and future momentum?
Well, strong US traction, which was led by new launches and GPO contract wing. There was a higher contribution from CDMO projects as well. Favorable product mix supported margin expansion for the company, and the operating leverage, of course, worked in favor of the company. Now, on to the geography-wise performance. US was up 24% year-on-year. Revenue, Europe-based business was up 15%, and India was up almost 28%. Talking about the Sensex business, that's the turnaround or the key highlight when it comes to Gland Pharma. Just do note that Sensex was acquired by Gland Pharma in 2024, which was up 4% year-on-year in Q4, showing gradual recovery. Improvement was driven by better utilization, new product ramp-up, and of course FY27 revenue growth overall is expected at around 12 to 13%, which has been guided by the management, which will be driven by launches and of course the CDMO ramp-up. Growth is expected to accelerate to 15% in FY28 and 20% in FY29, and margins are expected to sustain at around 25 to 26% at consolidated level, and the base business margin was guided at 33 to 35%. So US business, Sensex, and good outlook are some of the key reasons why we are seeing that buzz in the stock.
All right, thank you so much, Varsha, for that. But we'll stay with the pharma sector, which is a beaten down sector today. We are focusing on Arti Drugs. Take a look at that particular counter. It's 2% down in trade today. For a weekly basis, it is down about 5.5%. But if you really take a look at the 1 month chart, it's only in the last 10 days that it has seen a sharp decline. But the stock price had reached 400 levels ahead of the numbers and now has really seen a substantial amount of probable profit booking. Let me welcome on the show Adish Patil, who is the CFO of Arti Drugs. Adish, always a pleasure to welcome you on NDTV Profit. Of course, on a sequential basis, the company has got strength when it comes to the numbers. On a sequential basis, the revenues are up 20%. EBITDA is sharply up on operating leverage gains. What's really impacting you on a QQ basis, and is this momentum going to be sustainable for the present quarter?
Hi, good afternoon. Thank you for having me. So yes, we feel that the sequential improvement will continue in Q1. In fact, the quarters ahead of us should be good because our greenfield facility at Saika, which we started in quarter of December, in December quarter the utilization was just below 30%. In March quarter, it was just above 40%. It could have been a bit higher, but for the war in West Asia, there was few disruptions in that facility. But as of today, in Q1, we are running with a run rate of around 60% utilization for that facility. So better the utilization of that facility, obviously it will reflect on the EBITDA margins of the company as a whole. Second place of improvement we expect would be salicylic acid, which has been a laggard for us in last entire year. We will be coming up with the derivative plant of that salicylic acid by the end of Q1. And plus the regulatory market penetration. So all this put together, we believe that the EBITDA margins trajectory should be better, and it should definitely maintain what it is right now.
So with salicylic acid as well as your new new facility coming, adding to the momentum, adding more expansion from 60%. In this particular quarter, can you give us a guidance on which of these 2-3 factors that you have been talking about, they will start operating much better, because we are already halfway through this quarter. You have a good picture for the guidance for this quarter.
Yes. So the ramp up of ICICI facility, that could be one factor which is almost sure shot. So that will definitely reflect in Q1 to some extent. Penetration into regulated markets, that is an ongoing job. It will happen slowly, but when it picks up, it will pick up pretty fast. But probably it will take around 6, 9, or 12 months, because that is a slow process. But it is going on from the USFDA plant.
Right. How much higher, expansion in terms of capacity that you are penciling in for this quarter?
So we are aiming that from the 41% utilization in March quarter, we are expecting to go above 60% in Q1.
All right. So that 20% from the last quarter will really add in. When we talk about the inventory and the price dynamics, can you give us a sense on what will offset what, and if inventory, bought at a lower cost while the prices, because of various inflationary pressures, have also been pushed down, both put together, how is the math really working out for the margin play in this quarter?
Yeah. So when the war started, first thing what happened, the gas-based raw materials, there was acute shortages in the month of March. And that in turn, and some of the companies also invoked force majeure and cancelled earlier contracts with the existing pending orders and revised it to new rates. So because of that, the API prices also went up for such which utilize such kind of raw materials. For example, metformin prices went up. Few antibiotics also went up. So we were able to completely pass on the increase in the price, at least for the short run. But in the month of March, the only impact was because of the gas-based products and not because of the crude-based products, because the crude was not that high in the month of March, and the availability of the raw materials was also not a problem. But going forward, if the crude prices remain elevated at this level, 110 or more than that, for a very long period of time, then it will create some kind of demand pressure for the antibiotic product portfolio, especially in the domestic market, not for the export market, but for the domestic market. And that is the only challenge what we foresee. Other than that, the things look pretty good as of now.
Right. So the particular antibiotic, portfolio and the pressure points because of gas and crude all put together, that is going to really put pressure. All in all, how do you guide this particular quarter? My last question to you, will it be, considering that the tension in geopolitics really continues, considering that, how will you end this quarter? Better than the last quarter?
Ideally, it should be better because of higher utilization of the ICICI Greenfield facility. The only thing what we need to check is that the demands don't slow down for the next 1.5 months because of elevated API prices. That is the only worry. Apart from that, we feel that it should be at least similar or better than the Q4 of FY26.
All right. So you are expecting to maintain or improve the performance from the given sequential strong quarter that has been really performed. Thank you so much, Adish, and all the best for the present quarter. Thank you.
Thank you so much.
All right, moving on to an important development when it comes to the cotton prices, and they are at elevated levels, and that is putting an impact on the overall sector. And the textile body has also asked for a removal of 11% duty and wants to make the import of cotton more competitive for their survival. Let me welcome on the show Dinesh Nolkha, who's the CMD and CEO of Nitin Spinners. Dinesh, good to have you on NDTV Profit. First of all, give me a sense on how much of the pressure point is really coming in on the yarn prices because of the elevated raw cotton prices.
Thank you, Nisha, for having me on the show. At this point of time, what we are seeing is that the cotton prices, which has increased over the last 2.5 months, has been passed on. But looking into the kind of increase which we are having, and then the shortage of the raw cotton which we are having in the country, we are expecting further increase in the cotton prices. So as to have a raw material security, we want that the custom duty is removed and we are able to import freely from all around the world. So that is one of the concerns which we have. As far as at this point of time, it has been passed on, but long term, it will have impact on the downstream sectors as well.
Right. So I also wanted to understand, Dinesh, that the import duty being reduced, how much of that will really help? Also considering that crude oil prices, transportation prices and supply chain constraints are also there. So how much of an impact will it make if the import duty is reduced?
This raw material constitutes a major part of our costs. If you see from the revenue angle, nearly 60% plus of the costs is raw material only, and 11% duty will ensure that we are having the similar kind of competitiveness which other countries are having, like Vietnam, Bangladesh, China, where there is no duty on the raw materials. So that will help us in making it more competitive for us. Of course, logistics and other costs are also important, but given in the overall context, they are minuscule in comparison to the cotton.
So Dinesh, also coming from a listed company, how is the cotton to yarn spread at the current moment? And with the escalation in prices, how is it expected to be, considering if no change in provisions given on raw cotton surety is given by the government?
Raw cotton to yarn spread, depending on the counts which is being manufactured on the basis of average 30s count, is running at about 120 to 125 rupees, which is reasonable looking into all the costs involved and others, and better than what it was in the last year. But we have to also look forward from here, where the minimum support price of raw cotton has been already increased by the government of India. Plus, we are seeing that there is no duty removal and there could be a shortage of raw cotton, which can escalate the raw cotton prices, the yarn prices, and which may not consequently turn into the final yarn prices also.
Right. And also, how is the differential really panning out between the domestic prices and also landed cost of imported cotton?
Landed cost with duty is definitely higher. If we have, if the duty is removed, I think then the landed cost of cotton will be more or less same. Landed cost of imported cottons will be slightly less than the Indian cotton at the moment.
Right. And also, Nitin, Spinners is right now looking at this particular push from the textile body as well. Dinesh, give me two important cents before I let you go. First, of course, the cause for escalation, and do you see the domestic prices reducing at some point because of any measures? And the second is also how much is our availability in terms of our own production versus the deficit that is there in terms of the demand in the market?
Let me first answer your second question, which is the deficit. Definitely, there is a deficit of cotton available in India. Our cotton crop is only about 290 lakh bales, whereas the demand is about 320 to 330 lakh bales. So plus we are also looking forward for a growth in the textile industry as being perceived by the textile ministry as well as the government of India. So we will be definitely short of raw material. And this shortage of raw material could actually cause the increase in the prices in India. If we have import duty removal, then we will have a parity with the international markets, and this could actually lead to a balancing act. Anyway, today the farmers are very well protected because of the minimum support price. The cotton price are already running much above the minimum support price of this year. So there is no issues from that side. So we are looking forward that this measure by the government of India will actually help the textile industry to balance between the domestic and exports. Anyway, the downstream industry like fabrics and others are not able to directly import the raw cotton under advanced license. So they may have further cost escalations if this is not done.
All right, strong case made for this, dispensation to come. And has the government given you a positive support on this one? Is that likely to happen, yes or no?
Textile Ministry is very positive about this. They want the raw material parity to be there, but it depends on the Finance Ministry and the Agriculture Ministry, of course.
All right. Thank you so much, Dinesh, for joining in and, breaking down this important issue for us. Thank you so much for joining in. And with that, completely out of time on this edition of Markets at 12, but keep it with NDTV Profit. Thanks so much.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Tatia, and Sharad Dubey standing at the NDTV Profit Market Bit with all the action. Sharad, I mean, the way markets have opened up, we have come somewhere given up those gains. However, there was that very mild recovery from the day's lowest levels. But clearly that downtick does continue and the mood is not very positive.
Exactly, you're right. Good afternoon, Hiral, and you're right. Rupee touched its fresh record low levels also today. That's also dampening the sentiment. Of course, nothing positive coming in from the weekend. There's a big gap down opening. Asian markets are also in the red. But the market is trying to make a recovery. But will it sustain or not? That's the big question. And the same story repeats for Nifty Bank as well. Let's just pull out the Nifty Bank's chart. And I had mentioned earlier also that the Nifty Bank's technicals is much weaker than Nifty also. That's why the recovery is not that strong when it comes to Nifty Bank. But what are the factors you should be considering today for the first week of the trade? The first and foremost, that both of them still remain volatile. And is there a recovery inside? That's the big question to be asked. But of course, we'll be watching out for the technical levels. Let's look at the other key factors which should be very important in the trade itself. These are the important support range. That's where the bounce has come in, 23,200 to 23,300. And for Nifty Bank also, let's see what the support lies. That's around 52,400 to almost 52,800. Apart from this, also let's look at where the action is coming in. IT, that's the only pack which is doing well. Of course, it was sold last week, so short covering some positions are there and some fresh long build-ups, especially in the mid cap. Rupee again hits its fresh record low levels, and that's where the concern is coming in going ahead as well. But apart from that, the global yields are rising, so are the Indian bond yields also the highest levels we have seen since the last 2 years. The risk of sentiment continues in the market, and that's why there is still a pressure and the negative sentiment. Oil is rising on the stalled US-Iran talks. No major developments are happening. The war fatigue is also going up, and the earnings, we are at the fag end of the earnings now. We have IOC, IGL and Astral, all of them reporting the Q4 earnings, so we'll be tracking them as well. But overall, right now, Hiral, the sentiment is still negative.
Absolutely. The sentiment is negative, but you've seen that recovery from the day's lowest levels that's happened in terms of markets. Where we end is the key. It is earnings heavy week once again. You have Skipper, which has reported numbers. Let's pull up that one on the screens and see what the counter is doing in trade, because overall, if you see in terms of the numbers, it's a very interesting set that has been delivered so far. And if I have to just take the viewers through in terms of what they have reported, it is a strong number in terms of record numbers in certain aspects. Let me just pull up that one on the screens. If you can just give me the graphics for the numbers there. Revenues up 30%, EBITDA margins have expanded as well, and the profits have gone up 62%. So that's what we're staring at. Let's get in. Sharan Bansal, director at Skipper, who joins in. Sharan, good afternoon and welcome to the show. This is Hiral on this side, and it's always a pleasure to speak to you. My question to you is, a record performance is what we've seen in terms of fourth quarter for FY26, where your quarterly revenues have hit an all-time high. Your profits have surged nearly, 70%. From here on, what is the focus going to be? Because a lot of conversations are telling us that modernization and top-line revenue growth to 15% for FY27 is what you're seeing. And that becomes balanced against an aggressive 30% bottom-line profit growth target. How are you reading into this?
Hi, Hiral. Yes, we have delivered a very good set of numbers last year. With overall 20% growth in bottom line and a 40% plus growth in 20% growth in top line and 40% plus growth in bottom line. For this year, we have guided for a healthy 15% growth in top line and a 30% growth in bottom line. This is primarily on account of lower than expected order inflows last year. The industry saw muted ordering from the central ministry, but overall we still managed to get about 5,600 crore order inflow last year, which was not bad, but slightly lower than our own expectation. However, that is still strong enough to, and we ended up with a closing order book of 8,500 crores as of March 26. That gives us good revenue visibility over the next 18 to 24 months. So that's why a 15% top line growth this year is very comfortable. The bottom line growth is more aggressive because we have been able to increase margins last year also. We hope to do that this year as well, and also bring down finance cost at the same time. Going forward this year, certainly our order inflow targets are much higher, as because we see the bidding pipeline has increased substantially compared to last year. So certainly I think going forward the next year again, we can target the 20% plus revenue growth from next year onwards.
Absolutely. I know we are talking about the new order that has come in, but the reason I wanted to ask you this question is to put things into perspective in terms of what's actually transpired in FY26 and how you're looking at FY27 with one of the orders that has come in. And we're talking about, what, 1,265 odd crores for T&D projects. Now, help us understand, when you're talking about an inflow like this right now, what is the kind of timelines that you're looking at in terms of revenue recognition?
Yes, new order of 1265 crores is a combination of domestic orders where we've secured 765 kV double circuit projects in the Pune to Loikan and Pune to Karjan area, and also some export orders in our LATAM markets. The revenue recognition of these orders would be between 2 to 3 years, and of course we have a bidding pipeline of also 33,000 crores plus, out of which we expect a significant portion of those to get converted during the year.
Right, Sharan, this is Sharad here. Of course, speaking on the domestic order front also, especially in the Eastern India, where we are seeing a lot of infra projects actually getting live back. How do you see this outlook going ahead?
Hi Sharad. We are certainly quite bullish on the Eastern India opportunity now, as you rightly mentioned, that we should see a good revival of infra projects now in Eastern India with change of government here in Bengal. That should certainly bode well for power transmission projects as well. So we are excited about those, but probably those will come into the bidding pipeline in the following year. As of now, the bidding pipeline mostly consists of projects in Western India and Southern India, which is healthy, as I mentioned. And again, we're quite hopeful of a good order inflow this year.
Okay. Sharan, in terms of the order inflow as well, you do have exposure when it comes to Middle East as well. Now, with the West Asia crisis, not only you, but sectors, I would say, across are bleeding to some extent in terms of impact. If you have to look at the order book right now, what percentage of your order book is in terms of exports and specifically regions which are under trouble? And how are you trying to navigate through that?
Yes, good question, Hiral. Overall, exports have not been very good for us last year. Our export as a percentage of our order book is just about 10%. So we and Middle East is about 30-35% of that export book. So you can say overall in our order book, maybe Middle East counts about 4%. So it's not a very big number for us. But yes, it's an important market. We certainly are looking forward to some resolution coming and the order inflows to start from that geography again. However, having said that, we are present in a number of other markets this quarter also. Among the recent orders, we also got a decent order from LATAM. We are quite hopeful of securing more orders from the African market. And of course, North America and Australia continue to be a focus market for us in terms of developed geographies, where also very interesting project opportunities are there. So the effort of broad basing our exports will continue on. And again, we are not dependent on the Middle East market per se.
So small portion, but which is growing as well. So it is going to be important for investors as well. Thank you so much for joining in, Sharan. Always a pleasure to speak to you. But moving on, let's quickly take a look at what's on our watch list. Gland Pharma. Good Q4, strong US traction, strong moves coming in on that counter. Shipping companies, GE Shipping and SCI are in focus as well. You have a Cochin Shipyard which has reported a mixed set of numbers. Hind Copper again reacting to numbers, as well as they've executed an NDA with Codelco. Amber Enterprises, their FY27 guidance is below expectations and they're expecting a dent in terms of their margins are concerned, and that's the reason why the stock is taking a beating. KEC International reacting to numbers along with the Alembic Pharma. ICICI Prudential, where Prudential will be cutting their stake to under 10% on the back of the other deal that is happening. AFCON is also under pressure because tenders worth 4,500 crores have got cancelled. You have Delivery, Power Grid, Tata Steel, all of these are actually reacting to Q4 numbers as we speak. So that's with regards to our watch list. But Sharad, over to you. In terms of the rapid fire.
Well, yes, we are joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you. We'll start our rapid fire. Now, of course, Shipping Corporation and GE Shipping make it to my list. There are a lot of volatility in the global markets. Is there any chance of good further up move in these counters, or do you think they will still stay in that consolidation range?
Very good afternoon, Sharad. Well, absolutely a very strong run-up that we have seen in both the counters. So structures still look strong as far as SCI is concerned. Shipping Corporation of India, I think it is likely to move towards 365 to 370 in the near term. Keeping a stop loss below 325, buy and decline should be the strategy. And similarly, GE Shipping, we have already seen a spurt of over 10%, so not advisable to chase the momentum at current level because the risk and reward is not looking favorable. Better strategy would be to wait for some meaningful decline, then probably it can be added for a short-term play towards 1720 to 1750.
Right, not going a bit farther from ships, I'm just talking about a shipyard company, and that is Cochin Shipyard. Your views on it? Any alpha can be made here? Of course, we are seeing some, numbers impact also coming in. But anything on the charts which is looking attractive here?
Well, Cochin Shipyard, in fact, has been under pressure since a long time. So not advisable to take any contraband because the structure still appears on a negative side from a short-term perspective. It is trading below its 200-day moving average as well. So as long as it trades below 1600, the structure appears on a weaker side for 1450 to 1400 on the lower side. So avoid taking any contraband at current level.
Right, and any trade being made for Hind Copper?
Well, see, we have seen a sharp correction in the copper prices, but the numbers were good in Hindustan Copper. So comparatively, the structure is looking better. And if at all you get any dip towards 570, that can be used as a buying opportunity. Keeping a stop loss below 540, we can expect a gradual uptick towards 590 to 600 once again in this particular counter.
Right, and your views on Alembic Pharma? We have seen a little bit of defensive buying sometime in the small cap pharma names, but especially for Alembic Pharma, any views here?
Well, as far as pharma is concerned, you have better options available. Alembic Pharma at current level is not looking that promising. We have seen some bit of short-term structure disruption. So we may see a follow-up on the lower side to continue towards 700 to 690. So as of now, it's an avoid. But yes, you have better options like Biocon, DVs, granules within the pharma pack that can be looked at. But APL is an avoid.
Infra further fall you can expect. The stock is down after the cancellation of order announcement was come in, and of course the company came out with its exchange filing and they said that overall their railway orders is still there. But do you think any further fall is there in this counter, and if yes, stop losses?
Well, quite possible that we may see follow-up on the lower side to continue. If at all it breaks 307, so that's the immediate support of 50 DMA. If that is taken off on the lower side, then the target on the lower side could extend towards 280, 260. So 280 to 260 can be seen if it breaks below 307. And on the upside, if it takes out 325, then there could be possibility of some bit of a pullback.
Right, and a weaker set of numbers from Power Grid. Do you think a little bit more fall is there, or it's going to come back to this consolidation phase?
Good part is that it is still trading above its 200 and 100-day moving average. So quite possible that we may see stock taking support somewhere around 285. And some bit of consolidation is something that we can expect. I'm not expecting any V-shape kind of recovery. But yes, in the range of 285 to 300, that's the short-term trading range we can expect counter to oscillate. But the broader structure looks sideways.
And how the positional setup looks like for KEC International?
Well, KEC positionally, the structure is looking extremely weak, kind of a sell-on-right structure. We have seen a continuation of a lower top and lower top formation as well. So looks like it is heading towards 470 to 450 on the lower side. And avoid taking any contraband because the short-term structure looks weak.
Well, of course, that's the end of the rapid fire segment, but Hiral has a list of Google trending stocks. What is the Hiral?
Let's quickly pull up what's trending. I'm sure it's a lot more than we are anticipating today, because the kind of markets that we are in, Amber Enterprises, Keynes Technologies, both of them, because Keynes was beaten down last week and Amber, which has joined the list. Godfrey Phillips on the back of numbers, Delivery also on the back of numbers, and you have a Bharat Forge, which is in focus. Anything that you like on the charts from these counters?
Hiral, in fact, whatever list that you have just mentioned, all the stocks are looking on a negative side. First of all, EMS space, Keynes, Amber, both the counters have a weak setup. And if you see Delivery, where we have seen a big crack today, so that particular counter is also looking weak on the chart. Quite possible that Bharat Forge may find some support near about 1830, 1820 zone, but still there is some more room left on the lower side. But yes, if it falls in the range of 1820 to 1800, that can be a good entry point, because we have already seen a very good run up. This looks like merely a profit taking or retracement. So Bharat Forge could be one particular counter that can be looked at on declines. But apart from that, all the other stocks are looking on a weaker side.
Okay. Bharat Forge, that's the only one. The others are all yes in a weak setup today. Thank you so much for joining in. Always a pleasure, Nilesh, to speak to you as well. But moving on, the government has actually capped compressor imports targeting the mass sub 2-ton segment that drives over 85% of the demand. Earlier today, we spoke to Blue Star's MD on this development. Let's listen into what he had to say.
Primary sales is somewhat slower than what was anticipated, because the dealers had inventory, and I had told you that they bought it in anticipation of energy label change. Subsequently, fearing huge price increase, they stocked themselves up. With the secondary movement very good, the primary sales have begun. I would say not to the expectation of the industry or Blue Star for that matter, and I would still think that it is not very bad, but it is not easy walk at all. The important factor being our ability to pass on the next level of price increase. As you're aware, 13% price hike is supposed to be affected. In fact, some 5 to 8% has happened. The balance 5 will have to happen. And furthermore, cost increase is happening due to exchange rate as well as components which are based on petroleum derivatives like plastics, etc. Therefore, it is not an easy summer. The volumes will happen, the margins will be under pressure, and it will be definitely better than last year, but I don't think we are yet celebrating anything at all.
Okay, so price hikes, but affordability becomes a concern as well. But moving on, Tata Steel's Q4 results, wherein the company saw a better quarter because steel prices have improved, sales have been strong in the domestic market, and the overseas business performance has been better than before. Jasmeet is here with us to take us through the factors impacting the quarter and the management commentary, because the stock has been under pressure today. Jasmeet, what are you picking up?
Well, Hiral, thank you for that. As rightly said, the company has witnessed a really good quarter, and even the brokerages have hiked the target price for this particular counter. Let's quickly understand what has happened in this particular quarter. Well, company did post its best ever quarterly result as per the Q4 when you look at the Indian business altogether. Further, we also note that the company also sees a higher steel realization in this quarter, further improved spread, which impacted the profit and also boosted it altogether. Now, if you look at the international business of the company, the overall UK losses have narrowed, while the Netherlands business has turned EBITDA positive, which is again a key positive for the company. Well, lastly, if you look at the net debt position of the company, which has declined quarter after quarter, and it's at low levels currently, and the free cash flow also generation remains strong for the counter. Now, when you look at the key brokerages, we have something like Goldman Sachs and Tata Steel. They maintain a neutral stance on this particular counter, while they also hike the target price to rupees 218 from earlier 210. While they see the margins were a miss as per their estimates, but apart from that, the realization uptick across regions was a key positive for the company. While the second one is Morgan Stanley and Tata Steel. Well, they maintain overweight on this particular counter with target price of 215. Now, what they say is they see a good result while good outlook. Further, they also say the company posted a strong result across both domestic and overseas business, which remains a key thing to watch out going ahead. Well, lastly, I have Citi on Tata Steel. Well, this brokerage remains a bit bearish. They maintain sell, but they have still hiked the target of rupees 200 from earlier rupees 180. While they said the overall realization on QOQ basis was strong, but in the Q1 is something to watch out for. How does the realization shape up for the company, which is a key concern?
Okay, so that's with regards to where Tata Steel goes with regards to what brokerages are making out of it. Nilesh, what are charts indicating for Tata Steel and in fact even the other steel companies?
Well, Hiral, we have already seen a very strong run-up across all metal counters. So this looks like merely a profit taking in the bull run, and quite possible that we may see some consolidation before we see another leg on the upside. But yes, having said that, the broader structure continues to remain bullish. We are still very much constructive on metal index as a whole. So we expect Nifty Metal Index to move towards 13,500 to 13,800 in the near term. So today could be a good day to make a fresh entry, keeping a stop loss below 200. Tata Steel can be added on declines for a potential target of 220 to 225.
Right. Interesting company, ICICI Pru Life. Let's get that on the screen as well. The stock is taking a pressure, and of course the news flow is that Prudential PLC, the UK insurance company, will be acquiring 75% stake in your Bharti AXA. But why this is important is because already you could say Prudent is having 22% stake in ICICI Pru Life, and as per the IRDA norms, they have to get their stake below that 10% mark. So because of that, it's sentimentally negative and the stock is taking a beating. Nilesh, a further downside in this stock, or do you think it's a good time to nibble in?
Sharad, interestingly, today the counter has taken a very good support at 488. And we have seen a similar kind of low that was made in the month of April this year. That was somewhere around 490. So a kind of a double bottom pattern looks like shaping up. And if it breaks below 488, then only we can expect a further downtick to continue. But as of now, looks like a relief rally is something that we can expect towards 520 to 530 on immediate basis. But the broader structure, however, is not looking promising. Even though if we see any pullback, that might get sold into, because it has major resistance at 560. So it is important that it should take out 560 level. Then probably we can expect a short-term bottom. But yes, from current level, we can expect a relief rally.
Okay, so that's with regards to where ICICI Pru goes. But moving on, Amber Enterprises, that came in as a surprise with the way earnings had panned out. The stock is now down nearly 14 to 15%. Now, the EBITDA actually beat, street estimates, but that was mainly driven by the consumer durable segment. The electronics division performance was weaker than expected. However, if you talk about FY27, that's what the street is not really happy about, because the guidance has been lower than everyone was estimating. Electronics, while FY27 growth has been seen at 30 to 40%. The key drags have been, one, your FY27 guidance. Second, the margins are expected to be softer in FY27, and that is what the management has indicated in the conference call. And that's the reason why you're seeing that downtick. In addition to that, if you talk about the stock, if you pull up the intraday or even a 1 month or a 2 month chart, it's actually run up 11% ahead of earnings. So that's the reason why negative news has led to this kind of a reaction in terms of the stock price. And if you're talking about higher valuations as compared to peers, that has been another concern that the street has been looking at. So all of these factors have not really worked in favor of Amber Enterprises, and likewise, you've seen what happened to Kaynes Technologies last week as well. You pull up a PG Electroplast, you pull up Sirma, because Sirma numbers were pretty decent at the face of it. So all of these companies, along with the Dixon, have been in focus in the last couple of trading days. In fact, let's also listen into what the management had to say.
Whereas other contracts like defense contracts or telecom contracts or the data center air conditioning contracts, which are now getting signed, those are the contracts which have gotten pass on through. And that's the reason why we gave a just update to everybody that this is temporary, of course. You would have seen in last 7 years we have been able to pass on. And we will continue to pass on, but since it is momentary, but we thought that it's our duty to inform everybody that next 1 or 2 quarters you should see this hit coming in.
So that's with regards to where Amber Enterprises goes. Nilesh, how are you looking at the EMS plays? Because there is a major downtick that's coming across the spectrum. Are you seeing any strength that could be building up from here on with the kind of corrections that we are seeing? If you talk about Amber, you talk about Keynes, PG Electroplast, Dixon, Sirma, anything that you like, or any sell calls there?
Hiral, first of all, within this space, we have already seen a very good, in fact, outperformance in Amber Enterprise. But if we see today's action, we have seen a crack post numbers. And with that correction, the counter has broken below is 200 as well as a 50-day moving average. So the overall broader structure across all EMS counters, be it Amber, Dixon, Keynes, or Sigma. So overall, the setup looks sideways to negative. So no contra bet to be taken at current level till the time we see any sort of a reversal signal on the chart. But overall, we expect some consolidation to continue. The weakest counter looks like Keynes and Dixon. Both the stocks are still looking weak. One can go short if at all you get any pullback. So sell on right structure in Keynes and Dixon. But on the other hand, Amber is still looking better place. And as long as it holds above 7,000, there could be possibility that we may see a pullback move towards 7,500 to 7,700.
Right. Apart from that, let's talk about delivery also. Largely, the numbers looked decent, but if you get to the details about it, there are a lot of adjustments there, and Street is not liking that, and that's why the sell-off is happening in this counter also. Nilesh, your final views, a quick view on this counter. Do you see this to, fall more here, or it's a good time to lap up?
Sharad, if you see in last 1 year, counter has faced multiple resistances at 490 level. So 490 is acting as a steady wall. And a good part is that even after today's correction, the counter is still trading above is 200, 100 and 50-day moving average, which are placed in the range of 440 to 430. So as long as it manages to sustain above those levels, there could be possibility of some bit of rebound going forward. And if it breaks below the same, then only we can expect a follow-up on the lower side to continue. But at current level, if somebody is already holding the long position, can keep a stop loss at 440 and stay put for a pullback move towards 460 to 470.
Thanks a lot, Nilesh, for that, joining us and giving your important views on it. But folks, we are out of time right now. And from me, Hiral, and the entire team which has put together Trending Stocks, it's a buy. Keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come.
Benchmarks take cues from weak Wall Street handover, high oil prices and uncertain geopolitical backdrop. Nifty hovers close to 23,600. PSU banks and defense remain the biggest pain points while IT remains resilient. Meanwhile, oil is on the boil yet again. Brent above $111 a barrel, WTI close to $108 a barrel, as well as tensions with Iran escalate. This after US President Trump sharpens the warning, saying the clock is ticking on a deal to reopen the Strait of Hormuz. Elevated crude prices on rising supply drag Indian oil marketing company stocks as well lower. Voda Idea under pressure despite Aditya Birla Group's plans to invest $500 million in Vodafone Idea. The telco said that the board approved issuance of fully convertible warrants of 4,730 crore rupees on preferential basis. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. In fact, Nifty is very close to day's highs as well. You've seen a sharp recovery coming in the market right now. And when you talk about Sensex, that's also, back in the green right now with that 50-point uptick also coming in. So that's Sensex for you right now. But when you talk about the entire sectoral picture, that's still very sharply tilted in the favor of red. So when you talk about PSU banks, those are your top sectoral losers in terms of the sectors: defense, auto, realty, energy, metal, all of these, including oil and gas, on the back foot, with OMCs also under pressure on the back of elevated crude prices, with Brent hovering close to $111 a barrel. When you talk about Nifty IT as well as pharma, those are the only two sectors holding on to some bit of resilience, especially IT, with that 2.5% also uptick coming in for the index. Now, when you talk about the entire Nifty 50 complex, when you talk about the entire losers from outside the Nifty 50 complex as well, you're looking at something like an Amber Enterprises, KC International. But when you talk about the Nifty 50 complex as well, Power Grid, Tata Steel, SBI, Trend, and Eternal, those are some of the counters that are on the back foot. Now, what's doing well for itself is something like a Tech Mahindra, Bharti Airtel as well. Now, in terms of the market cap as well, it's won the race versus HDFC Bank's second most valued company. That's Bharti Airtel for you, with that 2.5% uptake also right now. And Infosys, JSW Steel, Wipro, HCL Tech, also some of these other counters that are in focus right now. But with that in mind, let's also get you a very important update and talk about the entire silver complex as well. Talk about silver prices, but also the news and developments on that front, because within days of levying high customs duties on precious metals, the government imposed import curbs on silver. Rishabh Bhatnagar standing by with some more details before we get you some more insights.
Absolutely. You have yet another step that has been taken by the government in order to tighten the import of precious metals. And this is, of course, with the forex concerns that have been raised with respect to the war, of course, being the context of all of this. You have the import of high purity silver bars that has gone from free to restricted now. This essentially means that importers will have to require licenses and approvals to bring in these specified silver products into the country. And what essentially this is that this move covers roughly more than 90% of the silver that actually ends up entering India. So this is a massive move in that sense, and a lot of the free movement of the silver metal will now be restricted. What we're also seeing is, of course, that this is a part of, this is the next step after the import duty was hiked from 6 to 15%. You already had a 9% duty sort of arbitrage that the importers already have to pay. But on top of that, there are additional licenses and approvals that are required now. What we're picking up is that there was a similar move for gold imports as well. gold imports were brought in by DGF to sort of more tightened monitoring to check whether anything that's entering is also being adequately used. So that's what we're seeing when it comes to silver as well. Remember, India imports 80% of its silver requirement. Key supplies obviously coming from the UAE, UK, as well as China. So these will be the impacted geographies when it comes to imports. So that's what we're picking up on the latest move by the government when it comes to curbing the imports of precious metals and also the related forex concerns.
No, absolutely, and thank you so much, Rishabh, for putting all of this into perspective. As promised, let's also listen into a slice of the conversation that I earlier had with Kishore Narne, head commodity and currency at Motilal Oswal Financial Services, where he talks about all of this, the impact of all of the curbs, the couple of curbs coming in when it comes to silver, the demand picture, as well as the alternatives, and how do they stack up. What do you think about the latest two curbs that have come in? Number one is the import curbs that you have, and the movement of free to restricted category import status. That's also something that is definitely making it to investors' radar. How are you reading into two of these changes?
Good morning, and thank you for having me. I think the first thing is when the government changed the duty structure because of a significant outflow of forex from the precious metal sector. I think, silver demand surged significantly last year as both gold and silver due to the safe haven demand and overall kind of an investment drive which went through. So typically when India imports around 4,500 tons and around $4.5 to $5 billion of worth of silver. So the year which we closed in March, our imports were close to around $12.8 billion, which is around 150% higher than average. So naturally, their government was worried about the forex, and so the duty has been increased. So which created an arbitrage opportunity. So there is a significant duty difference of around 15%, 16%, which generally drives significant arbitrage for people who are actually doing imports through SEPA route, through IIBX, etc. I think to curb that, actually, government went on to put restrictions, which actually give them a direct control on the quantity of the silver imported at any point of time. And definitely they want to allow the legitimate imports for the industry purposes who could be the legitimate users. They can go through the banking route through an approval process. So that they would be addressing. There'll be a little bit of paperwork, but I think that still is not closed, but routed through the government agencies.
No, absolutely. And just to give the viewers a little bit of context into what Mr. Narne was also talking about, when you talk about the month of April itself, you're talking about silver imports jumping about 157% on a year-on-year basis. So that's definitely something that this particular curve is going to be acting against. But, what's consequently also going to be happening, Mr. Narne, is that the demand might stand to get impacted. How are you really penciling in that impact as well?
See, demand is two segments. So one is the industrial demand and the investment demand. So, silver is not particularly fancy with the jewelry segment, but it's basically an investment kind of demand. So that's a smaller sector. So around 68% of silver is into industrial consumption. Either it is photovoltaic cells or EVs or renewables, and some of these green energy sectors consume a lot of silver. Some of consumer durables consume a lot of silver, and the electronic sector. I think these are the three primary sectors where silver is consumed. And our production is much lower, and we rely on imports for around 78 to 82% of our consumption. So definitely, the industry needs them, and the government wants to address that, segregate these two demands. They want to discourage the investment and speculative element of the demand, but at the same time keep the legitimate industrial usage in the check. And probably when the duty is misaligned, especially when we have around 15% duty difference between the global price and Indian price, there is a lot of illegitimate sources also could be coming into play. So probably government wants to also monitor that. So at the same time, continue to be having a little of pressure on the investment demand. So that's where this thing again, compared to gold, silver is much smaller as far as investment is concerned on the quantity or even the value front also.
No, absolutely. And, just taking a leaf of what you just said as well, when you talk about the industrial applications, do you think that this is going to be causing a seismic shift in the way that, companies really approach industrial applications of silver? Because it's got applications across sectors. You're talking about solar, you're talking about batteries, EVs, water purifiers, and a whole host of these, right? So given that the prices are also really rising now, and you do have that entire import curve picture also being coupled with that, do you think that there's going to be a seismic shift in terms of the way that we look at all of this?
I don't think there will be a large shift because what we call is thrifting demand, especially the demand which we lose for the price. So if you go to solar, the photovoltaic cells, typically the amount of silver used in a typical solar plate has come down from around 40 grams, 45 grams to around 25 grams now. So typically what they do is the application layer of silver, the quantity of the silver apply is being reduced with an improved technology, with improved application techniques, etc. But actually you cannot replace silver with something else in these uses. Coming to EVs and some of these electronics, silver brings unique qualities to the product. Actually, the amount of electric resistance silver has, the remaining metals will not be able to do. In some of the large applications, in few places like mirrors, etc., the aluminum can replace, but silver is not really replaceable. But the amount of quantity of silver used, especially in, as I said, consumer electronics, etc., could be reduced. But I think most of these applications have been done in the last 3-4 years, where the silver prices went up actually, and companies improved their ability to reduce the demand usage of silver. And I think more or less that is now done, and you will not be able to replace a significant amount of silver. Maybe around 10-15% of low value applications can go away from the usage.
Yes. No, absolutely. And just very quickly before we let you go, just wanted to get a quick check in terms of where you see prices headed. Are there any levels that you're watching out for, or any trajectory that you're really mapping out here?
I think, as far as price is concerned, in our Indian markets, actually, we have not seen any impact because India doesn't decide prices of silver and gold both. So we are typically price receivers. Globally, it will have a slightly negative impact because India is such a large country to import both gold and silver. So the approach of the government actually sends negative signals, and also to some extent this lower investment demand actually brings down the whole demand. So short term, again, there is no impact of this current news on the prices, but I think overall the prices will be in range bound territory for the next couple of months. The biggest factor which will influence whether the precious metals price will go up or not is going to be the interest rates. The new Fed chairman is taking over. How fast he'll be able to address this. Second is, if the inflation is going to be sticky and longer it's going to play, probably the rate cuts might not be expected very soon. So that actually is a much more negative for precious metals than this.
All right, then there you go. So that's a word coming in there in terms of range-bound price levels that you should be expecting when it comes to silver prices. Of course, there's no impact coming in from this particular import curve, but that's not much of an impact, at least that's been penciled in right now. But let's also move on and talk about oil prices. Oil is climbing yet again. You're looking at Brent above $111 a barrel, as you can very clearly see on your screens as well. So extending last week's surge really as tensions with Iran stay elevated. Even now, the war premium seems to have re-entered the barrel. And when you talk about Trump, he's turned up the pressure, warning Tehran that the clock is ticking on a deal to reopen the Strait of Hormuz. So you do have oil that is surging right now. But with that in mind, let's also move on and talk to you about Solex Energy. Now, that particular counter is in focus on the back of a decent set of numbers. You're looking at a sharp revenue uptake. And let's connect with the management to talk a little more about the earnings fine print and the growth roadmap going forward as well. Chetan Shah, Chairman and Managing Director, Solex Energy, is joining us on the show right now. Mr. Shah, very good afternoon to you, and thank you so much for taking time out and joining us. First things first, I wanted to try and understand what you think about the key levers for this sort of sharp revenue growth that you've seen this quarter.
Good evening and good afternoon. So basically, this year we had, expansion in our production capacity across all the manufacturing lines. That was one of our key levers. So with expanded capacity, we have been able to produce more, and which resulted into the revenue. We are focused on a faster ramp up and stabilization of newly commissioned production facilities to improve operational efficiency and output. That was one of the factors. Strong execution of our existing order books. So that was one of our key in very challenging period, we have been able to execute all our major orders in this financial year. The total revenue for FY26 stood at 1621, that is 1,621 crore, registered a robust year-on-year growth of 144%. So looking ahead, we projected revenue of approximately 2,600 crores for FY27, supported by the capacity expansion, increased market share, and the maximum utilization of capacity. So basically, if I have to answer in one line for the revenue growth, is the utilization of our expanded capacity at the very highest level.
Right. Mr. Shah, this is Varsha, this side, pleasure to have you. Sir, the last time we spoke, we were expecting around 1,700 to 1,800 crores of revenue in FY26, though it came around 1,618. Now, according to your investor presentation, you're targeting 4x revenue growth in FY27. Just wanted to understand what gives you a confidence of achieving the 4x growth when it comes to 27. And second question will be, of course, margins. Will you maintain net margins at around 6 to 8%?
Yeah, so basically for FY27, our target is 2,600 crores, which currently we did previous year we did at 1,621 crores. So basically, current geopolitical situation, we are just little bit being very conservative on a conservative side, and we are cautious in terms of giving our internal targets are very high. But for the sake of considering the geopolitical situation and all the safety clause concern, we are targeting 2,600 crores. But yes, we will be able to maintain our margins from 6 to 8%. This is what we have projected last year also. So we have given 6+% PAT, and next year also we'll be in between 6 to 8%.
No, absolutely. And I also wanted to get a sense of what you think about your order book as well going forward. You seem to have great visibility there. Talk to us about that as well. Give us some more color.
So we are majorly operating into the IPP, independent power producer segment. And so we do have a clarity on our production and the execution of orders for quarter on quarter. So the quarter 3 and quarter 4 for FY27 will be very high. Quarter 1 and quarter 2, as usual, it's a monsoon season, so it will be on the lower side. So we are very conservative on Q1, Q2, but Q3, Q4 will be very encouraging. And we do have a clear visibility for the order book and execution. And this will be 3,600 crore orders which we do have it. So out of which in this financial year, we will execute order almost about to the tune of 2,500 crores.
Right. And now this sounds promising, but when does this starts actually contributing to your revenue? And what proportion of revenue are you expecting in a percentage term when it comes to BESS?
So if you are basically, when it comes to the previous year performance, you have seen that we have done 800 plus crore revenue in last quarter only, Q4 only. So it was because of the extended monsoon that we had last year. This year also we are keeping those provisions, but like Q3, Q4 will be the major contributor to our revenue for about a target of 2,600 crores.
Absolutely. And thank you so much for taking time out and joining us this afternoon. So there you go. That's the entire roadmap as well going forward when it comes to Solex Energy. Now, they did have a very good quarter, and going forward as well with their Vision 2030, it does look good for them with the stock as well, 5.5% uptick there. when you talk about this particular counter. But let's also talk about the word coming in from the SEBI that is stepping up its guard as AI tools really evolve and new risks emerge for market systems. In fact, the chairman's also talked about the primary concern that is not AI per se, but the cybersecurity vulnerabilities that it could expose, warning that any breach in market systems could pose a serious threat when it comes to market integrity. Let's go across and listen in to the word coming in from the chairman, Tuhin Kanta Pandey.
No, the AI tools which are there mostly recently have come, that is in relation to the cyber security. So if the markets have, as you know, everyone has a software, and if there are certain cyber security is threatened, that means if vulnerabilities is found in the software very, very quickly, then, there is a problem that we will be attacked, and those attacks may be successful, then that is bringing risk to the market integrity. So proactively we have to see that whatever the softwares we are deploying, even through third-party vendors, they are protected. There is an aggressive patch management, aggressive use of conventional tools to find that if there are any vulnerabilities that exist, they should be immediately patched up.
All right, and there you go. So that's the word coming in as far as the AI threat is concerned. But let's also talk about a major move after the government approved 100% FDI in insurance sector. British insurance giant Prudential PLC is going to be acquiring 75% stake in Bharti Enterprises for 3,500 crore rupees. And you're looking, is this a precursor to growing interest of global players in Indian market? Now, will this really impact ICICI Pru as well? Manas Agarwal, research analyst, vice president, Sanford C. Bernstein, joining us on the show right now. Thank you so much, Mr. Agarwal, for taking time out and joining us this afternoon. First things first, I wanted to try and understand what you think about all of the changes that we're seeing coming in this particular space and this particular deal as a whole.
First up, thank you for having me. On your particular question, I think Prudential has been in India with ICICI Bank in the ICICI Pru Life entity. They've faced struggles in terms of growth and value creation because ICICI Bank has, for various reasons, reduced their distribution support. So I think this is Prudential deciding that I want to take money off the table in their existing exposure, take a new exposure in a smaller entity where they get control. They're not at the mercy of their partner, and therefore continue to have exposure to the India market, but have more control from an operational perspective and take some money back to the holdco level.
Good afternoon, Manas. This is Sharad here. So this is one of the first deals, or the announcement after that FDI increasing from 74% to 100%. Now, how does this change? Earlier there were JVs. Now outright ownership is coming in. Do you see this trend going ahead?
So we've heard about a lot of foreign insurers now exploring India from a new entry perspective. I think the big touching point was that they were not able to exercise control. So if you see this deal also, right, they've taken 75. Why that is important is then the other shareholder is at 25, and there is a difference between 25 and 26 in terms of 25 is not able to block any meaningful proposal. A 26% shareholder can enforce some amount of control or rather veto. So I think this does open up room for more control deals from global life insurers or global insurers in general. So we do expect more and more interest how they solve for distribution without a large local partner. Probably in this case, the answer is Bharti. But there's a reason why historically we've seen banks partner with global insurers. So that will be interesting to see.
We have heard about it. A lot of instances are there, historically speaking as well. But what makes this space very interesting, from a point of view of an MNC, looking at India's insurance segment? And I'm just not talking about the life insurance, I'm talking about health insurance, even asset management. How do you see this space going?
Sure. So I think India is still in its nascent stages of product penetration, be it asset management, be it insurance of health, non-health, whatever you may look at it. So they see the opportunity size. It's now a large enough market for them to operate in. They see potential growth and value creation over the longer run. How they crack distribution is the question, because we've seen asset managers at least come in without JV partners and not succeed. Asset managers who've come in with local partners in a JV have succeeded. And insurance as well, we've seen banks plus global players, JVs, do well. IPRU Life was probably an example where the bank withdrew full support, and therefore we've had some issues, probably reflecting in where Prudential has taken this step to take a 75% stake in Bharti AXA General.
Right, we discussed about that, but historically speaking, there have been instances also where the foreign MNCs, they do change their partners and they go in somewhere else. Also, we have discussed about Alliance, how things have moved, and also, AXA as well. So how do you see this? Is there a little bit of uncertainty also comes in because now the rules are changed? So can we expect a little bit of shake-up already existing in the Indian space?
I think that is a theoretical possibility. I think the two large players who had concerns around control, based on whatever the media has reported in the past, were Allianz and Prudential. Both have juggled their India exposure in some shape or form. So I think for now, nothing that is expected. But can more players take this approach? That is a possibility. In terms of the life insurers, if I was to go through, most of the foreign partners have already exited in the listed entities. Generally, you still have partnerships, but they seem like stable partnerships. So hard to envisage, but is it possible? Yes.
Yes, and of course, there are some changes also happening in the accounting, the way the movement is happening for the insurances, and we are trying to become as close as possible to the global standards also. So is that also coming with a very positive, momentum for these insurance companies as a view from the MNC?
It obviously helps. It's not that the India businesses were not reporting IFRS compliant numbers to their parents for either internal reporting purposes or consolidation purposes. But yes, it does help that accounting in India and outside India will not be as different as it is today. I think investors also need to understand that a lot is going to change in terms of accounting, and that may not have an impact on their assessment of profitability / valuation for a lot of these listed franchisees.
No, absolutely. And thank you so much for taking time out and joining us this afternoon. So there you go. That's what this deal really means. And that's how you should be looking at the entire insurance space as a whole as well. That's all the time that we have on the show, though. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. what happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But before that, first let's see what's on the show today. Firstly, we'll be speaking with the management of Hester Bioscience. If you look at the company's EBITDA and PAT growth, it was led by the poultry division, and a consolidated performance was also quite good based on better operational execution. When it comes to KD Green, that is one counter that remains in focus. The stock is down nearly 21%, but the company is targeting a big domestic volume push. What could be the way forward is something that we'll try to decode with the fundamental guest on the show today. Finotex Chemical also continues to remain in focus. The stock is up nearly 26% in the last 1 month. Oil-filled business is fueling the growth for the company in the fourth quarter, and the domestic demand continues to remain quite strong for this counter. And lastly, we'll be also speaking about Sakar Health, given the fact that the company has reported a strong Q4 numbers, and apart from the oncology department, which has led the growth, which were the other factors that aided the company in the fourth quarter of FY26, is something that we'll get to you on the show today. Now, if you look at the market, a stellar recovery from the day's lowest point. The day's low was at around 20,300. Currently we are sitting around 23,600. The 650-700 level is acting as some resistance, but again, a stellar recovery from the day's low point is something that we have seen when it comes to the benchmark. If you look at the sectoral indices, the PSU names are struggling in trade. The consumer durable, media, PSU bank and the PSU index are struggling in trade. But on the gainer side, we have Nifty IT, Nifty Pharma and the private banks that have actually led the gains even for the benchmark index in trade today. But Varsha, when it comes to the small cap names, which are the key stocks that are buzzing there?
Well, let me start with one which is actually buzzing on the back of good volume, I would say. This is GC Ventures. If you see, the volumes are trading at around 14 times of its 30-day average. The stock is up almost 16 to 17%, if I'm not wrong, in trade today. Well, also, Jindal Reel is also in focus. Again, buzzing on the back of volumes though. Responsive Industries is also up. There you go. Jindal Reel is up almost 12%. Responsive Industries, if you can, it's up almost 9%, of course, on the back of volumes. Finotex Chemical is buzzing on the back of strong, Q4 numbers that the company has seen. Good growth over here. Stock is up almost 18% in trade. Even Sakar Health, well, an interesting play because this company is moving towards, oncology segment, which has a higher margin, and hence market is actually, very bullish when it comes to this counter. Strong Q4 numbers as well. The stock is up 7% in trade. While on the loser side, though, you have Bajaj Electricals, which is, sulking in trade, I would say. Again, you have Bodil Chemicals, which is also under pressure when it comes to this, small cap segment. Well, it's up almost 2%. It has gained that. Well, SH Kelkar is also in focus, and Garuda Construction is also in focus when it comes to pressure. Garuda is down almost 6% in trade. So, a lot of companies are actually buzzing on the back of volumes, I would say. But one stock which actually I was talking about is Sakar Health, I would say. Please pull up that chart. It's up almost 7%. Now the Q4 revenue, first let's talk about the Q4 revenue, which was driven by oncology growth and demand traction. Of course, sequential growth was stable with steady execution across markets. Onto the key drivers. Well, this company revolves around CDMO, own brands, exports, and also licensing. And the key drivers were for Q4, of course, the oncology business, which emerged as a key growth driver with rising scale. There was a strong demand across geographies, which boosted revenue growth, and the improvement in the operating leverage was also, on a I would say positive side. The oncology is a core story when it comes to Sakar Health, and hence investors are betting on this segment because if you see, this is the main growth engine. But overall, Sakar Health is buzzing in trade. But one stock which is in focus is of course Tata Steel. A good set of numbers, but our colleague Nisha spoke to the management on the growth prospects. Do listen in.
All right, Tata Steel's numbers are strong set of numbers and all-round improvement when it comes to the global business as well, while India business, which is the largest and the heaviest part of their overall portfolio, that remains strong. Let me welcome on the show the management, Mr. TV Narendran, joining in from Tata Steel to give us more sense about this quarter and the quarter that we are currently in. Mr. Narendran, always a pleasure to speak to you. Now, congratulations on a good set of numbers, and there is all-round improvement as well. But how much of it really is coming in because of the global uncertainty and metal prices going up, and that really impacting the realizations per ton even in UK as well as Netherlands, while India remains strong?
Yeah. Thanks, Nisha, for having me on the show. Yeah, we are in an industry which is always buffeted by geopolitical events, trade issues, etc. And we've had a fair share of challenges over the last few years. So we had actually focused on our operational stability, our cost takeouts, and a lot of that is manifesting itself into the numbers that you've seen. So while we've been helped by prices, I think the cost takeout targets that we had indicated at the beginning of the year, which was about 11,500 crores, is pretty much on track. I think we did about 95% of that. So that certainly helped. The second thing which has helped is Europe taking action to protect itself, because Europe suffered because of the trade actions by the US and also because of imports coming into Europe from elsewhere. So they've brought in quotas, they've brought in safeguard duties, and now more recently announced the CBAM, which will take effect later this year. UK has been a bit late in putting in safeguards and quotas, but I think they did that in March. So both in UK and Europe, we've seen prices go up in the last quarter, which is good. And in India, of course, prices had been creeping up since December. It had gone back to the levels that it was maybe a year back, and now it's looking slightly better because, again, there are cost pressures on the industry, so industry is trying to pass on some of those costs. But the weaker rupee and China steel prices going up a bit in the last 2-3 weeks has also helped reduce the threat of imports into India. So overall, it's been positive. The demand has also been good in India.
That's right. And when we talk about realizations per ton, can you give us a breakup? Because now looks like, Mr. Narendran, that, steel globally, even though the prices are really driven by global prices, but then the factors impacting each of the areas are really becoming much more regional at play. When we talk about UK, Netherlands and India, would you agree with me and give us a sense on the UK as well as Netherlands business as well?
So yes, what you're saying is right, because I think each geography, which is a major consumption center and has local production, is trying to protect itself, right? Started with the US, and now you're seeing that happen in Europe. Europe, maybe 3-4 years back, was really not so bothered about imports coming in from elsewhere. But now they want to make sure that they have a strong steel industry, because they want to focus on investing in Europe, on infrastructure, on defense, etc. And they want to have a local manufacturing industry and a local steel industry. Same with the UK. So you are seeing both the governments in UK and in the EU and other countries in the EU taking action. So what you're saying is right. I think there needs to be, and there is emerging regional strategy, which basically is making sure that what we call Atmanirbharta, or what they call strategic autonomy, is preserved, so that local industry is strong and is available for the local government. And we see that in India, we see that elsewhere. So I think that's a positive trend for the industry. But, on a longer term, I think what sometimes people don't realize, if you look at steel prices today, international prices, it's still less than $600, which was the price 15 years back. So this is an industry which operates, in a very, very difficult environment. And 15 years back, steel prices, hot rolled coil prices were $600. Today, it's less than $600 in the international market.
So, Mr. Narendran, you made a very, very valid point. I think very long back, 2 decades back, you had bought Chorus at a higher price than $600 per ton, probably. Yes, please go on.
No, so that's the nature of the industry. So we always have to be competitive. People always say steel prices are going up compared to the lowest steel prices that they've seen. But when you look at it as a long-term average, it's been pretty, it's cyclical, but the average has been pretty flat. So I think that's the nature of the beast for us.
Right. When it comes to UK, the narrowing of the losses, how sustainable is that, and how do you see the break-even point now turning positive? And second, from the UK point of view, also the FTA agreement that the Indian government has signed, what is the benefit that Tata Steel can have? The 2 points on UK business.
So UK, we expect things to keep getting better quarter on quarter. So we saw it get better year on year. We were still negative EBITDA, but about 150 million pounds better EBITDA in FY26 compared to FY25. Quarter on quarter, we saw an improvement, and you will see Q1 better than Q4, and you will see Q2 better than Q1. More specifically, we expect it to be break even certainly by Q3, and we're trying to see if we can be EBITDA break even by Q2, given that the steel prices have got better. The FTA, honestly, for us as Tata Steel in the UK, we were more concerned about the quotas that the UK government would have. And I think that's positive for us, because what had happened in the UK is while the consumption of steel dropped, the quotas were where they were a few years back. So the import quotas were larger than the consumption of certain products. And that was a point with the UK government which they've addressed. So the UK-India FTA, for us, is not a big thing from India, but the policy action taken by the UK government is helping us in UK.
Right. And what is the outlook on the picture in Netherlands when it comes to uncertainty around it and even the price points?
So the prices are positive. There is some uncertainty because of the regulatory challenges that we are facing. But, as I've highlighted in the past, the Dutch business has always been self-sufficient. We've never had to support it from India in the last 18 years. All the support from India has gone to the UK business. We expect the Dutch business to continue to be that way going forward. Maybe the margins will get a bit compressed compared to what we were expecting because of some of the regulatory impact, but it will always be EBITDA positive and can take care of itself. I think the key point is investing for new facilities. That will depend really on how do we see the regulatory conditions for the future and the conversations we will have in that context with the government, as well as the support that we can expect.
Right. And finally, Mr. Narendran, of course, Indian market is a very competitive market, and your close competitor has also laid out an expansion plan to become one of the largest production in steel in the world. How are your expansion plans? I see only brownfield downstream.
Yeah. So, I think one is the Indian market is growing. There's space for everyone. Each company will have its own strategy. We want to be, rather than overall market share, we're looking at specific segments where we are number one and we want to be number one. We will invest in product mix, invest in downstream, invest in our costs, the whole value chain. So some of our acquisitions, whether it's Tata BlueScope or TMLL, a logistics company, all that is focused on how to manage costs better, how to manage the product mix better. So we will be a bit nuanced in the way we look at it. We have the optionality because of all the sites that we have acquired and built. So we have the optionality even today to go to 45 to 50 million tons. If the Maharashtra project takes off, that will add another 5 to 10 million tons to our optionality. So the optionality is there, but the pace of growth will depend on multiple issues.
Yes.
And will be more and more focused on downstream, value added, high-end markets. and look at number one market share in all those segments.
All right, Mr. Narendran, I already see some chink in the armor. It has been a very intensely competitive space, and I see that coming back in some time. Thank you so much, and all the best for the next quarter. Thank you.
Thank you. Thank you, Nisha. Thanks.
Well, this was Tata Steel outlining the growth prospects for next 2 to 3 years, I would say. But Sakar Health, as I was speaking about, well, the core driver for this company is actually the oncology, which people and investors are betting on. The oncology margin, if you see, are 2x more than the general formulation, and they have 55 oncology molecules developed, 32 are ready for launch. So, quite growth people are expecting when it comes to Sakar Health. But Avinash, welcome. Let's actually welcome Avinash Gorakshekhar, who is the founder and head research at Avinash Mentor Research Services. Avinash, welcome at NDTV Profit. I was just speaking about Sakar Health. If you see in the past 2 days, company has given good returns to its shareholder, and oncology growth is the next leg of growth for the company, is what will drive company further. Just wanted to understand your view when it comes to this counter, considering of course the fundamentals and the huge run up that the company has seen. Is it right time for the new investors to enter in, or you should sell off your position?
No, I think, Varsha, Sakar has been one of our old recommendations, and we had actually bet on the oncology project. Clearly, operating leverage now seems to be coming out from this project, which, in the last 2 years, the company has invested more than 150 crores here. And I think they've also decided to, outsource and give their, patent to a European company also. So that's probably the reason the markets is very excited that probably FY 27 and 28 are going to be very strong years in terms of profitability. As everyone is aware, oncology enjoys EBITDA margins of almost 30 to 35%. And it's a very strong domain where Sakar has spent a lot of time in developing the modules and putting a world-class facility. So my sense is, somebody who's buying the stock now should take at least a 12 to 18 month view. The stock has risen significantly. So I think a significant upside can happen only once we get the FY 27 and 28 numbers. So till that time, the stock will consolidate. The stock has moved up from almost 640 to almost 745 in a very short period of time. So I think many large institutions, large, ultra HNIs have now started buying it. So the going is definitely good, but I think one should buy it in a staggered way to get a better risk reward over the next, say, 12 to 15 months.
All right, understood. Well, viewers, it's time for a quick break. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal.
Welcome back. You're watching Small Cap Buzzers. Let's start our first conversation with Rajiv Gandhi, the MD and CEO of Hester Bioscience. Sir, a stellar fourth quarter is what we are looking at. From 13 crore, EBITDA has jumped to 37 crore. What aided those factors? From what I can see, it's the poultry division which has led the growth.
We have had a good quarter, and that has, of course, made the whole year even look good. The poultry division has definitely done a good business. At the same time, there have been many other factors which have led to this high profitability over here. The product mix. We've been focusing since the last 2 years on changing the product mix so that we are more trying to sell products which are of higher profitability, etc. So that's something which we have done. And another thing also, that there have been many internal changes which we did make along the year, and everything has culminated into a good Q4. Internal changes in leadership team, as I said, product, relooking at the product portfolio, looking at certain geographies within India, pushing a little bit on the exports and the tender business. So it's a basket of things that has led to all this to happen in Q4.
Right. Mr. Gandhi, hello. Varsha this side. Welcome at NDTV Profit. You know, FY26, there were some concerns when it comes to tender-related delays, I think, in your animal health business.
Yes.
Just wanted to understand, how is FY27 looking like? If you could give us a ballpark number of your revenue, which you are expecting in FY27, and of course, what will be the margins that investors should expect?
Rather than talking on the top line, I would like to say that as far as the bottom line is concerned and the percentage is concerned, we are confident of at the least maintaining this percentage, of course, with a growth also in the top line. But my commitment is more towards the bottom line. Coming to the tender business, which you first mentioned, Hester Biosciences supplies the PPR vaccine against the immunization of PPR against in sheep and goat in India. And the tender procurement by the government of India was a little slow, which led to a whole delayed business picking up in Q4. We have already got the new tenders, for which the supplies will start from this quarter itself. And this year we see a much better growth as far as the tender business is concerned, as well as the trade business.
100 crore top line, I believe this is for the first time that the company has managed to achieve this, or must be at least after multiple quarters. Can we expect similar run rate even going forward, sir?
It is our endeavor to keep this run rate and even better it. What I commit is in the bottom line, yes. In the top line, the least is that we will be at the minimum as what we are in the top line. But I'm reasonably sure we will be able to better this.
Then, given that you are giving some commitments, I would want to ask, what is the internal growth targets that the management is eyeing for FY27?
Well, your questions are absolutely too specific on the growth rates. And we have had 2-3 years with which we have struggled a lot. And I can express my confidence in taking it forward. And at a minimum, at least I think we would have a 15 to 20% growth.
All right, so 15 to 20% growth. Sir, but okay, I know I'm stretching this point, but you said 15 to 20% of growth. But if you see your bottom line, which has doubled from FY25 to 26, so I mean, are you expecting doubling of your
percentage? Yes, the percentage of the bottom line would be at the least what it has been shown in this financial year, for sure.
Understood. And also, sir, I just wanted to understand the product mix. So, almost 70% your revenue was from poultry business. Now, considering the animal health also, where you want to take that contribution to?
It is our endeavor that both our divisions contribute more or less equally. In fact, we are even looking at various geographies so that all our businesses have a spread and we are not dependent on any one product line, on any one region. We have reasons to believe that the animal health division would grow this year, and the percentage of poultry, which is around 70 at this time, would definitely go down. If you really take a history of all animal health companies, the animal health division, or the division which covers the large animals as against the poultry, is always bigger than the poultry. So in the long run, the animal health division would overtake poultry. But in this current financial year, we see it moving towards both the divisions going neck to neck.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Hester Bioscience. Avinash, quickly your view on this counter. Strong growth target, 15 to 20% growth is what the management is eyeing.
No, I think, Somit, the company is on a very strong wicket. In fact, it's one of the pioneers to develop, vaccines and typically be a front leader in the poultry industry. And in fact, we have seen very strong numbers even from competitors like Venki, which reported a very strong number performance. So I think the current year is going to be very strong, both for the poultry and the animal healthcare business. My sense is that even at these levels, if somebody were to take a 12 to 18 month call, probably buy the stock in a staggered manner, because liquidity in this stock is little limited. But definitely a lot of value could come in if the investor is willing to wait for the next 12 to 18 months. Structurally, very strong prospects for the coming financial year.
Right. Sharad, coming to you on what's been buzzing on the FNO side.
Well, yes, largely let's see the long build-up of the stocks, which is in focus. And you can see there the technical sell-off is still continuing. These are the stocks which should be in your radar. But IT is something which is showing respite. Let's show the long build-up stocks, what's actually happening here. And if you could just show the stocks where the momentum is happening. And yes, we have Solar Industries and Persistence back on the earnings. And of course, the reversal in the mid-cap IT. Apart from the long build-up, let's also look at a short build-up. That's Amber Enterprises stock is down 15%, and EMS is getting pasted here. It's down 5% as well. Apart from the long unwinding, we have Delivery and PFC making it to the list. Remember, the merger date is something which we are actually tracking this as well with REC. And lastly, I'd like to point out the short covering, and this is also largely IT names. Of course, remove IT, most of the sectors are seeing selling pressure.
Let's go to our next small cap stock, that is KD Green. What's been buzzing here? Let's get in Jasmeet to understand what does the company do and what's the way forward here.
Well, thank you for that. The KD Green is a part of the bigger group, that's KD Group, which is a conglomerate in the business altogether. And let's quickly understand the business structure of the KD Green as a group. Well, the KD Green has currently 4 flagship companies under it. The first one is KD Infra, which manufactures steel fabrication. Then we have Green AAC, which manufactures the AAC blocks. Well, also we have KD Ecosystem, which is into vehicle scrappage system. And lastly, Shivam Pipes, which makes basically the TMT bars and the piece electronic poles as well. Now, why this company remains in focus is on the back of that big domestic push a company is planning in terms of all its business. Now, in terms of business model, the company is targeting a big push for the domestic markets to grow further. We also add that the company is catering to power, solar, infra and construction along with AAC. While lastly, on the good outlook, the revenue remains a strong good outlook for next 2 to 3 years, and we do see a good momentum in the stock as well.
Right. Avinash, your view on KD Green?
Yeah, Somit, this is a recently listed stock. In fact, the company has come to the stock market via a reverse merger. Earlier, the company was known as Manpro Industries. Now the new name is KD Green. And as your colleague Jasmeet mentioned, it is the flagship company of the KD Group. They manufacture AAC blocks, they manufacture TMT bars, as well as pipes. And basically, their growth prospects are very largely linked to the power and solar sectors. In fact, the management has indicated that probably this year they could look at a top line of at least 500 crores. And definitely, I think once all the integration is complete, you could see a very strong year in FY27. So I think, investors who want to take a long-term call and, get into the story much earlier than others would definitely try to nimble into the stock. But yes, It will require a little bit of more visibility and liquidity. That is the only issue as of now.
Right. Well, thank you so much, Avinash, for joining in and having a conversation with us. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Hello, welcome. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, this is a show that gets all your stock-related queries answered. You can either call us or WhatsApp us on the numbers that are flashing on your screen up there and ask all your stock-related queries. With regards to where the markets go as of now, off from, of course, the day's low point as we speak for the benchmarks. The Nifty 50 is right now just trading around that 0.06 odd percent levels. We are above the 23,600 levels. Now, the sharp recovery during the day is what we've seen for the Nifty 50, almost at its day's high point. Let's try to pull up the heat map and see as to what are the counters that have kind of turned in terms of where the performance goes and what has actually turned into green now. A lot of IT names in focus. You have Tech Mahindra topping that chart now, about 4% of an upside, followed by Infosys. All of these names did see a lot of beating down in the last couple of sessions. Bharti Airtel also up 1.8%. JSW Steel, Kotak Mahindra Bank, Sun Pharma, etc. also doing fairly well. But on the flip side, you have Power Grid, which is down by about 3.7%. Tata Steel, though realizations improved strong Q4, but seeing a downtick for around 3%. SBI, Trent, Bajaj Auto, Maruti Suzuki are some other names that are also under pressure. Let's try to pull up the Bank Nifty and see as to where that is trading at right now and whether recovery has been seen in Bank Nifty also. And yes, there has been a recovery. Now we're trading around 53,500 levels when it comes to Bank Nifty, just about 150 points for downtick. So almost 1,000 points recovery is what we've seen in where the Bank Nifty is concerned, down by about 0.3 odd percent. Let's try to pull up the sectoral heat map and see if things have changed there as well, because overall we saw heavy profit booking in terms of where defense goes and metal goes, realty goes. So still under pressure, but there has been recovery with regards to all of these names as well. PSU Bank down by about 2%, Media down by about 2%, Auto still continues to be under pressure, down by about 1.8%, but IT top gainer on the charts today, up by about 2%, followed by Pharma as well. So that's with regards to where the sectors go. The mid cap 150 and the small cap 250, if we can try to pull that up as well and see as to what the broad end of spectrum is looking like. Recovery is there from the day's low point for the mid cap 150, now trading around
0.5% lower, but the small cap 250 is still, a tad bit under pressure. There has been recovery here also, but still down tick of 1.6% is what we are seeing. Let's try to pull up the advanced decline ratio as well, and then the BSE 500 to see as to what the broader end of spectrum is looking like. Right now, we've got around 2,000 odd declines versus that of 560 odd advances. So still, the ratio is skewed towards the seller as we speak. The BSE 500, of course, a lot of these names buzzing on the back of numbers. Gland Pharma, for example, up 14% on the back of strong Q4 numbers. GE Shipping up 11%. Raymond, Coforge, Tech Mahindra, Persistence. A lot of IT names is what we're seeing in terms of where the green side goes. But on the flip side, Amber Enterprises, I think FY27 guidance cut in terms of where margins go is not something that the street is appreciating, and that's why the stock is down 15%. KC International on the back of Q4 numbers again. Alembic Pharma did come out with its number during market hours on Friday, but I think the stock is seeing reaction today. Symphony again on the back of numbers. So, all of these names are buzzing on the back of where Q4 numbers go. But, let's start taking your stock-related queries, and to, answer them, we're now joined by Vishnukant Upadhyay, who's the AVP Research Advisory at Master Capital Services, and we'll also shortly be joined by Siddharth Khemka, who's the Head of Research Wealth Management at Motilal Oswal, who will be joining us soon. But the first question that we have is coming in on RR Cable, and this is from Shiv Kumar, who's writing us from Bengaluru. Wants to know as to what should be the one-year outlook for this one, and what should be the target and stop loss that one can expect in terms of where RR Cable goes. Vishnukant, I'll come to you on this one. Your view on the stock?
Hi, very good afternoon. Well, so the stock is looking quite good, and I'm expecting the stock is, trading above the cluster of all key moving averages. So I believe this, winning streak should remain unimpaired, and on the higher side, I wouldn't be surprised if prices, touches 2,200, 2,300 in days to come. So stay long with keeping stop loss below 1,800.
Okay, all right. The next one that we have is on Tata Technologies. Venkat from Chennai is holding 200 shares, bought at the levels of 800. He wants to know as to what should he do. Vishnukant, again, your view on the charts?
Well, so we have seen the stock has, garnered some bullish momentum in recent days, but still the stock is trading below its 200 exponential moving average. But the way prices recoup from its 52-week low, I believe one should adopt buy the dip strategy. These levels are not good, but I believe any fall close to 580, 590 will be an golden opportunity to get a fresh long for the target of 660, 680.
All right. The next one that we have is on Tata Capital. Shankar from Bengaluru is holding 710 shares of Tata Capital, bought at the levels of 330 rupees. Wants to know if he can add more of 100 shares at the current market price. Would you recommend that, Vishnukant?
Well, so definitely not. The stock is, trading. The stock is trading with a various trajectory. So I believe if any bounce, comes close to 320, 325, that will be an opportunity to get exit from the counter.
All right, we've got our next caller ready. Muralidhar, I think, is calling us from Hyderabad. Muralidhar, very good afternoon to you. What's your query about?
Yeah, good afternoon, ma'am. I have a query on Websol. I have been holding it for the last 6 months at an average of 89, and the current is looking around 100. So what is the next 6 months to 1 year target about?
Okay, Muralidhar, got your question. I'll take this up with Vishnukant. He wants a 6 months outlook on this one, Vishnukant. The stock is currently trading at 100. He's bought it at the levels of 89. What would you recommend?
Well, so the stock is trading above the short as well as long-term moving averages. So I believe it has potential to reapproach to what it's recently formed top that's somewhere around 128, 130. So I believe why should he should hold the positions with keeping his stop loss below 88.
So that's the view coming in with regards to where Websol goes. The next one that we have is on Varun Beverages. Our viewer Tushar from Jaipur is basically holding 250 shares at the levels of 412. Says that he's incurring a profit of around 23% right now. So 24,000 of in terms of amount is where the profit stands. Wants to know whether he should continue to hold, average, or exit at the current juncture. Your view on this, Vishnukant?
Well, Mama, so it's a really bullish reversal candidate, and recently stock has regained their all key moving averages. So definitely, one should hold the positions for the target of 550, 580.
Okay, all right. So that's the view on Varun Beverages. The next one that we have is on Sri Renuka Sugar. Our viewer E. Venkat Ramanan is holding at 1,000 odd shares at the levels of 30 rupees per share and says that he has a 1 year time horizon, wants to know whether to average, sell, continue to hold, what should be the next course of action. He says that he's a senior citizen. So your view on this, Vishnukant?
Well, so it's like a falling knife, and I will not suggest to hold this counter, in fact, because there is also government policies on ethanol, in fact. So, but the stock is currently trading very close to its a very crucial horizontal support. But the way prices are trading and behaving, I believe that support levels will definitely invalidated in a near term. So, one can get exit if there is any bounce in the prices close to 25, 26.
All right, we've got, I think, our next caller. But before we take that, I think we've got a query on Texmaco Rail. I think Rakesh from Kochi is asking whether it's good to continue to hold Texmaco for the next one, for till Q1 2027. He's bought 6,000 plus shares at an average price of 126. Vishnukant, your view on the charts for this one?
Well, so on a chart, stock is looking pretty good as long as prices are trading above 102, 103 sort of level. So definitely she can hold the positions, but yes, definitely maintain their stop loss because it's a very crucial support. If prices goes below that level, the continuation or resumptions of the bearish journey will be seen. So with the stop loss below 102, one can hold the position. On the higher side, I'm expecting 138, 140 can be one card.
Okay, all right. The next one that we have is on MTAR Tech. Divya is asking whether this is the right time to make an entry into this counter from a long-term perspective. Siddharth, a very good afternoon to you. Your view on MTAR Tech?
Hi, good afternoon. I think if you look at the company has been delivering strong numbers, plus they have raised the guidance for FY27. And even after that, they have been receiving strong order book wins. So overall, the view on this space is very positive. The company has a very strong earnings growth outlook. So in terms of revenues, we are expecting about 60% earnings revenue growth, and earnings should grow about 80 to 90%. So on back of high growth, we believe there is still room for upside in the stock MTAR, so should continue to hold.
Next one is on HFCL. Somesh from Kerala plans to invest in HFCL at the levels of 135, and he wants to know the short-term target for this one and whether this is the right time or should one wait for more time is what he wants to know. Vishnukant, your view on the charts on HFCL?
So the stock is looking quite good, but the thing is that the stock has deviated too much from their key moving averages, and it has gone up sharply from their 52-week low. Let the prices come down towards 118, 119 sort of levels. So where we can build a fresh long position in HFC.
Okay, we've got another caller. Ajay, I think, is calling us. Ajay, a very good afternoon to you. What's your query about?
Yes, ma'am. Ma'am, I am Ajay. Actually, ma'am, I have a share of 25,000, FCL, Finotex Chemical Limited.
Okay, interesting.
On 25 rupees price.
Uh-huh.
मतलब ये मैं इसे होल्ड करूं या फिर सेल कर दूं?
कब खरीदा था अजय आपने इसको?
मैम इसको ये 6 मंथ जब ये इसके मैम ये स्प्लिट होने के ठीक पहले हमने ये परचेज किया था।
अच्छा, ठीक है समझ गए। तो आई टेक दिस अप विद सिद्धार्थ ये स्टॉक आज इसलिए बस कर रहा है क्योंकि इसके नंबर आए हुए हैं और बहुत अच्छे आए हुए हैं, इसलिए आज स्टॉक इतना ऊपर है। बट अजय ऑलरेडी 1 लाख के ऊपर के प्रॉफिट पे बैठे हैं, तो व्हाट वुड यू सजेस्ट फॉर समथिंग लाइक फिनोटेक्स केमिकल? शुड ही कंटिन्यू टू होल्ड, एग्जिट करे, क्या करना चाहिए?
So, Mahima, unfortunately, we don't cover Finotex, but I think if you look at the overall chemical space, specialty chemicals are benefiting from the fall in rupee because a lot of these specialty chemicals are export-focused companies, and rupee at all-time record lows definitely benefits them in terms of margins. So I would say, while I have a view, I think should look at booking partial profits at current levels. Maybe you can take a technical view.
Fair. And it's a very small company, Siddharth. So, I mean, it's a fair, thing that if you don't track it, because it just has a market cap of around 3,400. But Vishnukant, any view on the charts for Finiotex Chemical? The stock is up almost 18% as we speak at its day's high point.
Yes, definitely. From the technical standpoint, prices, is forming a sort of rounding bottom kind of pattern. And the good thing is that the prices has, come up from the all key moving averages. So I think the short-term hurdle has also been taken out. So I believe this bullish continuations are likely to remain intact, and 36, 37 sort of levels can be seen on the card. So technically, it's looking quite good.
The next one, Siddharth, that Satyan has a query on is Astra Microwave. By the way, he's asking about two different stocks. He always has a nice way to, bring in two stocks in one question, which we generally don't allow, but Satyan, we're allowing it this time. So he's asking whether to go ahead and invest in Techno Electric or Astra Microwave from a long-term perspective. Which one would you prefer right now, Siddharth?
I think Astra Microwave is more of a defense play where we have a positive view. I think the company has been consistently delivering, and our view on defense continues to remain pretty strong. So Astra Microwave, something that we cover, we have a positive view and a buy rating. I think one should continue to hold that. Techno Electric we don't cover, but the company is now incrementally a play on the data center theme, which is picking up pace, and a lot of interest is there. So I think that is where we don't have a fundamental view, but clearly between the two, Astra Microwave, something we cover and have a positive view.
Okay, all right. The next one is on IREDA. Arun from Bengaluru is saying that he's holding 200 shares of IREDA at the levels of 140 and wants a long-term view on this one. So Siddharth, I'll stick with you for this one as well. Your view on IREDA?
So again, another stock we don't cover, IREDA, but I think the insurance space overall is a bit struggling, and we are seeing that the quarterly results have not been that great. I think if this is something from a long-term perspective should do well. Clearly, I don't have a near-term, short-term view.
Vishnukant, your view on IREDA on the charts?
Well, so my stock is currently falling, and it is currently trading below its short as well as long-term key moving averages. So there is a space to extend this fall on a chart, and the fall should be containing somewhere around 119, 120. But yes, one can go long in that price zone with keeping his stop loss below 113, 112. And on the higher side, I'm expecting prices can take a U-turn for 136, 138 sort of levels.
Okay, all right. We've got our next caller. I think Bharat is calling us. Bharat, a very good afternoon to you. What's your query about?
Good afternoon, madam. I am holding a Welspun Corp at the price of 1373. Quarterly results will come this week. Can I hold or average current price?
Yeah, so you're looking at a short-term perspective, if I'm not wrong, Bharat.
Yes, sir.
Yeah. Okay, Vishnukant, your view on Welspun Corp and whether it is kind of advisable to trade in these counters just before a corporate action?
I mean, from the technical standpoint, the stock is looking quite good, and it is, just currently trading above the all key moving averages. Apart from that, the all key oscillators are also generating a bullish divergence, in the stock. So I believe for a short-term time frame, as long as prices are trading above 1160, 1170 sort of level, so definitely hold the positions, but maintain stop loss below that and keep drilling the stops.
Okay. The next one is on SBI. Prashant from Hyderabad wants to know if this is the right time to enter from a short-term perspective. Vishnukant, I'll stick with you for this one. SBI, how is it looking like on the charts?
Yes, undoubtedly, it's a portfolio stock, but yes, there has been some tactical headwinds on the graph as the prices, just collapsed below its 200 exponential moving average. But I believe, there is no very much pain in the counter on the lower side. 930, 910, 905 sort of levels will definitely provide an opportunity to go fresh long in the counter. So one can go long in that price zone.
Okay, Aparna, I think, is waiting by and calling us from Vizag. Aparna, very good afternoon to you. I believe your question on Taril.
Yeah, hi ma'am. Very good afternoon to all of you. Yeah, ma'am. I wanted to buy transformers and rectifiers, fresh entry. So what is the price to buy and what is the short-term and long-term view on this?
Aparna, did you study this on the charts by any chance, or did you see the fundamentals of the company? Why do you want to buy this?
Yeah, it's a good company, but a few issues are there, so the stock has fallen and corrected much.
Sure.
So,
Okay, got your question. I take this up with Siddharth then. Siddharth, your view on transformers and rectifiers?
Mahima, I think if you look at, there was some issue with regards to some of the global order book, and one of the contracts got cancelled. I think this entire space, the transformers, distribution, power stocks are doing very well on back of the high power demand in India, on back of A, the strong summer season, B, the expected economic recovery, and C, more importantly, the AI and data center usage expectation of demand. But again, a stock that we don't cover, and I think you'll have to wait for things to fall in place before the stock can start performing. So at current juncture, my suggestion would be to avoid.
Okay. Shakti Pump is the other one where our viewer wants to know from a long-term perspective if we can continue to hold. He's got 79 shares at the levels of 649. Bhanu Prakash wants to know. Siddharth, a quick view on this one.
So unfortunately, another stock we don't cover, but I think the stock had done very well in the past. Valuations have been on the higher side, and the earnings delivery is not in sync with the valuation, and hence the stock price is witnessing some correction. So again, I would suggest to wait for a few more quarters for things to improve.
Okay, all right. So that's the view coming on Shakti Pump. But it's time for a rapid fire round. Vishnukant as well as Siddharth, try to keep your answers as short as possible. The first one is on power stocks. Which one is a better bet right now from a long-term perspective, Siddharth?
We like two power stocks, A, Tata Power, and B, JSW Energy.
Okay, Vatik Babag bought at the levels of 1410. Continue to hold. Dr. Mohan wants to know. Vishnukant, your view? Vatik Babag is the counter.
Yes. Well, so I would say stay away from the counter. It is showing a bearish, divergence on the chart.
Okay, fresh entry in Ipca Laboratories from a slightly long-term perspective. Does it make sense? Siddharth, any view?
Yeah, pharma is doing better, and in that Ipca is something that we like. It's not among our topics, but definitely pharma sector in this current environment is doing better. So we have a buy rating with the 1800 target price.
Okay, Apollo Microsystems, 1000 shares bought, I think, at the levels of 190. Continue to hold, Vishnukant?
Yes, definitely. Maintain the positions, but maintain the stop loss below 269. On the higher side, I'm expecting 330, 340 will be on card.
Okay, Bank of Maharashtra bought at the levels of 70. Our viewer Venkat wants a long-term view on this one. He's already holding 250 shares. Siddharth?
Yes, I think among the few PSU banks which have shown good numbers plus valuations are comfortable. The stock has rallied now, and I think trading near fair valuations. So I would say hold, don't add at current levels.
Okay, Restaurants Brands Asia is the other one. Ram from Chennai wants to know whether they can continue to hold this from a long-term perspective or not. He's bought 3,500 shares at the levels of 76 rupees. Would you recommend that, Siddharth?
Yes, I think that's a thing that looks comparatively better. I think if you look at the QSR, numbers are not that great. We are waiting for things to improve. But I think that theme that will play out over a longer period of time, plus the focus on the newer segments like the BK Cafes, Burger Kings, I think plus the Indonesia acquisition, that recovery will determine the near-term performance. So continue to hold RBA, yes.
Okay, PNB is the other one from a 6 months perspective. Continue to hold average. Vishnukant, your view?
So Punjab National Bank currently do not build any long position. Prices are likely to come down towards 92.
Okay, Sai Life Sciences 200 shares bought at the levels of 994. Continue to hold for a long-term perspective, Siddharth?
Yes, Sai Life in the CDMS space is a very strong business. Continue to hold.
Okay, TCS from a long-term perspective, continue to hold. Bought at the levels of 2730. Siddharth?
I would suggest reducing exposure to the legacy IT companies. Better to reduce given the growth challenges.
Okay, Apollo Tyres, is this the right time to make an entry or any other tyre stocks that you like on the charts? Vishnukant, any view on this one?
Well, so no stay away from the entire tire space because of rising crude oil prices. So no view on that.
All right, okay. So that brings us to the end of this rapid fire round as well as Ask Profit. Vishnukant and Siddharth, thank you so much for taking out the time and helping us answer all those stock-related questions. But viewers, with that, time to step into a very, very short break. But we'll be right back with India Market Close on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew and with me is Mahima Vajrajani. Mahima, it's been a roller coaster ride today, hasn't it?
Absolutely. I mean, the recovery that we've seen from the day's low point plus IT stealing the show, completely a surprise, at least for the IT pack.
It is. You know, look at the bottom of the screen and here you will see that the advanced decline ratio is not really anything to write home about.
Yeah.
But we certainly have made quite the comeback for the benchmark Nifty 50, trading at 23,600. So the recovery is quite substantial. Take a look at that. And it's almost 2 days worth of moves in one day, right? That you've seen. You saw that sharp gap down at the start of trade, and then the recovery through the session, and quite a bit, as Mahima was pointing out, has to do with IT. We'll come to that in just a bit, as well as the private sector banks. So pull up the heat map for the Nifty 50 and we'll look at what is contributing to this. So pretty much still being ruled by the reds, the declines. Mahima, Power Grid stands out as well as Tata Steel, doesn't it?
Yes, and Tata Steel, I think Q4 numbers were good on the back of good realization as well. But I think the street right now is looking, and we've also seen a lot of run up in this counter. So probably that's the reason as to why the stock is kind of seeing some profit booking today. But I think IT is leading. Tech Mahindra up by about 4%. Infosys also up by about 1.6%. Bharti Airtel also standing out, up by about 1.5%. And you have Bajaj Finserv, JSW Steel also doing fairly well. Some names like Kotak Mahindra and Sun Pharma have also, come off from its day's low point by quite a bit. So these names also doing fairly well, and other IT names like HCL Tech and Wipro also doing fairly well.
So the entire IT pack, pull up the contributors chart for the Nifty 50 and you will see the contributors chart for the Nifty 50 if we can. This is Nifty IT, but Bharti Airtel taking the most ground, and of course the telecom space as a whole in focus on account of the Vodafone Idea update and the results that came through. We'll talk about that in just a bit as well. But then it's the private sector banks, it's IT, it's ICICI Bank, HDFC Bank. HDFC Bank, by the way, started out gap down, but it's recovered quite a bit of ground. On the other end of the spectrum, you do have State Bank of India. Pull up the advanced decline ratio for the whole market and you will see that it has narrowed, but not by a very large extent, and that's because the broader markets continue to remain a tad bit weak. So pull up the mid-cap index, it's still down about 0.5%. There is pain in the small cap index, which is down about 1.7%. This is where the selling continues to stay the case, right? But pull up the IT index, and this is one of the big talking points today, the Nifty IT coming back. Is it a factor of just being oversold and bouncing back, or is there more at play? Is there more buying? You saw a few fund managers that have come through in the month of April and that have bought into some of these large cap IT names. So
even mid caps, Persistent System, for example, has seen good buying from mutual funds this time.
Let's talk about some of the factors that are coming through, and then Mahima, we'll get into speaking to our experts for the day. But you've had a stellar recovery from the day's low for the Nifty 50, gains of over 300 points, and those gains, as we've already pointed out to you, are led by IT as well as the private sector banks. 23,300 ends up being a support level. 23,700 acts as a resistance level, at least in the near term. The trajectory, however, continues to remain choppy. Analysts believe that only once 24,000 is broken up on the upside would the Nifty then move beyond the range. Otherwise, it's going to remain range bound. For the Nifty Bank, the crucial levels is between 54,100 and 54,200, and the index hit a wall here twice on Friday before reverting to its lows. Immediate support is seen at the 53,300 level, as well as 53,200. We've got Hemen Kapadia joining us this afternoon. Hemen, as always, an absolute pleasure joining you and speaking to you. What's contributed to this move for the IT index? Is there a technical factor at play? And when you look at the benchmark performance and the recovery from the low point of the day, is it giving you a sign that there is reason to be optimistic, or are you holding that judgment as things stand right now?
A very good afternoon to you, Alex. Thank you for having me on the show. Always a pleasure. Very good afternoon to you, Mahima. I think IT index was oversold, Alex, deeply oversold. If you see 27,500 has been very strong support as far as the IT index is concerned. We breached that briefly intra-week last week. And yeah, we are bouncing. So as of now, I'll go with what you said. I'll hold my judgment. As of now, it's a recovery and it's virtually fallen off a cliff. So some sort of a bounce back, not entirely justified, but can be expected. And as far as the Nifty is concerned, Alex, there were 3 bearish gaps. One got covered up on Friday. Now today there was another bearish gap, so the Nifty bounced back and covered that up. So frankly speaking, it's all over the place, and a bullish gap formed a month back has still not been covered up. So long story short, I think we're not out of the woods yet. The VIX obviously won't come down much till this geopolitical scenario finishes playing out. And if the rupee keeps on hitting new lows and crude, which looks dangerous, Brent above $115, it's going to be script specific, but the markets will meander aimlessly. Obviously, there will be bounces. Pharma's given a breakout, so the pharma stocks will do well. But the unison or synchronicity in the market is missing until, I repeat, till the dollar scenario and the crude oil scenario doesn't exhaust its move, we're not going anywhere.
Okay, so Hemen, therefore, you're likely to remain range bound. That's my takeaway from what you're saying, unless something dramatically moves. And we're nudging 20 on the India VIX. So your point made on volatility is well taken. I do want to ask about the key levels that you're seeing for the benchmark Nifty 50 as well as the Nifty Bank, though. Do you see the possibility? You see private sector banks that are bucking the trend, so to speak. The drag is coming from State Bank of India today. Is there reason to believe that the Nifty Bank will move higher, or will it hold forth like the Nifty 50?
As far as the Nifty 50 is concerned, Alex, we're in a range between 23,300 to 23,800. The bigger range is between 23,300 to 24,600, but that's too large to be of any relevance. Nifty Bank, yes, I think very strong support. Cash market, spot at 52,600. I believe there is a recovery around the corner. It looks a bit oversold. But if I were to say that the private sector banks, if you look at HDFC Bank, Kotak Bank, especially HDFC Bank, Alex, we've been down for 5.5, 6 weeks. But the move from 820 to 750, the time taken is not matching the decline. What I mean to say is it's taken more time. We should have been below 700. That's not happened. So some resilience over there. And above 780, we could bounce back. So frankly speaking, stocks which have moved quite a lot are under pressure. Stocks which have been hammered down are showing relative strength. So from that point of view, private sector banks could do a bit better. The bank Nifty itself could hold. State Bank and the entire PSU sector, bank sector is suddenly weak. HDFC and private banks could recover some more.
Hi, very good afternoon to you. What about something like Alembic Pharma, which is, seeing a downtick of around 7%? And if not this counter, anything in the pharma space that you're liking as of now? This, of course, Alembic Pharma did come out with its earning on Friday itself, but probably the stock is seeing reaction today. So any view on the charts there?
5 weeks of a sideways moment, Mahima. I believe this could have been a consolidation, but needless to say, it's given a downward breakout. So we can obviously now term it as a distribution. So weakness support at 709, and the volume spike is not as much as I thought it would be. Normally you have panic bottoms forming with huge volumes. Volumes haven't been enough, but if 709 breaks only and only then we see more downside, we should be okay. Pharma per se, I think it's one of the better looking sectors. It's given a breakout after a long consolidation. So you have IPCA, you have Sun Pharma, you have I think Dr. Reddy, Divi's Labs. Gland has gone berserk today, but many of these stocks are looking good. And if the sector itself has broken out, Mahima, you will have them popping up like popcorn, one day this, one day that. So in a market which is, frankly speaking, wobbly, has been for some time, I think pharma stands out in technical green shoot, which could do better selectively, of course.
Absolutely, and I agree with that, because if you take a look at how Nifty Pharma has done over the past couple of weeks, it's the one resilient sector that's making sure that's not moving, at least in terms of where the markets go. But talking of pharma and talking of Gland Pharma, it's been a robust Q4 on both domestic as well as global fronts, and it of course did deliver a healthy Q4, and on the back of that we're seeing that uptick in the counter, and it has held that 14% gains almost throughout the day. And with Varsha joining by to give us a perspective on what's worked this quarter and what lies ahead. Varsha, over to you.
Well, a strong set of numbers Gland Pharma has given, and a lot of things are actually working. You have US and you have Sensex, and the number of launches that the company has been doing. Starting with how the performance was, what's working for the company and what were the growth drivers. Of course, there was a strong US traction which was led by new launches and GPO contract wins. Even, CDMO also did well. Higher contribution from CDMO project boost revenue and margins for the company. While favorable product mix also support margin expansion that you are seeing. And the operating leverage and cost optimization has aided profitability for the company. There was an improved capacity utilization across facilities which supported growth, and also launch of key products and multivitamins has also helped. Now talking about the geography-wise performance, US is one of the reasons why you're seeing that sharp growth. Grew 24 to 26% year on year. Europe based business grew 15%, while India business was up almost 28%. Now the base business revenue was 22% year on year, which was led by core injectables and launches. Talking about the Sensex business, which is the turnaround. Now Sensex was acquired by Gland Pharma in 2024. Well, over here, if you see, the revenue was up 4% and showing gradual recovery, better utilization, new product ramp up and price renegotiation has also helped for this business. FY27 revenue growth, talking about the outlook, is guided at around 12 to 13%, which will be led by launches and the CDMO projects going forward. But the growth is expected to accelerate when it comes to FY28 at 15% and 19 to 20% for FY29. And margins are expected to sustain at 25 to 26% when it comes to the consolidated level. And the base business margins are guided at around 33 to 35%. So good management guidance, then US business, strong US business, CDMO business, then Sensex has all led to the strong Q4 for this company, and the going forward is also expected to be better. So hence you are seeing that buzz in Gland Pharma.
All right, Varsha, thank you so much for getting us those details. And, Varsha summed it up very well with regards to where the fundamentals of this company goes. But Hemant, specifically on Gland Pharma, and, just to adding to the point of what you were mentioning with regards to where pharma goes, 7 weeks of straight gains is what we've seen on the charts for the Nifty Pharma, just to give that perspective. But Gland Pharma specifically, now that it's seen a 14% of gain today itself, do you think there's more steam left?
Mahima, at the risk of sounding overly optimistic, I believe this is just the first step. I mean, we are going for starters, the main course and the dessert comes later. Look at the charts, Mahima. 33 weeks, I kid you not, 33 weeks of hatching eggs, doing nothing. Between 1400 on the downside and 2200 on the upside. We haven't even broken out from here. And if it takes 33 weeks to consolidate, I believe I would be surprised if we don't give some 30-40% returns from here once we give a breakout about 2200, and it looks like doing that. The mechanical indicators are supporting the move. Volume seems to be matching that, and it's been down in the downs for a long time. A sideways movement, relative strength, resilience, everything seems to suggest about 2200. This is just the beginning for Gland Pharma. Mahima.
Okay, all right. So that's the view coming in on Gland Pharma, and what Hemant was mentioning with regards to 2200. That was the previous resistance that we're tracking on this one. But with regards to where the next segment goes, heard on the street, we all wait for the segment, and we have my colleague Somit Sarkar joining by to give us all the chatter that he's been hearing from the dealing room. Somit, over to you.
Stellar recovery is what we have seen from the day's lowest point, but traders continue to remain light when it comes to market given the uncertainty and volatility that we are seeing in the market. And given the fact that we are in the last leg of earnings period, most of stocks that dealers have highlighted today are on earnings based. Firstly, they have highlighted BEL, Bharat Electronics, that is Nykaa and Page Industries. Dealers indicate that there are buy flows on the large HNI desk in all the three names. Dealers are expecting strong Q4 numbers from all the three counters in trade. Apart from that is JSW Energy. Here specifically, there was a big block deal that happened in the morning, and dealers are specifically highlighted that this is one counter where there are buy flows on the FII desk, and delivery volumes are also expected to be on the higher side. And lastly, a cash counter that dealers have highlighted is Nitco. There are buy flows on the PMS desk. Dealers are expecting a large land deal to be announced very soon when it comes to Nitco.
All right. Thanks so much, Somit, for that. So some interesting names stand out here. And Somit, the points that have been made on BEL versus Nykaa and Page Industries, all of them seeing buy flows on HNI desk, and still in the earnings season, so there's an expectation of a strong Q4. Himen, do these names stand out on the charts as well? A BEL, a Nykaa, a Page Industries?
Oh, Alex, if Nykaa is concerned, we are safely ensconced in a medium to longer term up move. So, but we've spent the last 6 months being range bound, but range bound doesn't necessarily mean bad. We take out 280. I believe this move should continue. BEL is not bad, but thing is, it's sort of run out of steam the way I see it, at least for the time being. I mean, the stock has gone from 40 to 460, and last 3 to 4 months, 4 to 5 months, we haven't been able to take out the previous high, and we are sort of meandering over here. So the way I see it, if it closes above 465, everything is hunky-dory. If not, chances of us, we've already slipped into an intermediate correction. But the thing is, there's so much of strength in the stock. I believe we should have been below 400. That's not happening. So I wouldn't be that excited about BEL because it's distinctly top heavy. And I think it's on the cusp of a correction of a greater degree. So I'd wait just a bit.
Got it. Okay. Speaking of earnings, let's talk about Pearl Global because the numbers have come through, and the company's actually had a pretty good FY26, all factors notwithstanding, right? You've had a year that's filled with tariffs and various other headwinds. What do the numbers for Q4 look like though?
Right. So overall, if you take a look at just the four numbers, revenue saw an uptick of around 7%. Largely, I think this quarter would have seen some disruption coming in with regards to where Middle East goes. EBITDA however, did sustain a 14% growth. Margins also expanded by around 60 basis points, and profit grew by about 25%. Plus, FY26 is where they've recorded, their 5,000 crore, milestone in terms of where revenues also go. I think higher volume growth and value-added product mix has supported the growth this quarter as well. But to understand as to what is the outlook going forward for FY27, we are now joined by Pallab Banerjee, who's the MD and CEO of Pearl Global, joining us now to talk to us more about what lies ahead for Pearl Global. Pallab, first of all, a very good afternoon to you, and thank you so much for taking up the time. My first question to you is that, as Alex was mentioning earlier as well, right? Tariffs, the Middle East crisis, etc. But you've still managed to grow overall when it comes to FY26. Just want to get a sense from a Q4 perspective, how were you able to manage a 60 basis points uptick in terms of where the margins go and the growth in EBITDA as well, considering that you would have faced some supply chain crisis because of the Middle East war? I think you're on mute, Pallab.
Sorry, thank you. Thank you for having me on your channel. To answer to your question about what happened in Q4, yes, there was a tariff challenge, which was more limited to India. But Pearl has got in its strategy, we are quite diversified. We are manufacturing out of Indonesia, Vietnam, Bangladesh, India, and Guatemala. And on top of it, also, we have a very diversified market base as well. We do almost about 6 different category of product in the garment section. So keeping all these things in mind, we saw that the risk that is coming up, one after the other, there is some kind of mitigation because of this spread that we are seeing, diversified market as well as spread of manufacturing base that we have. Even Q4 also, India was affected by the tariff till about February end. but the other locations, we didn't have any problem of tariff.
Okay, interesting. Pallab, good afternoon to you. Alex here. Just wondering about the current scenario as you see it, because we're speaking to a lot of corporates that have managed Q4, and the numbers have actually looked in a lot of situations better than even the street had anticipated. But the street is still looking at the future with uncertainty, obviously. So we're trying to gauge from your sense how you see Q1 panning out right now, and whether you're being conservative in your expectations for the full year in FY27.
So in terms of our forecast, we have always said that we are trying to grow at between 12 and 14% year on year. Yes, if the opportunity is better, then we grow even more. But the conservative plan is in that range of 12 to 14%. So keeping that in mind, we have been building up our capacity and the capabilities across all these manufacturing hubs that we mentioned. Yes, now that what's going to happen in future? If I look at Q1 of 2027, order books are full. Definitely what we found is that the markets, the resilience in the market, I would say. If you look at US market, most of the retailers are doing pretty well at this point of time. If I compare with 2022, when Ukraine war started and the fuel prices were up in this range, definitely the US market had slowed down in terms of retail, and they had an over inventory situation that happened later on. So this year, what we are finding is that the resilience is much higher. The consumer behavior hasn't changed so far. Most of these retailers are forecasting growth. At least the one that we are working with, all of them are forecasting the growth. And that keeps us satisfied in terms of our forecast or whatever numbers that we are talking about. Other markets also, like Europe, which was quite slow for the last couple of years because of the Ukraine war. It seems like people have got used to it, if I may dare to say that. So I think that way the markets are, I'm talking about the consumer market and my customers, seems to be okay at this point of time, and they are forecasting growth.
Pallab, for FY27, first of all, I wanted to understand as to what capacity utilizations are looking at right now on an overall basis for FY26. And FY27, if I'm not wrong, you'll still do around 200 to 250 odd crore of capex. How will that be funded, one thing? And where will capacity utilization go at by the end of FY27?
So we are targeting to be about 120 million pieces of capacity by 2028.
Okay.
As we ended the financial year of 2026, we touched about 100 million pieces.
Correct.
In terms of established capacity, that means the infrastructure that we have is for that much. Now, as the order book starts growing, we hire the people, train them, and put them onto the additional lines that happens in this. So if you talk of 2026, we did about close to 78 million pieces we shipped. And by the year end, my capacity had gone up to 100 million pieces. So yeah, so that's the kind of utilization that you're looking at. And this capacity includes my own in-house 100% owned factories and some partner factories in Vietnam and Bangladesh.
All right. So certainly it's a tough operating environment for everybody involved, but wish you all the best for FY27. We look forward to touching base with you. Hopefully the next time we talk, it'll be after this geopolitical crisis is over.
Hope so. Thank you.
All right. Let's dial in to the Vodafone Idea conference call. It's ongoing right now to find out what the management has to say.
Keep this growth on. Got it. So how much more do you think this is possible? Because I can see we are at a significant discount on an ARPU versus the peers. So is there a significant gap which we can bridge through these efforts?
So two parts, Sanjesh. One is obviously we are looking at these differentiated offerings to, bridge some part of the gap, but I don't think the gap will be bridged only with this. The way to understand this is the mix of the customers that we have. As I said, we have almost 67% of our customers now on the smartphone,
with 33% of them being on a feature phone. And I think that's a big lever for us to push, and that opportunity is available with us to upgrade our customers. So that's one. Second, when we look at our smartphone base and the split between the customers who are still not using data with us, though they are using smartphone on our network, that's a second opportunity that we see. And the third opportunity is there are a lot of customers who are still using a data quota, which is a 1.5 GB a day or a 2 GB a day, for them to move into a truly unlimited, the non-stop hero data. So I think all of these things put together, we still see a large amount of opportunity that we have in the ARPU upgrade. Got it. My second question is on the subscriber. We have almost reached to a flattish versus a decline historically. Can you help us understand how are we behaving in the areas or in the locations where we have added the network versus the areas we have not added the network? To just get a sense, what does it really mean in terms of capex and that translating into a subscriber growth? Yeah, Sanjay, so if you see our deployment of 16,000 crore over the last 6 quarters that I spoke of, that obviously has gone into a graded manner in different circles depending upon the number of customers that we had in a circle. And I'll just pick up one circle, for example, Maharashtra. And this is one example. So we have circles like Maharashtra, Gujarat, Kerala, UP, some of these circles where we have invested a little more than the other circle depending upon the customer availability that we had and the gap that we had. We see a very significant change in the customer in 3 things actually. One, customer acquisition. Second, the quality of customer being acquired. And the third is on the base retention. So we clearly see a difference in the circles and in the areas within those circles where we have been able to add more layers, providing better experience, better capacity, and better coverage to the customers. So any number you want to put where we have put the network, how much we have grown, just to understand the intensity of benefit we can get? No, I mean, I'll say that the numbers are significantly better. We don't share the numbers circle-wise, but we can tell you that these circles that I named, those places, we've kind of significantly grown better. Also, one of the things that we are also seeing, which is helping both upgrading the customers as well as subscriber addition, is the number of 5G cities that we have been able to launch over the last 1 year, which is upwards of 80 now. So we can't share the numbers, but you can pretty much safely assume that these are some of the circles that I named. There, the differential is pretty significant as compared to other. Most of the circles have grown, but these circles have grown differentially over the other circles. Got it. Very clear. My next set of question is more like on the OPEX and the fundraise. Network operating cost declined sequentially while we continue to add the site. What's driving the efficiency in the network OPEX? Number 2, on the fundraise, where are we in terms of debt fundraise that we are anticipating to come? How soon? Because that will be key enabler in FY27 in terms of the execution of our plan. And one related question on the shareholding pattern. Now I think both the promoter probably post CLM adjustment for Vodafone and Aditya Birla Group taking the preferential issue now reaches probably first time an equal shareholding in the Vodafone and Idea. Will that change anything in terms of the board structure or the agreement between the promoters? Okay, so 3 questions you've asked. One is on the OPEX, network OPEX, which I'll let Tejas answer. But before that, I'll give you an answer on the debt raise, and the second was on the promoter shareholding pattern. So on the debt raise, as you would know, we maintain our capex over the next 3 years for 45,000 crores. We are looking at a funded of a 25,000 crore and a non-funded of a 10,000 crore facility. We are deeply engaged, as we have said. It's a SBI-led consortium which is looking into it, which forms part of the PSU banks, the private banks, as well as the foreign banks. And we are very confident of closing that very fast. Don't want to put a timeline, as you would imagine, some of these things, unless until it's kind of closed, we would not want to share that. So that's on the debt, but we are very confident that our capex intensity of what we have spent in the last quarter or the last year is only going to intensify towards the total of 45,000 crore that we have laid for ourselves over the next 3 years. As far as the shareholding pattern is concerned, as you would know, these are the clamp settlement current share.
Okay, so you heard the management of Vodafone Idea on their con call, but Hemant, your view quickly on the charts for this one. It's down 1.5%, though Q4 was largely in line, but down 1.5% as we speak. What are the charts indicating right now?
Mahima, is a vision of crying wolf over the last, I'd say, 7 years. We've had multiple occasions where even technically, Vodafone Idea has looked good, promising, looked like breaking out. And once again, we're at the stage where things should start looking good above 13.50. Currently, mildly overbought, but the technical situation has improved significantly. Let's hope it finally delivers. A monthly close above 13.5 should make Vodafone look better, at least in the last, let's say, 6 to 8 months. So looks promising, but like I said, we've been here multiple times. Hopefully it finally goes through.
The view coming in on Vodafone Idea. With that, Hemant, thank you so much for taking out the time and helping us with all the stocks that we discussed today. But with that, it's also time to slip into a very, very short break. On the other side, we'll get you top buy today, sell tomorrow calls as well. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts.
Welcome back. You're watching India Market Close. We're joined on this leg by Nagaraj Shetty, who's technical and derivative research analyst at HDFC Securities, as well as Sudeep Bandopadhyay, who's Group Chairman, IndiTrade Capital. Gentlemen, thanks so much for taking the time and good afternoon to you. We're speaking about telecom, and let me ask Sudeep about this, because Sudeep, Just over the course of the last 7 to 10 days, you had significant developments for both Bharti Airtel as well as Vodafone Idea. And if you look at Vodafone Idea and the results that have come through, the management commentary during the conference call, on balance, how do you look at the space and do you see it as an opportunity, either one or the other, Bharti Airtel or Vodafone? How do you look at both?
Oh, well, I think after a very, very long time, Alex, Vodafone Idea looks like worth taking a bet on. With the promoters, I think the numbers have been decent. The ARPU is marginally moving up is a positive sign. They're not losing customers, which they have been losing on continuously. I think, again, is a good news. So operational efficiencies are probably coming back, which is fantastic news because fundraising is one part, operational efficiency is the second part. Now the operational efficiencies are coming back, which is good. As far as fundraising is concerned, both the promoters are reposing confidence and coming back with investments of their own definitely is good news. Of course, it's got a long way to travel before they can be out of the woods as far as fundraising is concerned. The promoter contributing 500 million each is good news, but they have to raise much, much more through debt, obviously, before we can say they are out of the woods. But having said all that, I think after a very long time, Vodafone Idea is definitely looking like worth taking a bet on at this stage. As far as Airtel is concerned, I think there is no question in my mind. It was a good investment then. It is good investment now. There was a bit of a disappointment regarding ARPU not going up, and that will remain and linger for some time more. But beyond that, I think they're ticking all the right boxes. Their acquisition of incremental stake in the Africa operations is a good news for the consolidated business. They're deciding to invest less in the financial services business is again a good news because we don't want, market doesn't want too much of diversification away from the core. So all said and done, Airtel has been ticking all the right boxes and they continue to do so. So there is no problem as far as Bharti Airtel is concerned from a long-term perspective.
So that's a holistic view on the entire telecom space that Sudeep gave us. But Nagraj, a very good afternoon to you. With regards to where the benchmarks go, the Nifty has turned into green. The resistance that we were tracking of around 23,700 levels, it's very close to that. And up about 0.2%, largely, this being pulled up by a lot of IT names. So your quick view on the benchmarks right now, both the Nifty 50 as well as the Bank Nifty, because there's recovery seen there as well.
Hi, good afternoon. Yes, Nifty has been moving in a range-bound action over the last 3-4 sessions. On the upper side, 23,800 is going to be a strong resistance as per change in polarity. At the same time, 23,200, 150 is going to be a strong support. Having declined from the higher levels recently and bounced back from the lower levels, there is a higher probability that Nifty reaching towards 23,800, 900 levels in the near term as per the range theory. And before showing any breakout, once it breaks out, then the new move could come from the index upper side, but currently showing a range-bound action. From Bank Nifty has bounced back very well from the lower levels around 53,000 level, currently trading around 53,620. I'm expecting this to move towards the immediate resistance of around 54,500 levels in the next couple of sessions.
Okay, all right. So that's the view coming in with regards to where the Nifty 50 and the Bank Nifty go. But on to our bull versus bear segment. And today we're tracking delivery. The stock is seeing a sharp selling as investors have kind of reacted to probably the lower profitability and integration cost, despite a strong growth in terms of where volumes go in terms of transportation. And let's get in Jasmeet, who tracks us very closely, to understand as to what's worked and what's not worked this quarter. Jasmeet?
Well, thank you for that, Mahima. Now, if you look at this particular counter, we do make a note that the overall Q4 was quite positive for the company, and even the brokerages have turned bullish on this particular counter while hiking the target price. But we also have a few underlying points, which is something that the street's not liking. Let's quickly understand the bull and the bear case of the each scenario. While we look at the bull case, we do see the overall express volumes is an uptick of 73% YY basis on the consolidation basis of the new entity they have acquired in the previous quarter. But on the bear case, the overall realization is down nearly 16% on YY basis, which basically mean though the company has increased the volume growth in this particular quarter, but the profit they earn per parcel is reduced in this quarter, which is down 16%. Well, the second bull case is the overall free cash flow conversion for the company. They have been ahead of the guidance and they are already free cash flow positive. But on the other hand, though their EBITDA is 80% moved up in the Q4, the overall PAT remains flat. Now, this comes on the back of the concern of the increased depreciation cost, also an increased integration cost, which we saw in this quarter. Now, if we look at the third bull case, we do know that the overall PTL, that's a part truckload margin, is up nearly 270 odd basis point on YY basis and touched that 13.5% mark. But this particular mark still remains far away from that range of 17 to 18%, which the management has guided, while this also comes after they have acquired a new entity. Now, if we look at the fourth case, the management remains quite bullish when it comes to the overall e-commerce growth, and they have given the overall guidance of roughly 15 to 20 odd % going ahead. But on the macro level, we do know that the overall quick commerce increasing will generally end up hurting the volume of e-commerce, which will be a key concern, and it might be difficult for the management to reach the guidance level of 15 to 20 odd %. When we look at the last case, we do make a note that the brokerages have turned bullish in this particular counter. Something like Goldman Sachs have raised the overall target price to rupees 480 from earlier 420, but the valuation still remains expensive for this particular counter compared to peer. While delivery currently stands at 52 times EV by EBITDA, now something like a Blue Dart, the direct competition of delivery, is at nearly 12 times EV by EBITDA. So all in all, we do make a note that though company had a good quarter, but the overall growth outlook remains key concerning for the management.
Okay, Jasmeet, thank you so much for getting us those details with regards to where delivery goes. Sudeep, as Jasmeet was mentioning, I mean, valuations were never cheap for this counter for one, and realizations largely being impacted because of crude prices also going up. So overall, your view, one, on delivery, and secondly, the entire space, when it comes to logistics.
Well, I have been liking delivery for a very long time. It was a little unfortunate that they haven't delivered or they haven't performed the way it was expected to do. But finally, I think things are falling in place. They have shown quite a good amount of growth on top line this time, and it's quite impressive, I must say that. In spite of competition, in spite of challenges from multiple other areas, I think the growth has been commendable. Yes, the profit is flat because of higher depreciation, but at EBITDA level also they have performed well. EBITDA growth is good. So while going ahead, there will definitely be competition challenges, and some of the large clients will be tempted to have their own delivery arm like a Misho. But overall, I think it's a great business, and they have kind of reached a certain level of operational efficiency, which will be very difficult for a new player to achieve, or a partner who starts his own logistics business to achieve. So on overall, we are positive on this business, and we are positive on delivery as such. The share price has moved up, and in spite of today's correction, it is still around 450, 556 levels. The only challenge is they have delivery has a lot of institutional investors who have been waiting for exit, and that's why probably bulk selling keeps coming in the counter, pushing the prices down. But fundamentally, from a long-term perspective, we do like delivery.
So we're only speaking about delivery, though, Sudeep. In the broader logistics space, and I will throw ports into the picture as well, with the kind of uncertainty on the external front, there are possibilities that you will get some of these entities at relatively attractive valuations. One, do you agree with that statement? Two, do you see any opportunities currently as things stand right now?
Well, I'm not sure whether you will get really at a very for lack of better word, cheap valuation, because valuation in the Indian market for attractive stocks is not cheap. Look, I can talk about one logistics company which I've been liking for a very long time. It's from your group, Adani Ports. It's a fantastic company. It can have any parentage, it can have any person running it. But the fact is, the kind of assets they have created on both sides of both the coastlines, east as well as western coast of India, I think it's amazing. And India's export-import growth, India's economic growth is to a great extent will drive the future and the prospects of Adani Ports. it's a great company to own from a long-term perspective. And if somebody can buy when there is some correction or a major market correction or a specific correction in the group itself, I think it would be great. But fundamentally and from a long-term perspective, it's a great company. The other company which we have been liking in the entire logistics space for some time, since you asked, is All Cargo Logistics. Again, that is a good company to own from a long-term perspective. The last company in this space I will mention is Container Corporation. Again, a lot of opportunity, a lot of a scope for it to perform very well going forward, considering the economic development, considering the work they are doing. Price haven't moved up. Company hasn't performed the way it was expected to perform. But I'm very hopeful that future is good for Concor as well.
Okay, all right. So that's the view, of course, coming in. But now shifting focus slightly to the insurance space. There has been a global rush when it comes to the entire insurance space. UK-based Prudential is set to acquire around 75% in Bharti Life for around 3,500 crore. First major foreign investment, of course, in insurance after government raised the FDI limit to 100%. The deal valuation stands at that around, between that 4,600 to 5,600 crore range. And Bharti Life will explore strategic distribution partnership with Bharti Airtel as well as 360 ONE WAM. Now, currently, if you take a look at the stake, Bharti Life Ventures, is holding around 85% stake, and 360 ONE is holding around 15% stake. Now, moving forward, what will happen? Prudential PLC, overall, the group entity that is HCL Group is going to have a JV of 70 to 30. ICICI Pru is going to hold around 35% stake. ICICI Pru Life is going to hold around 22% stake. What will happen to ICICI Pru Life going forward? Sentimentally, it's slightly, considered to be negative. Regulatory norms require Prudential to cut stake in ICICI Pru to under 10%, and Prudential will seek appropriate time frame for this divestment going forward as well. And Prudential's health insurance operations will start in 2026 on kind of receiving the approvals that are required to kind of fulfill this entire stakes that's happening. So this is the entire view with regards to what is happening. To take this forward, the conversation forward, and to understand more about this, we have Sharad joining by, who's going to give us a perspective in terms of what is the precursor to growing interest of global players in Indian market, especially after the 100% FDI relief. Sharad, give us more details on this one.
Well, if you look at it, largely this is the first time this is happening where the overall permission from 74% stake to 100% stake has happened. But we have seen already in the history that there has been a lot of interest by the global MNCs targeting the Indian insurance companies. Earlier it was JVs, and now it is outright ownership as well. But how things have panned out, at times there has been some scuffle and changes as well. Foreign players in the Indian insurance space. Of course, this is the announcement which we have spoken about. But remember, there is a caveat to it. Prudent PLC, they have to reduce their stake in ICICI Pru below the 10% mark. Of course, they cannot have that holding for two companies. Also, interestingly, the alliance dissolved a 20-year-old life and general insurance JV with Bajaj Finserv, and now that has moved on to, you could say, they have actually moved on to the Jio Financial Services as well. There were some disagreements happening on the stake increase and the management control, which led to this dissolution. And now they have partnered in a 50-50 JV for the reinsurance operations. There are also another case, that's the AXA case. If you talk about it, AXA Life Insurance, previously they had partnered with Bharti Group in this Bharti AXA General Insurance. But of course, there were some changes, and after that it was acquired and merged with ICICI Lombard in the year 2021 itself. And also AXA did not form any direct life or general insurance partner at that time. Of course, there were some changes happening, and I've mentioned you all of them. But what are the key trends actually looking like? What does this suggest? The first one is it's a largely rare for a foreign partner company to change local partners. But now that's changing. Why? Because the dynamics are changing, because FDI increase is happening from 74 to 100%, and now we are seeing that in play as well.
Now, more MNCs are showing interest for domestic players now. We had a conversation with a lot of analysts also, and they have stated that much more deals can be announced in this segment, and foreign firms are actually pursuing now a full ownership and control. Now it's legal. So these are the key trends which we are looking like, and these are the key, you could say, the tie-ups which are happening. Geo Alliance, we have ICICI Pru, Birla Sun Life, Tata AIA, and also other companies such as SBI Life, we have Canara, HSBC, General, Central Bank and Generali Insurance, and Max Life as well. Aviva also has with the Dabur's family office, and even PNB has with US-based MetLife as well. So this is the global rush coming in for the Indian insurance companies.
All right, Sharad, thank you so much for getting us those details, and probably it's following the wave that we've also seen in something like a Shriram Finance, right? The same wave probably is being followed in the insurance space as well. Nagaraj, your quick view on any of the insurance counters, if any, that are looking attractive on the charts right now, that you find attractive in terms of making an entry as we speak?
Yes. SBI Life is the one sustainably of around 1750 levels.
Okay, I think we have some audio issues with regards to where Nagaraj's audio goes. But Sudeep, while we try to fix his audio, any view on the insurance space, any particular counter that you'd like?
Well, I've been positive on overall insurance space for a very, very long time. But remember, it's a long-term business. Nothing should be expected to happen overnight here. We have fantastic companies which are building towards a great future. We do like SBI Life for a long time, and we believe that it's a good opportunity to pick up SBI Life, taking opportunity of a little bit of correction, which we have seen in the recent past. This transaction, which we have been talking about, I think is a very interesting transaction. Because Prudential wanted some kind of control, and they were not getting control at ICICI. So obviously they have been reducing stake there, and they wanted control. And now with Arti, they have, they are in control. And I'm sure at some stage they will like to go up to 100% if possible, as far as this venture is concerned, and come out of ICICI Prudential completely, maybe, or retain a token holding. Anyway, they can't go above 10%. So there will be some pressure on ICICI Prudential stock for some time, because there will be an exit by a large shareholder looming there. So that pressure will be there on this counter. Apart from that, I think we do like HDFC Life as well. And HDFC Life also can be picked up from a long-term perspective.
All right, HDFC Life. Bear in mind that these stocks have not done too much. And if we have Nagaraj back, I do want to ask him about the technical charts and what they throw up. Because barring State Bank of SBI Life Insurance, you haven't had a big performance by the other two players. So how are you seeing the charts?
Yes, SBI Life has been constantly moving up from the lower levels. After the reversal from the 1800 levels with the bottom reversal, the stock has been continuously moving up, higher tops and bottoms on the chart. The overall chart structure is looking positive, currently placed near the 200-day EMA hurdle. I think more upside is likely in the next couple of weeks. 1920, 1930 is going to be the hurdles to go out in the next 1 or 2 weeks.
Right. On to an NDTV Profit news break confirmed. We told you on the 15th of May that TVS Venu Group is planning a stake buy in Jana Small Finance Bank, and that has indeed been confirmed. The company is sending an update to the stock exchanges. The stock is down about 6% or thereabouts. Shivam joining in to tell you about the details there. Shivam, what's been sent to the exchanges?
Well, yes, TVS Venu and Jana Small Finance Bank have entered into a share purchase agreement, and TVS Venu, which has a long-standing presence in Indian financial services sector through its NBFC firm TVS Credit Services, which offers consumers and retail loans under TVS Motors, and this company is also will acquire a stake in Jana Small Finance Bank, and this acquisition will be done through the firstly the combination of primary issuance of warrants and secondary purchase of equity ownership. Now this equity ownership is capped up to 9.9%, out of which 4.9% will be acquired by TVS Motors. And if we talk about the aggregate stake sale worth, it is around 193 crores. Now looking at the few prior acquisitions by the TVS Venu, they have also signed definitive agreements to acquire 100% stake in PGIM India Asset Management recently in April 2026, and the company which was owned by the Prudential Financial.
Okay, Sudeep, any view on Jana Small Finance Bank? And ultimately, these are entities that head towards a natural progression, and their hope ultimately one day is to be a universal bank. Are you looking at it from that lens?
Not really right now. I think it's a long journey. And the RBI has a lot of criteria before that is allowed. Just recently, they had refused one of the peers, and they didn't allow them to become a universal bank because their asset distribution was still not, acceptable as far as RBI is concerned for the transition to happen. So there are a lot of steps. And at this stage, I think this is a little too premature. I completely agree with you, Alex, on the trajectory. Eventually, they need to, and they should become universal banks. But Jana, I think there is some distance before it reaches there.
Okay. The other stock that is in focus today is Amber Enterprises. Now, overall, if you take a look at prima facie, the Q4 numbers, they were not bad, right? EBITDA did beat street estimates. Revenue saw an uptick of 11%. EBITDA saw an uptick of 21%. Margins improved to 8.6% versus that of 7.9%. And net profit also did see a growth of around 15.3%. And this was largely in line with what the management had guided for as well. But I think the stock has taken a knock today, and this is on account of the FY27 guidance not being at par with what the street was expecting. They've given a guidance of growth of around 40% in the electronics space and 30 to 35% in the sidewall space, where the expectations were that the electronics space growth could have been up to 50% versus the guidance given at 40%. Plus, even in terms of where the margins go, they've cut the margin guidance for FY27 from they were expecting a cut of 50 basis points earlier, which they've now gone out and said that there will be a cut of around 100 basis points, and that's something that the street is not happy with, and that's why we're seeing that downtick of around 15.7% in trade and almost at its day's low point. So that's, of course, with regards to what's happened with Amber Enterprises. And after positioning its quarterly earnings, Amber Enterprises after seeing that kind of pressure, the company's management is kind of did in its con call did say as to what the margin impact temporary is going to look like and will last only for the next 2 quarters. Listening to what exactly they had to say.
Whereas other contracts like defense contracts or telecom contracts or the data center air conditioning contracts, which are now getting signed, those are the contracts which have gotten pass on through. And that's the reason why we gave a just update to everybody that this is temporary. Of course, you would have seen in last 7 years we have been able to pass on, and we will continue to pass on. But since it is momentary, but we thought that we should be. It's our duty to inform everybody that next 1 or 2 quarters should be you should see this hit coming in.
Okay, all right. So that's the reason why the stock took a bit of a tumble. So for different reasons, you had KEC International on one end, you have Amber Enterprises on the other end, both reacting very sharply on the downside, Sudeep, to the earnings. The two that did relatively okay are Syrma SGS and Dixon. How do you view the EMS space, though?
Well, first of all, Alex, this is one space which is priced to perfection. So even little bit of disappointment in the earnings or the management commentary creates havoc with the stock prices. And that's exactly what we have, whether it's Amber or it's Gains. Whereas on the other hand, I think Dixon, the results were better than expectations. Commentary was all right. Syrma we like. We believe that amongst in this EMS space, If one stock can be picked up at current level, that is Sirma. I think there are multiple growth levers and looking good. But one fact I think which we all need to understand is that first quarter, which is where we are now, is going to be challenging. And where from the challenge will come, which pocket the challenge will hit, it's extremely difficult to predict even now, because we are living in a very, very uncertain world with what's happening all around us as far as geopolitics is concerned. But geopolitics is not only geopolitics, it's hitting the economics, it's hitting the inflation, it's hitting pretty much everything. So we have to be careful as far as first quarter is concerned.
I want to pull up, and that's exactly the point that I want to make, Sudeep. Pull up the intraday chart for the Indian rupee, the USD INR, and it is in fact at an all-time low. You're seeing a late move higher in terms of value versus the USD, and we're at 96.35. Remember, in this chart, the higher, the worse it is, right? The higher it is, the worse it is. 96.36 now, and there were projections about a week back that in the coming months you would have a situation where the rupee would possibly head towards 97.5, and this is problematic for a number of reasons, both from the perspective of crude oil prices and the amount that is currently being paid to import crude at a price where Brent futures are at $110 or above. So that's one aspect. The other imports that are coming through, and of course you've seen the action on silver most recently, but also the increase in the duty that is paid on gold imports. And you've heard the Prime Minister exhort you or make an appeal to you to reduce your consumption of certain commodities, petrol and diesel in particular. This is all to do with the way that the USD INR is functioning. From the perspective of the international investor as well, this is not good news because it further reduces the dollar returns that have been experienced over the course of the last year to 2 years, which is why you've been seeing such concerted selling in the large cap stocks, particularly in the financial space, where you're seeing selling in the banking stocks as well as in IT stocks, which are seeing a little bit of an uptick now. But on that note, gentlemen, Nagaraj as well as Sudeep, thank you so much for joining in, and we look forward to speaking to you very soon. Mahima, how are we looking? We've come off the low point of the day, certainly. We're holding very close to that yesterday's close levels. What else are you seeing?
Right, so ending at a flat note for the Nifty 50 around the 23,600 levels. The resistance that we were tracking was at that 23,700 level. So just 50 odd points away from that resistance level is where we are closing at. So tomorrow's action will be a crucial one to see whether we are able to break that resistance of 23,700 or not for the Nifty 50. As far as the Bank Nifty goes, we've seen some downtick coming in the last couple of minutes, down 0.3% now at that 53,500 levels, but still it's been over 1,000 points uptick from the day's low point for the Bank Nifty as well. The mid-cap 150 has also seen some recovery. Let's try to pull that up in terms of where the broader end of spectrum goes, and the small cap 250 in fact has also seen recovery. There you go, from the day's low point, but still closing around 1.5% lower. Let's try to pull up the Nifty 50 heat map and see how things are looking like there right now. Tech Mahindra still leading that chart, about 4.7%, followed by Infosys. So IT names still topping in that list, and you have Bharti Airtel, Bajaj Finserv also doing fairly well. So Bajaj Twins, in fact both Bajaj Twins doing fairly well, Bajaj Finance as well as Bajaj Finserv. Tata Steel now losing the most ground. Tata Steel down, closes around 3% lower, followed by Power Grid, NTPC as well as SBI and Bajaj Auto. In fact, the entire auto pack also continues to be under pressure. Bajaj Auto, Eicher Motors, Maruti all seeing that downtick in that range of 1.5 to 1.8 odd percent. Let's pull up the sectoral heat map as well to see as to how sectors have done in trade today. And you have Nifty IT closing 2.7% higher. Nifty Pharma for probably starting and ending in green for 8th week in a row. We'll have to see as to how this week ends, of course. But last 7 weeks, Nifty Pharma has ended in the green, and you have Nifty Media and PSU Banks losing the most ground. Nifty Media down by about 2%, PSU Banks down by about 1.8%. So that's with regards to where the markets go. But with that, completely out of time on this edition of India Market Close. Thank you so much for watching, but do stay tuned. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi. Week.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened in today's trading session. But let's kickstart the show by taking a look at the markets first things first. And the markets, in fact, staged a late recovery today. You do have the Nifty that held near the 23,600 mark, even at close. Sensex also managed a modest, close to 60 point, about a 70 point uptick also coming in. You're looking at a volatile session, and benchmarks in fact stabilized into the close, suggesting resilience, but also a little bit of caution at those higher levels. Moving on then, let's also talk about the sectoral picture, and the breadth was weak in today's trading session. Most sectors ended in the red, with BSBs and autos leading losses as well, and IT and pharma, those are the two sectors that really stood out, holding firm, offering some little bit of support to the otherwise tepid market. Let's also move on and talk about oil prices. Oil is on the boil again. Brent above $111 a barrel. WTI close to that $108 a barrel level, as well as tensions with Iran escalate. This after US President Trump sharpens the warning, saying that the clock is ticking on a deal to reopen the Strait of Hormuz. And we'll talk about that as well in just a bit. But before we do that, elevated crude prices on rising supply also dragged Indian oil marketing stocks lower. But overall, you're looking at $111 thereabout when it comes to Brent. Moving on, then let's also talk about ICICI Prudential Life, that is also all set to acquire a majority stake in Bharti Life, which will require it to cut its holding in ICICI Prudential Life due to regulatory norms. Meanwhile, ICICI Bank has indicated that it will retain majority control in the life insurance venture. And on to something like an Amber Enterprises now, that posted a steady set of numbers in the fourth quarter. When you talk about the stock as well, about a 15.5% downtick coming in. You do have the consumer durables business that led the beat, helping margins improve even as the electronics division really remained a little bit under pressure. And that seems to have weighed on the stock as well, as you can very clearly see on your screens. Now, the management also struck a little bit of a cautious note on the financial year 27 guidance, another trigger coming in for the stock, which comes in below street expectations when you talk about this particular guidance as well. And this is despite strong growth targets for the electronics and Sidwall businesses. And on to something like a skipper that secured fresh transmission and distribution orders worth about 1,200 crore rupees across domestic and international markets. Now, the win includes high voltage line projects in India, along with tower and monopole supply orders for Latin American markets, strengthening the company's order book and overseas presence. On to Arti Drugs, that reported a mixed set of numbers in the fourth quarter. The stock, of course, was not doing all that much, but you're looking at a strong sequential recovery, but softer year-on-year profitability. Now, growth, when you talk about that, it's supported really by higher production at the Sayakha facility and improving demand, while margins remain under pressure from the API pricing weakness, and coupled with that, elevated raw material and logistic costs and startup losses coming in from the new plants as well. In terms of the outlook coming in from the management, they're talking about how pricing trends seem to have begun to stabilize since September last year. Moving on then, let's talk about Gland Pharma that delivered a strong set of numbers. Look at that 15.5% uptick also coming in when you talk about this particular counter, on the back of a robust US demand, new product launches, higher CDMO contribution as well, and you're looking at margin expansion, and a sharp one at that, as operating leverage and a favorable product mix supported profitability. The company also signaled a steady turnaround in the Sensex business and maintained a healthy growth outlook when it comes to the next 3 years. On to Tata Steel, that slumped despite a strong fourth quarter set of numbers, as the company really flagged continued uncertainty around global costs and overseas operations, something that weighed on the stock as well, with that 3% downtick coming in. And the company really reported record India deliveries, though better steel realizations, stronger margins also something that you're looking at, while losses in the UK narrow and the Netherlands business turns EBITDA positive. Now, investors remain cautious over global demand as well as regulatory concerns. Moving on then, let's talk about brokerages in terms of the verdict coming in on Tata Steel. And they remain divided. Goldman Sachs is maintaining a neutral stance with a target price of close to 218 rupees, flagging uncertainty around the Netherlands business. Morgan Stanley staying overweight with a target close to 200 rupees, citing strong results and a supportive outlook. Now, when you talk about the word coming in from Citi as well, they're maintaining a sell rating with a target price of 200 rupees, warning of potential cost pressures and limited upside. On to Symphony then, that was also trading under pressure after the company takes a one-time hit on its overseas business. Now, the company's booked an impairment on its Australia unit as part of a balance sheet reset, while the move results in a sharp write-down of its entire investment. Management is also saying that no further impairments are expected going forward, though the stock was trading with a little bit of pressure, 7.5% downtick coming in on this one. On to Afcon's Infra, that also faced a setback with 2 overseas project cancellations, and look at that 5.6% downtick coming in. When you talk about the stock as well, and the company has lost 2 motorway tenders in Croatia, together worth around 4,500 crore rupees, which were awarded last year. Now, the cancellations could really weigh when it comes to the near-term order visibility and execution pipeline. On to Alembic Pharma, that reported a mixed set of numbers in the fourth quarter, with margins under pressure but profit growth remaining strong. Now, the India business saw steady growth coming in, led by key therapies, while the US formulation segment posted a little bit of healthy traction also coming in with new launches. When you talk about the company, it's also stepping up its presence in the US branded space, marking a strategic shift towards specialty products. The stock was trading with a little bit of pressure, 7.6% downtick coming in on this counter as well. Let's also move on and talk about delivery, and there you had a strong set of numbers coming in that really failed to cheer the street though. But when you talk about the earnings fine print, about a robust growth and improving margins is something that you're seeing there. Now, the performance is led by a sharp pickup when it comes to express parcel volumes and steady traction in the part truckload business. Margins expand on operating leverage, but higher integration costs keep profit growth muted. The company also turns free cash flow positive, signaling improving financial strength. On to Coal India next, that moves a step closer to listing its subsidiary Mahanadi Coalfields, and the government has cleared the proposal under the alternative mechanism route, allowing stake dilution. The company may divest part of its holding through an offer for sale, while MCL could also raise fresh capital. The overall dilution, however, is likely to be capped at a quarter stake. On to Zydus Wellness now, that reported a strong top line, but margins came under pressure in the fourth quarter, 1.3% thereabout downtick coming in, 1.5% downtick coming in on this particular counter. But when you talk about the growth, that was largely driven by robust demand, even as higher costs weighed on profitability. Net profit, however, sees a healthy uptick supported up by operational strength and lower base. The company has also announced a final dividend to the tune of about 1.2 rupees per share for shareholders. Moving on then, the government tightens curbs on silver imports to rein in the rising import bill. Imports of key silver categories are now shifted to the restricted list, covering a bulk of inflows. Importers will need licenses going ahead as part of its efforts to curb non-essential imports and support the rupee. Now, the move follows a recent hike in import duties on precious metals, and when you talk about the word coming in from the experts, they're saying that it may not really cause much of an impact, at least at this point in time. Moving on then, let's talk about China's growth story that is losing a little bit of steam. April data shows a clear slowdown, industrial output cooling, retail sales slipping to multi-year lows as weak domestic demand weighs heavily. At the same time, rising energy costs linked to the Iran conflict. That's something that you're looking at, adding fresh pressure on the economy, while exports have held up and the fuel price controls have offered a little bit of cushion. Input costs are climbing still, squeezing factory margins and threatening consumption. Bottom line really is that China is managing the shock, at least for now, but if global tensions persist, the recovery could really face deeper cracks. Moving on then, let's talk about a tentative reset in US-China trade ties. China is committed to buying at least $17 billion worth of US agricultural goods annually over the next 3 years, marking a significant step after last year's tariff-driven collapse in trade. US farm exports to China had plunged sharply as Beijing diversified away from American supplies and reduced reliance on key commodities like soybeans. And that's agri-commodities that you're talking about. Now, alongside fresh purchase commitments, China is also moving to resume imports of US beef and poultry, signaling a broader effort to stabilize agricultural trade. Moving on then, let's talk about IKEA that is tightening its cost as demand weakens. The global furniture giant, in fact, is planning to cut close to 850 jobs as falling consumer spending and higher input costs start to bite. The pressure is coming from multiple fronts. So you're looking at rising sourcing costs making it to that list, add to that US tariffs, softer footfall across large format stores, and in response, IKEA shifting strategy, moving away from big suburban warehouses towards smaller city center formats to attract shoppers back. Moving on then, let's talk about Russia's attempt to monetize a key seized asset that has hit a roadblock at this point in time. The government failed to auction its stake in a gold miner with no bidders showing interest in the sale. This was a majority stake taken over the last year after a court-ordered seizure from a private owner, part of a broader wave of nationalizations. But the lack of investor appetite, that's really raised fresh questions around pricing, risk perception, but also investability of state-controlled assets. The bottom line here really is that Russia's asset sales push is facing resistance and investor caution is clearly visible. Moving on now, let's talk about SEBI that is sharpening its focus on the risks coming in from artificial intelligence, but not in the way that you might expect it really. Now, you do have a chairman who's talking about this, saying that the biggest concern around AI tools is not trading manipulation, it's cybersecurity. Financial markets today run heavily on software systems, and any vulnerability can really open the door to cyber attacks, with potentially serious implications also meant there for market integrity. Now, the regulator is also pushing for stronger safeguards, ensuring all software, including third-party systems, is well protected and regularly updated. On to Samsung, then, that is in last-minute talks right now with its labor union trying to avert what could be the biggest strike in its history. More than 45,000 workers are threatening an 18-day walkout starting later this week. Now, this is raising fears of disruption to both South Korea's economy, but also global supply chains, and that's also something that you're looking at. The timing could not be worse, really, and the strike threat comes amid a global shortage of memory chips critical for AI data centers, smartphones, and laptops. That shortage has already pushed profits higher for Samsung and its peers, but it also means any disruption could really ripple across the tech ecosystem. Moving on then, let's get you some national news. Congress leader V.D. Satheesan has taken oath as the Chief Minister of Kerala, marking the return of the UDF government to power in the state. The swearing-in ceremony was held close to 10 a.m. at the Central Stadium in Thiruvananthapuram, where the governor administered the oath to Satheesan along with his full cabinet as well. Now, the new ministry features 11 Congress ministers and key allies from the IUML and other coalition partners, reflecting the broad alliance structure of the UDF. Top Congress leadership, including Mallikarjun Kharge and Rahul Gandhi, were present at the ceremony, underlining the political significance of this particular win. And this is a transition that you're talking about that also ends a decade of left rule in Kerala, with the UDF now taking charge after a decisive electoral mandate. Moving on then to panic at Bihar's Sasaram railway station this morning after a passenger train bound for Patna caught fire. The blaze broke out in one of the coaches while the train was stationed on the platform shortly before departure, with visuals showing thick smoke billowing out. Passengers, in fact, rushed off the platform as railway staff and firefighters moved quickly to contain the flames. Initial reports suggest a possible short circuit may have triggered the fire, but an investigation right now is underway. Importantly, no casualties have luckily been reported, but one coach was completely gutted in the blaze. Moving on then, let's talk about PM Modi, who's landed in Oslo for a key two-day visit focused on strengthening India-Norway ties. He'll be holding bilateral talks with the Norwegian Prime Minister, with discussions centered on trade, technology, investment cooperation, and you're talking about a historic trip really. Modi's first visit to Norway and the first by an Indian Prime Minister to the country in 43 years. During the visit, PM is going to be meeting the King and Queen as well, while reviewing the progress when it comes to bilateral relations and exploring new areas of partnership. Now, when you talk about this particular visit, it's coming in amid a broader push to deepen economic and strategic engagement with Nordic countries. Moving on then, let's talk about Delhi Chief Minister Rekha Gupta, who's taken a metro ride to kick off the government's Metro Monday campaign aimed at promoting public transport and conserving fuel relief from Kashmir Gate to ITO, along with ministers and officials. And the Chief Minister led by example, urging citizens to switch to public transport in their daily lives. The initiative follows PM Modi's appeal for austerity, fuel conservation amid global tensions, particularly in West Asia. Now, Gupta's also stressed that greater use of metro and buses can really help tackle Delhi's pollution and traffic congestion, with the government promising better connectivity and convenience. The push now is to make public transport a daily habit really for Delhi residents. And moving on then, a family's grief turning into a fight for answers in Bhopal. Relatives of 33-year-old Twisha Sharma have taken their protest to the Chief Minister's residence, demanding a fresh post-mortem at AIIMS Delhi and alleging foul play in her death. Twisha was found dead at her marital home on May 12th, and a special investigation team has now been set up to probe allegations of dowry harassment against her husband and mother-in-law. But the family says questions remain unanswered. They've refused to perform last rites, insisting the truth must come first. Moving on then, let's talk about international news then. Trump says that the clock is ticking, warning Iran to move fast on a peace deal or face consequences. Iran is not backing down. Its military now warning any fresh attack is going to be triggering unexpected strikes on US bases in the region. At the same time, tensions are spilling over. Saudi Arabia has intercepted 3 drones, while in the UAE, a drone strike triggered a fire near the Baraka nuclear plant with no radiation impact really reported. But Iran is raising the stakes in the Strait of Hormuz, preparing a system to control shipping and potentially charge transit fees. Now, the bottom line here really is that you're looking at a fragile ceasefire that is holding, but the risk of escalation is really staring back at you and building. Moving on then, an emotional night at Camp Nou as Robert Lewandowski is moved to tears after his final appearance for Barcelona. The departing striker receives a guard of honor from his teammates and staff, bringing a memorable chapter to a close. The Polish striker was given a standing ovation when he was substituted in the second half against Betis before addressing the crowd on the pitch after the game. Moving on then, Chelsea have appointed Xabi Alonso as their new manager on a 4-year deal, handing the Spaniard the task of reviving the club's fortunes. The appointment comes after Chelsea's FA Cup final defeat to Manchester City and a disappointing Premier League campaign. With no European football next season, Alonso now faces the challenge of rebuilding the Blues and restoring their winning identity. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Markets kick off the week on a flat note. Benchmarks witness sharp sell-off with Nifty ending below 23,700 level. Broader markets underperform as volatility rises and most sectors end in the red. Rupee continues its downward spiral north of 96 rupees to a dollar, hitting another record low at 96 rupees 39 against the dollar. Recovers a bit to close at 96.36. Oil prices escalate above $100 a barrel as Trump warns clock is ticking and pressures Iran on a peace deal, escalating tensions in the Middle East war. India tightens silver imports amid dwindling rupee with immediate effect. High purity silver bars now shift from free to restricted import category. Move comes just days after government raised the import duty on silver and gold from 6% to 15%. SEBI Chairman Tuhin Kanta Pandey warns cyber threats linked to AI tools could really pose serious risks to market integrity. Pushes for stronger safeguards to improve cyber security. In a big development in insurance sector, British insurer Prudential PLC to acquire 75% stake in Arti Life for 3,500 crore rupees. ICICI Bank to hold majority stake in ICICI Prudential post Bharti Life insurance deal. Kerala gets a new chief minister. Senior Congress leader V.D. Satheesan, sworn in as the chief minister today, marks the return of the UDF to power after nearly a decade. Prime Minister Narendra Modi arrives in Norway as part of his 5-nation diplomatic tour. Trade, energy and strategic ties are on the agenda. This marks the first visit by any Indian Prime Minister to Norway in 43 years. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the important news developments of the day, and starting with the Indian markets. Well, bearish sentiment really tightened its bear grip today as the benchmark saw intense sell-off right at the start of the week and started on a weakish note. So the broader markets, they underperformed the benchmarks as well, marking a significant amount of profit booking in the mid and small cap universe. Amidst the high volatility, remember the Nifty managed to close above 23,600 level while Sensex held tight near 75,200 odd levels. In fact, my colleague Jasmeet is standing by with a full action report on the equity markets. Tell us, Jasmeet.
Well, a flattish day for markets today. Nifty 50 ends flat with a positive bias. If you look at the top gainers of Nifty 50, we have stocks like Tech Mahindra Infosys gaining the most, up about 2% in terms of top losers in Nifty 50. We have stocks like Power Grid and Tata Steel both losing over 3%. If you look at the broader market, it underperforms the benchmark, while Nifty Small Cap 250 and Mid Cap 150 both down about 0.1% and losing in today's trade, ending in red. In terms of top losers, we have SJVN and Uno Minda losing the most in mid cap 150, down about 5%, while in terms of small cap 250, we have stocks like Jain Resources and Amber Enterprise losing the most. In terms of the key sectoral trends, all the sectors end on a mixed note, while Nifty IT emerges as a top gaining sector and gains about 2.4%, while Persistent and Coforge both are the top gainers in Nifty IT, gaining about 5%, while in terms of the worst performing sector, we have Nifty PSU Bank down about 1.98%. In terms of the stocks that did not perform well in Nifty PSU Bank, we have stocks like Bank of India and PNB both losing about 2.5%. Now, if you look at the key trends, while Nifty IT gains for the second consecutive session, while Nifty Pharma extends its gain for the fourth straight session. While if you look at Nifty FMCG, Nifty Auto, they snapped the 2 days of gaining streak, while Nifty Energy, Realty and PSU Bank declined for the second consecutive day in a row.
All right, Jasmeet, thank you so much for all those details. But despite the Dalal Street adding on to the weakness of global indices, well, the market expert Sandeep Tandon believes that India stands to benefit if foreign stock markets see a sharp correction. He told NDTV Profit that the easy phase of the global bull run is now behind us and the coming decade belongs to active money managers. Listen in.
We are in structured bull run as far as yields is concerned, inflation and yields. And this structured bull run can last till end of this decade, So which means maybe you can get cyclical corrections here and there, but broad trend is up globally, okay? And developed market yields will spike more than the emerging market in the years to come. So that's the background which we are mentally prepared. And second thing, we have said that geopolitical volatility will remain elevated maybe till 2032-33. So you are living in a high volatile geopolitical environment and you have to live with that. You can't say that, okay, now things will settle down, then I will participate. If it's the period, this is a period of like 10 to 15 years. If you're looking at this period, which started from the end of 2019 and still going on, then you can't say that I'll stop investment, I'll come after that, let the settle down. So I think you have to find opportunity within this sort of chaos.
All right, rupee today slipped to another all-time record low at 96 rupees 39 paise against the US dollar, and it closed at 96.36. This shows that it's been continuing its downward spiral north of 96 levels, which is a worrying level. Elevated crude oil prices, global uncertainty and a stronger dollar really continue to remain the key risks for the domestic currency. Now, this weakness in rupee really comes in the backdrop of higher oil prices as Trump warns serious escalation if Iran doesn't concede soon. Now, his pressurizing rhetoric of the clock is ticking has really shot up crude oil prices above $100 a barrel once again. However, in an interesting comment made to NDTV Profit, economist Andrew Freris said that the Strait of Hormuz will become irrelevant in about a year, but at the same time, he also cautioned that if oil prices remain elevated, the US Federal Reserve will not be able to cut interest rates. Listen in.
Oil prices are not going to come down anytime soon.